Good morning and welcome to Traders Corner Stock and Options Special Event. My name is Anthony Chapman and it's a privilege to be your host today. Settle in and get ready to hear some of the greatest trading minds in the trading industry. With an upcoming presidential election, the ongoing Israel-Hamas conflict, spikes in volatility, and possible interest rate cuts on the horizon, the second half of 2024 continues to deliver some very interesting trading opportunities. On our panel today, we have handpicked the industry's top stock and options trading experts to join us today. They have agreed to share their most consistent and profitable trading strategies with us in a free online educational forum. Today's show is packed with great information and discounted special offers, so let's get started. Our first presenter is a research associate at bigtrends.com, which provides investors with specific, real-time stock and option strategies and investment education. Big Trends has been featured on CNBC, Fox News, Bloomberg Television, and a variety of other outlets, including the Wall Street Journal, Barron's, Forbes, Investors Business Daily, USA Today, to name a few. Ladies and gentlemen, here to present how to trade same-week options in 48 hours or less is Mr. Dylan Pittman of Big Trends. Welcome to Traders Corner, Dylan.
Thank you, Anthony. Thank you for the introduction. On behalf of Big Trends, very excited to be here today doing this presentation, talking about, well, really what's going to become one of the most popular trading vehicles, trading same-week expiration options that we've been seeing just over the last several years. So as Anthony said, I am a research associate, also analyst at Big Trends. I work side by side with our founder and CEO, Price Headley. He's been trading for well over 30 years now. He's been featured on, like Anthony said, CNBC, Fox Business, Barron's, various other news outlets. So it's been an honor to work with him side by side. But myself, been trading for several years, actually just coming up on a decade now. I'm a graduate from the University of Kentucky. As I've said, an analyst at Big Trends, digging into a lot of just back-tested research, looking at what works in the market, looking at what has a historical edge in the market. And today, I do think we have a lot of education to break down, actually starting things off with what I would almost call a misconception that some of these textbooks may even talk about, using a very fundamental technical analysis tool, talking about the RSI indicator. So like I said, we have a lot to go through today. If you have questions, that chat box is there on the side. I'll be peeking at that throughout today's presentation for any questions that come up, or you can always reach out to me at that email address below, dylan@bigtrends.com. So we're going to go ahead and get started here, but as a reminder, the information provided in today's presentation is based on our proprietary research and is intended for illustrative purposes only, should not be construed as specific advisory recommendations. Stocks and options trading have large potential rewards, but also large potential risk. The past performance of any trading system or methodology is not necessarily indicative of future results. See our terms of use on the bigtrends.com homepage for more information. So we're going to be talking today, really looking at two different indicators, but the most common indicator that I see in technical analysis is the RSI indicator. Now, like I said, we're going to do some myth busting is what I almost like to call it, but just a common misconception of the RSI indicator. So we're actually going to pull up some back-tested research on if you sold short. So if you were to sell short shares whenever RSI is overbought. Okay, so a lot of traders, whenever they start digging into the books, reading different technical analysis techniques, you hear the term overbought and you think, well, the stock can't keep going up. Maybe it's time to sell shares. Maybe it's time to put on a short position. We can see here on the equity curve that over 10 years of data, I'll actually change this to a black pen real quick. We can see over 10 years of data that this has been historically a losing strategy. Now, of course, past performance is no guarantee of future results, but really what this is going to represent and what this is going to tie into this presentation is what we don't want to do is short something that is trending. In fact, whenever we see the term overbought, well, we know that there is a strong amount of momentum coming into that individual security. Now, again, we are looking at Apple going back 10 years from 2013 until actually August of 2023. But we can see that, if you had simply just bought, okay, if you had just, rode that trend, we're not looking to swim against the current, right? If you had just simply rode where that strong momentum was, well, it's historically been a profitable strategy. Again, past performance is no guarantee of future results, but that's really what we're going to be diving into today. We're not looking to fade these monster moves. We're not looking to fade where that momentum is. In fact, that's exactly what we're looking for. We're looking to get on the back of those whales and catch these short-term trends trading same week options. So today we're going to be talking about different tactics for trading these same week options. We're going to be talking about the best days to trade these options where we can increase the leverage, but at the same time, make sure that we are still managing risk. Okay, there are specific days that work best for the strategy, and trading same week options does come with a decreased cost because, of course, the theta value is going to actually start to come out of those option premiums the closer we get to expiration, making the contract prices for this strategy hovering just about $1.50 a contract on average. We're going to be talking about double confirmation. Now, we looked at RSI just a couple moments ago, but we like to use double confirmation in all of our strategies at Big Trends just through back testing and the research. We want to make sure that we're avoiding these fake out signals. So we're going to be adding a second oscillator to confirm that there is strong momentum to both the upside and the downside. We're also going to be talking about a favorable risk reward ratio. We're actually using a 50% stop and a 100% target on every single one of these trades. So we have a lot to go through today, so stick with me here. We're going to break down a lot of this, but first, we're going to talk about a recent winning trade on Coca-Cola. So we're looking at daily charts. All of this is going to be based on daily charts, and we are using daily charts because we want to make sure we eliminate as much of that intraday noise as possible. Whenever you think about a 5-minute time frame or a 15-minute time frame, you're not getting a large amount of sample. Of course, if we're looking at a 5-minute chart, we're looking at 5 minutes of price action. If we really step back, look at a daily chart, well, it's expanding our sample size. It's giving us, less of an opportunity to fall into those fake out opportunities. So we have two indicators here on the bottom. You'll notice that we're not using moving averages. We're not using any price action indicators. We're actually just going to be looking at the RSI. Again, we've already covered this. And the percent R. So percent R was developed by Wells Wilder. We're not going to talk too deep about percent R, but these are going to be two similar oscillators, but they're not calculated the same way. So these two indicators use entirely different formulas to get to a point where they are going to illustrate where momentum is. Remember at the beginning of this presentation, if we hear the term overbought, it doesn't mean that it can't keep going up, right? In fact, that is whenever we want to ride that momentum. Again, looking at daily charts, finding these short-term trends. So whenever we see both RSI breaking above 70, whenever we see percent R breaking above 80, simultaneously, that's whenever we're starting to pick up that a lot of momentum is coming into the markets. Now, if we look left, okay, so let's look at these candles right here. Now, this strategy is going to be inverse to the downside if we're trading puts, but if we look left, you'll notice right here. Notice how RSI is not into that oversold threshold, but notice how percent R is. Okay, well, that's not double confirms. Okay, percent R is quick to act. RSI is not confirming that signal for us that there is still that downtrend momentum. Well, what happens? Really just sideways chop. Okay, not anything drastic to the downside. Really just sideways action, and that shows why we want to have double confirmation from two entirely different indicators to give us the signal to put on a trade. Now we can see here, this is an actual trade that was sent to subscribers using our RSI and percent R double confirmation, that Coca-Cola is starting to show that bullish momentum, that buyers are now controlling the markets, and it led to the entry of the 65 calls. Okay, so these 65 calls are actually going to be just slightly in the money. These calls were slightly in the money, and we're trading same week expiration options. Okay, so this trade was put on a Wednesday afternoon and was closed Thursday. But what you'll notice here on Coca-Cola is, the closing price right there, we'll call it 66. It may have moved just over a point the next day. Okay, so that's not a large move. Think about the markets today. Okay, so this was give or take about a 1.5% move on Coca-Cola. Think about the markets today. How many names, how many stocks have moved plus or minus a 1.5%? Okay, well, it's hundreds, if not thousands of names have already done that. Okay, so these moves happen all the time. These are ordinary moves, but whenever we leverage them with same week options, it can make these ordinary or small moves, insignificant moves, come out to be large winners. Of course, this Coca-Cola trade, those 65 calls were booked the following day for 100% or booking $950 in profits. And we will say that all profit calculations we're looking at today are based on up to but not exceeding $1,000 per trade. So we're going to talk about exactly why we're putting on the trades on what days, but we're also going to be talking about how we're getting this leverage from these insignificant moves. So whenever we are looking at the days to trade this strategy, we really want to take trades on Wednesdays and Thursdays. As the week progresses, leverage increases. That's going to be due to the option Greek called gamma. But as the week progresses, especially on Fridays, volatility is increasing as well. So trading on a Monday, there's going to be less gamma in those option premiums built into the actual option chain. So Monday is going to lack the leverage for this type of strategy. It's going to take a little bit of a bigger move to hit those 100% targets. But if we wait too late in the week, if we traded on a Friday, there's going to be plenty of leverage. In fact, the most leverage, but at the same time, plenty of volatility. So you may like the sound of plenty of leverage. The problem is if there's plenty of volatility, you may fall into a trap of getting those quick stop outs, not giving time for the system to work out, and a quick stop out may prevent you from hitting that profit target. So Wednesdays and Thursdays are our preferred days for same week trades. We want to find that that sweet spot, that best of both worlds for both leverage and volatility, where we can still take advantage of these trades that are being presented on the daily chart, looking for those strong momentum signals using both RSI and %R. So like I said, this leverage comes from the option Greek gamma. So if you don't know what gamma is simply just the rate of change in an option's delta per 1 point move in the underlying asset's price. Now, if that sounds confusing, really the way that I like to describe gamma and the way that it's really used in the world is, we want to make sure that we're getting paid for the move. Okay, if you've ever been in a trade where you get the direction right, let's say your timing was right and the direction was right, and you notice that you're not really getting paid for that trade. Okay, maybe you thought you would have made 200 or 300%, but you ended up coming with 50%. Okay, well, we want to make sure that we're finding the correct options. We want to choose the correct options that will pay us for the strategy that we're looking to apply to the markets. So we are trading, at the most part, some at the money to slightly in the money options. I think this is a great chart from CME Group, but we're looking for those spots that have the highest gamma. Those are going to be the at the money options, really just a strike or two that are in the money or a strike out of the money. So those are going to be where those gamma is going to be at its highest, where we don't need any major moves. We don't need anything, any major catalyst to be able to hit 100% targets on each trade. Okay, like I said, each trade we put out, we are targeting 100% on those trades. So what happens whenever we combine all of the trades taken since inception? So looking back from 2020 until today, all right, August 15th, and from 2020 until today, we have seen a variety of markets. We've seen, of course, bullish markets. We've seen bearish markets. We've seen what I've even heard as kangaroo markets, those very volatile times up and down. Throughout all of these conditions, our strategy, what we're talking about today, Lightning Options Trader, up just over 404 1/3%. That took a $5,000 account to just over $25,000, so over $20,000 in profits based on taking all winning and losing trades. And like I said, what we're using throughout today's presentation is allocating up to but not exceeding $1,000 per trade. Now, of course, past performance is no guarantee of future results, but we're going to be looking at a lot of these trades that have been taken recently. And again, these trades are taken based on momentum indicators. We want to use oscillators that are similar, but not the same. These oscillators, two completely different calculations to get to the same end result. We want to see both indicators telling us that there is strong momentum, whether to the upside or to the downside. So whenever we use double confirmation, it gives us double the confidence in our trades. So it's time to talk about these trades. We're going to look at a few of the recent put examples. Of course, we've seen the market, at least until the beginning of this week, we've seen that downtrend start. We saw that pullback there in the S&P there at about the beginning of July. So here's a recent trade on JD. Again, a daily chart here. Nothing substantial happening here in the daily chart. We can see a little bit of a pullback there from about 31 to about 28, give or take a 10% pullback on this, for the most part, a pretty volatile ticker. But what are we seeing? Remember, we started the example off with a recent trade on Coke. We wanted to see a simultaneous breakdown. We want to see simultaneous moves into these momentum thresholds. You're going to notice that I stopped calling them overbought and oversold just because of the connotation that those have. I'm going to be calling these levels our momentum thresholds. Now, I will mention that the settings for RSI and %R that we're using are not normal. So I will share at the end of this presentation how you can get access to the settings we're using, but we are looking for breakdowns under 30 for RSI and a breakdown below 20 on our %R indicator. It has to happen on the same bar. We want to see a fresh breakdown, okay? A fresh breakdown. We don't want to see something that has continued to trade into these momentum thresholds. We want to see a simultaneous fresh breakdown into those momentum thresholds. So we saw it appear here on JD. Now, this trade was taken on a Thursday. Of course, today is Thursday, meaning that a new trade could be signaling this afternoon for our Lightning Options Trader alert service. We're trading the 29 puts, again, like we looked at that gamma graph, just slightly in the money. We're looking for that gamma boost so that we get paid on these moves whenever they may not even be that dramatic. Like we saw here, JD falls, give or take, about 50 cents to the downside. Well, that's all it took. Okay, that's all it took to actually hit a target that was larger than our 100% target. This trade was closed out for just under 114 1/3%. This trade alone, allocating 1,000 per trade, booking $1,088 in profits overnight, just right before the weekend. I don't know about you all, but as a trader, I really enjoy booking profits just to end my week. So this is a strategy that is putting on trades on Wednesdays and Thursdays. And, if we're still in the trade come Friday, mid-morning, that's whenever we'll be looking to close these down. So here's another example on Valero where we catch another move to the downside. So I want to highlight this again. Remember, we need to see a simultaneous breakdown. Well, what's not confirming down here, or I should say up here, the RSI, my apologies for the handwriting, the RSI indicator is not breaking down below our momentum threshold, right there below 30. It's not doing it. However, %R is. RSI with a little bit more of a lag here, and we can see that it happened on this candle. Now, maybe a little bit of action to the downside. We don't know if that would have hit 100%, but definitely not anything drastic. Okay, now this move on Valero, we definitely see the sellers showing their true colors, really getting out of the position or continuing to push buyers lower. Okay, sellers really showing up here on this for a fairly decent sell-off there on Valero, and that's whenever we actually saw the true signal where we got a simultaneous fresh breakdown into our bearish momentum threshold. That led to the entry of, again, some in the money 157.5 puts. And the next day, of course, that gap down move on Valero hit that 100% target rather quickly off the open. That trade booked $930 in profits in just 24 hours. Now, we've looked at two put examples, but we have seen, of course, winners to the upside like that bullish trade on Coke, but also this winner on General Motors that hit its 100% target just last month in July. So it's the same concept, okay? It's the exact same concept. We want to see both indicators confirming that there's a strong trend, there's a strong buyer presence here. Okay, we can actually see General Motors, starting to break out of some trend line resistance there over the last couple of weeks. In fact, making looks like 2-week highs on General Motors. So, just in general, we can see that buyers are finding value down there around $47. Okay, well, that whenever we see these indicators lining up again, two entirely separate indicators lining up, telling us that's the entry of the 47.5 calls. Well, we get a nice pop there, about a 2% move to the upside on General Motors. Again, 2% moves. Think about the market today, all right? Hundreds, if not thousands, of stocks have made that type of move today. Those General Motor 47.5 calls booked at another winner, 100% on the Lightning Option Trader Alert Service, or $969 in profits. So a couple examples here. Notice what's late to the party. Okay, notice that the RSI is not confirming here a signal. Notice right here. Okay, RSI again, still not buying. That buyers are stepping into that, what we're calling the momentum threshold. Okay, so that signal and that signal, neither one of them are proper signals because we need simultaneous. All right, they both need to have a fresh breakout above those momentum thresholds. Okay, so this would not have been a signal, that's a fake out. If we are just simply relying on one indicator, if we were just looking at %R, that's a fake out. This one right here, also a fake out. Okay, we want to see it happening on both indicators at the same time. We could continue, we could look at a lot of these charts. You could probably pick up on these next several examples where there's a lot of these opportunities for fake outs. Again, this one is a trade to the downside, not at all, a signal. Again, another fake out there. That's a common thing that I've seen with traders. I've talked to a lot of traders over my several years of big trends, and a lot of traders want to focus on just one indicator. Well, in my time as a research analyst, working with big trends, working with Price Headley, from what I've experienced, using two indicators, not just to tell you the direction, but also the timing, is really what has shown the largest edge historically. So that's what we're always focusing on, is using two different indicators to get us both the direction and the timing correct whenever we're putting on these trades. So we've looked at both calls and puts, and really, that's what makes the strategy exciting. Whenever you think about the markets, we don't know really what's going to happen in a month. We don't know what's going to happen in 12 months. We don't know what's going to happen in 5 years. Okay, the market could be bullish, the market could be bearish. At the end of the day, for this strategy, it doesn't matter. We're only in these trades for a day or two, and we're looking at those daily time frames. And really, regardless of market conditions, we can trade both to the upside and to the downside with calls and puts. And we can see on this next trade, this is a DocuSign example where we caught some bearish momentum. So here on DocuSign, we can see that we have our RSI getting a fresh breakdown, all right, not lagging here. It's moving at the same speed as %R in this case, where we get those fresh breakdowns into those bearish momentum thresholds. All right, below 30, below 20. We're seeing it set up again simultaneously. Well, notice that this trade, okay, we're trading the 58 puts. These are going to actually be right at the money options. Notice that this trade the very next day after entry actually goes against us. Okay, it moves about, give or take, about 1% against us there to the upside. Well, choosing the right option is as important as the strategy, in my opinion. Okay, risk management, of course, is always very important, and that is going to go along with the option selection. Let's say, for instance, that we were trading, let's say we were trading, fairly out of the money. Let's say we're trading the 57.5 strike. Okay, there's a chance, since there is no intrinsic value built into the 57.5 strike, that move against you could have led to a premature stop out. Okay, now imagine the psychology. If you had taken a premature stop out, but you had eventually been right. Okay, now the timing may not have been perfect. The timing, I guess, to be perfect would have been to start buying puts at the open, but choosing the correct option, these at the money to slightly in the money options, can save us from any of these premature stop outs. We want to give the system that, of course, has been back tested and has shown a historical edge. We want to give the system a chance to, of course, give us the opportunity to make a profit. Okay, so option selection is very important. All subscribers of Lightning Options Trader would actually have a PDF document to download that would explain our option selection formula that we use for each one of these trades. So choosing this at the money, and of course, a lot of these trades have been a little bit more in the money, does preserve us from taking those premature stop outs and allows the system a chance to work for us. Now, DocuSign, of course, worked for us. After that open, we saw some selling there into the close. We ended up seeing DocuSign take out at previous day's lows. You can see sellers, of course, continuing to push price lower, and sellers and sellers working in that overnight action. In the Asia, Euro markets, we can see sellers continuing to push price lower, where DocuSign ended up gapping down overnight, where right there off the open, we ended up hitting that 100% target, all because of these oscillators. All right, both of these oscillators confirming that downside momentum and pairing it with the correct option strike saved us from taking any of those premature stops. This trade booking 100% on the trade, or $966 in profits. Now, we've talked a lot about these winners. Okay, everybody loves to look at the winners, but of course there are going to be losers as well. Like I said, the stop level is 50%. We're going to look at a full stop out. In fact, a little bit of larger loss on the system, but we're traders. We know that losses will happen, but strategically structuring our risk reward, right? Risking 50% to make 100% is what is shown. That's really what has led to Lightning Options Trader being profitable since 2020. So this is a full stop out on Walmart. You're going to notice that this is the exact same setup every single time, and it should be. At big trends, we're systematic. We need to see the exact criteria or parameters firing off every single time for a true trade signal. We want to find consistency in our system so that we can find consistency in our trading. Well, here on Walmart, of course, it didn't work out. We saw that both indicators, breaking into those bullish momentum thresholds led to the entry of the 165 calls. Well, we did get a gap up that very next day, of course, selling off there. Throughout that intraday action, ended up going against us, ended up taking a loss there of 52%. Okay, it's not what we want, right? It's not at all what we wanted, but it will happen. Okay, we want to make sure that we give ourselves the opportunity to continue to trade the next day, and taking these 50% stops is what preserves that capital, and what I would even call preserving our mental capital. Okay, these stops, again, it's not what we want, but the opportunity to hit 100% and beyond on any one trade is what has kept this strategy moving in the right direction since 2020. But not all trades that hit, not all winning trades, I should say, will hit the 100% target. Not all trades will hit that stop either. Okay, there are going to be some of those in between trades. This is a recent winning trade on target that was closed with a time stop. So the reason why we're using a time stop, again, we're trading same week expiration options, meaning that come Friday, especially because these options are typically in the money, we want to remove the chance for assignment. Okay, we want to take away that assignment risk. So, I said this at the beginning of the presentation, but come mid-morning, at the latest about lunchtime on the East Coast, we'll be looking to close down these trades for wherever those option premiums are at. So, we don't want to get this assignment risk. We don't want that extra volatility that comes in, especially in the final few hours of Friday afternoons. So here on target, we saw those momentum thresholds being breached. We saw that those buyers pressing that momentum higher, and it led to the entry of the target 150 calls. Again, notice in the money options. Now we're pretty much trading with intrinsic value come Friday afternoon, and the intrinsic value did not hit that 100% target. It did, however, just book 49.25% on the trade. Not what we're looking for either. Okay, it's better than a stop, it's better than a loss, but it's not what we're looking for. We're looking for those 100% targets on every trade. At the same time, we're not going to go into those chances where we could get any assignment risk happening on our position. So we'll take the 49.25%. All right, move on and look for new opportunities in the markets. This trade was just closed just about a month ago now. Now, some trades, however, can gap well beyond those 100% targets. The power of the gamma boost that comes from trading same week options, we've seen it. Some of these moves, not at all significant, 2% moves on different assets, different securities have been hitting 100%. But what happens whenever they may gap, let's say they gap 3, 4, 5% in our favor? Well, of course, they're going to be larger than 100% winners. We saw it recently on Best Buy. Again, I'm going to mention it again. We are looking for the same setup every time. So what that means is that, any one of these trades, right? Any trade has the ability to have theoretically unlimited upside potential. We see that break there above RSI. We see the break above 70 on RSI. Breaking into that momentum threshold, we see the breakout there on percent R leads to the entry of the Best Buy. Again, notice in the money 79 calls. Well, the next morning, the stock is gapping up right there just above 83. So a solid move there. This is still just about a 2.5% move on the underlying asset, gapping up, and right off the open, seeing that we're gapping up. In fact, in terms of intrinsic value, this is going to be gapping above that 100% target. We ended up, we ended up sending out an alert to the subscribers to go ahead and place our target much higher than that 100% target. In fact, we were putting that target out where the intrinsic value of the option should be opening based on that pre-market move. These 79 calls were booked the very next morning, directly off the open, right at 9:30 off the bell. They're at 192 and about a third percent. Ended up being a great exit. As we can see, Best Buy ended up selling off a little bit more at the end of the day, but it didn't matter. Okay, starting the weekend off with a 192% winner, at least as a trader, that's a great feeling to have, right? Like I said, these trades, we've seen it numerous times where we can get those gaps in our favors that do produce larger winners. Here's another large winner on First Solar. Definitely what I would call an outlier trade, but it's still going to be using the system that has provided these 100% winners, 150% winners, at 190% winner on Best Buy, and still the same system that did produce that 50% stop on Walmart. Here on First Solar, we see really a breakout here above resistance. Okay, if you're a support and resistance trader, that's a great look if you're trading a breakout there. And in fact, the indicators are firing, telling us, right, that there is momentum here in the buyer's favor, and led to the entry of the 77 calls. Okay, these are just slightly in the money. Strike was slightly in the money. The next morning, now look at this move. Okay, gapping up nearly at $90. About a 13-point move on a name like First Solar. It's a major move on an energy name there. Ended up being a 407, almost 407.25% winner there just overnight, of course, going right into the weekend. Very solid winner there. Of course, like I said, this is somewhat of an outlier trade, but we have seen these winners. We've seen it numerous times in the past where these winners can exceed those 100% targets, just overnight. Okay, the power of the leverage from trading same week options does give you the ability to hit these 3, 4, and 5 baggers. So talking about the tactics we've gone over, okay, we've gone over a lot of EDU. And really something that's not even mentioned here is those common misconceptions that come from the RSI indicator. Okay, just because, we hear the name, we hear that, let's say Apple is overbought, it doesn't mean that the trend is over. In fact, it means that buyers are present. If there's anything I want you to take away from today, it's going to be that. I want you to understand that just because something is overbought, don't let that connotation of the word overbought scare you into thinking it's time to short that strong trend. In fact, it's the complete opposite. Remember, we looked at that back-tested data on 10 years of trades if you had bought versus short whenever RSI is overbought. We want to find that momentum and leverage it on Wednesdays and Thursdays with same week options. We want to use double confirmation. We looked at different times where there were fake out signals between percent R and RSI, and we want to adjust that risk reward ratio to risk 50% to make 100% on every single trade. These are some of the recent subscribers from Lightning Options Trader. This is just some of the things that they've said. Robert said, "Hi, I just started with my first Lightning CRSP, great $ profit." Stuart says up there at the top right, "Hi coach, my first trade with Big Trends was a spectacular winner. LOT, which stands for Lightning Options Trader, recommended a 155 put on PNC, and I got in at $1.25, exited at $6 the next morning. A good night at the office. Well done, Big Trends. We're off to a great start. I'm very happy." Again, that's from Stuart. Michael there at the bottom says, "Your services are top notch. Keep up the good work. Congrats on 23 years. Stuart again down there at the bottom left talking about that CRSP trade. "Great job on CRSP. I bought 8 contracts at $1.37, just exited for $4.70. My second week of LOT and my second winner. Well done. Regards, Stuart." Okay, subscribers, this is a strategy, like I said at the beginning of the presentation, quickly becoming one of the most popular strategies at Big Trends. And it's again because we're starting to see the popularity of trading closer to expiration as traders are starting to realize the leverage that comes with those types of trading vehicles. So today what we're doing, and I mentioned this at the beginning, we're giving you an opportunity to access the settings that we're using for the RSI and percent R. Like I said, they're not going to be the typical settings that you would see in a textbook. Okay, so today, giving you an opportunity to get those settings, but also these trade alerts from the same system that we've been watching, that you've been watching throughout today's presentation. In fact, a new trade could be signaling just this afternoon. Again, today's Thursday. We could put on trade this afternoon for tomorrow's expiration. So Lightning Option Trader, the retail price for 3 months of these trade alerts, okay, again, these trade alerts would just be sent to you via email. We'd get you set up for mobile notifications as well. With a few trading resources, the settings and rule sheet, that is going to break down the indicator settings. It's also going to break down that option selection formula that I talked about there for a moment. You're also going to have access to Price Headley, our founder and CEO at Big Trends, head analyst at Big Trends. He does a weekly video update. Those are posted every Monday night at 6 p.m. Eastern time, where Price recaps the trades taken from the prior week. The exact criteria, thought process, reasoning for entries and exits for every single trade. Those are sent out every Monday night in a video. Last and certainly not least, one-on-one email contact with Price, myself, and the other members of the analyst team at Big Trends via a dedicated email address. That's 24/7. Always make sure to get back to you promptly with any questions you have in regards to any trade alert or trading in general. This comes out to $891 in value. That's going to be based off of the $297 monthly retail list price times 3. Well, we've seen a lot of these trades today. We've seen, give or take, about 10 examples of different trades. I think we'd all be in agreement that at $891 for 3 months of these trades, that's a very justified price considering just what one trade could do. But today we are running a special package today for Traders Corner for today's summit event. Today, 3 months of trade alerts from Lightning Options Trader with those 3 trading resources. Again, the settings and rule sheet, the weekly video updates, and the dedicated email address, not at that retail price of $891. In fact, today it is $177. Okay, so less than the 1-month retail list price, but this is only going to be available until midnight tonight. We are offering it for $177 for 3 months of these trades. You just need to go to the link members.bigtrends.com/LOT3. Now I'm going to go ahead and drop that in the chat box now. So for those of you all who are looking for the leverage of same week options using double confirmation, you'll be able to access these trades for 3 months, meaning the subscription will go out until looks like mid-November of this year. In fact, we'll even grandfather you in at this rate if you act today before midnight. Okay, again, today being a Thursday, there is an opportunity for a trade to come out here in the next few hours. Okay, so whenever you sign up, you'll receive a welcome email, highlighting your purchase, giving you all the details to get set up for those trade notifications through a mobile app, but also a purchase receipt at this very discounted price at $177 for 3 months. And again, be on the lookout this afternoon. There could be a new trade setting up. Okay, and $177, it's an incredible value considering. Now, we've seen numerous trades, but just considering what one trade has done in less than 24 hours. This is that first trade we looked at on Coca-Cola that was closed just a couple weeks ago for that 100% winner, or $950 just overnight. Again, that's based on allocating but not exceeding $1,000 per trade, but just overnight $950, which of course would cover the cost of this subscription several times over in just 24 hours and for 3 months of these trades. One trade, of course, justifies it, but we've already talked about this performance graphic. I think it speaks for itself, but over $20,000 in profits, in all these different market conditions, bull, bear markets, kangaroo markets from 2020 until today, August 15th, just over a 404.33% return. This is based on allocating up to but not exceeding $1,000 per trade, meaning this is taking all winning and losing trades without compounding, just over $20,000 in profits. Of course, past performance is no guarantee of future results, but this strategy is using that double confirmation from both the RSI and the %R indicator. So some frequently asked questions that we get in regards to LOT or Lightning Options Trader. The strategy is buying in the money calls or puts. Remember, we want to manage risk. We want to make sure that we give the system the ability to make those moves. We don't want any premature stop outs. There's no spreads of any kind, and the average contract price, it's going to be cheap, right? The closer you get to expiration, the less extrinsic value is built into those option premiums, meaning that the average contract price for these trades is hovering just over $1 a contract. In fact, exactly $1.18 from 2020 until today. In a given month, you can see up to 8 new trades. In fact, I would actually change that to 10. We have seen up to 10 new trades in a month, but on average, 1 to 2 trades per week. And these trades are sent on Wednesdays or Thursdays in the final hour of the trading day. We send them out in the final hour of the trading day just to ensure that we can properly estimate how both the RSI and the %R indicator are going to close to make sure that it is a proper signal. You'll be in these trades max of 2 days. Remember, if we're getting in on a Wednesday, you would be out on a Friday, so that is a max of 2 days, but typically it's one trading session at a time. There's no day trades in this strategy, so if you are concerned about day trades, no need to worry. There are no day trades in the strategy. These trades are sent real time via email. We can get you set up, like I said, for mobile notifications as well. And stop loss and profit targets are given for every single trade. The trade would come out on, let's say a trade comes out today. You get the entry signal. We would say the name of the ticker. We would say what expiration. Of course, it'd be the same week. And then we would give you a recommended fill price to get in at. Well, the next day, we would send an alert out pre-market telling you where our stop and our target is, and you would be able to use the stop and target on your platform to get out of the trade. So remember, today it is not at that $891 retail price. Today it is $177 for 3 months of these trade alerts with those 3 trading resources whenever you go to the link members.bigtrends.com/LOT3. Now, last thing, we've seen what the performance has been from 2020 until today. Of course, that justifies the price of $891. But whenever you consider just what one trade could do in 24 hours, how it even makes that price justified on just what one trade could do. And we're discounting it off of that $891 price, knocking it all the way down to $177. Okay, so again, the link is members.bigtrends.com/LOT3. So thank you all for tuning in, and I'll actually pass this back over to Anthony.
Thank you, Dylan. Very exciting strategy, holding weekly options for 48 hours or less in this trading environment. That makes perfect sense. Ladies and gentlemen, if you are interested in receiving real-time stock and options strategies and education to profit from significant market trends, then Mr. Dylan Pittman of Big Trends has an exciting solution for you. And he has put his offer link in the chat box, and you can always find Dylan at www.bigtrends.com. Thanks again, Dylan. It's always a pleasure having you on Traders Corner.
Thank you, Anthony.
You're most welcome. Ladies and gentlemen, we have a great lineup today, so let's keep the ball rolling. Our next presenter is a professional stock and options trader with over 25 years of experience. A former PGA golf professional, his trading journey has spanned stocks, bonds, futures, currencies, in which commodities ultimately evolved towards a focus on options trading. He was introduced to Elliott wave analysis in 2000 and has integrated Elliott wave into his core trading methodology. He is a seasoned educator with a passion for teaching trading to others for over 2 decades, taking him around the globe, conducting seminars, and sharing his extensive knowledge. Ladies and gentlemen, here to present AI-powered Elliott wave trading is Mr. Rob Roy of Elliott Wave Options.
Thanks,
Rob,
Anthony. Hey,
You're
everybody.
most welcome.
I'm here. I appreciate it. And for those of you, thanks for viewing. And if you have heard of Elliott wave, because you can see Elliott wave on there, I feel like regardless of where you feel your level of knowledge is on Elliott wave, I'm going to show you something new and unique today, because we have taken Elliott wave and AI-ified it, if you will. So before we get into the main presentation, I'm sure you've seen a million of these before, but we have to show you ours as well. This is our disclosure disclaimer. Basically what it means is that we are not licensed as registered investment advisors in the United States. So this is to be taken as educational material. I'm sure you're familiar with them. Take a screenshot of it, read it in more detail at your leisure. So I got a lot to share with you, so I'm going to get right into the important stuff. Here's what we're going to cover. We're going to talk about real AI performance. I'll share with you what that means. And we're going to talk about Elliott wave setups and how AI has improved those. I really think that if you're not embracing the world of AI, you're probably going to be left behind. That's where everything is going, even in the world of technical analysis. So we'll show you how our AI works under the hood, how it changed my trading approach. As Anthony said, I've been trading Elliott wave for 24 years now, just pure Elliott wave. I started trading in '96, started with Elliott wave in 2000. When I first heard about it, I thought, this is hocus pocus. It went one ear and out the other until a guy showed me what he was doing with Elliott wave, and he made a crazy prediction. Then September 11th happened, and we all know the market closed for 4 days. Then reopened, and it went exactly to the price that he had talked about. And so I spent a great deal of time with him, and that's how I learned Elliott wave. And unfortunately, that gentleman passed away, but he shared my knowledge with him, and I like to share that. As Anthony said, I've traveled the world trying to share this information with people. So we'll show you real-world trading examples and how you can use these AI signals in your own trading as well. So before we get into actually how it works, the bottom line on any system is how it performs, right? That's what everybody wants to know. Can I make money doing this? So here's our performance review, and you can see the movement to the upside there, lower left to upper right. So here are the actual numbers, and so these are real numbers. You set a hypothetical account. I'll explain that to you in just a moment, but these are actual real results that have been sent out to our alert subscribers at ewotrader.com. We have an 83% winning trade record. Now, the average return on trade is 27%, so it wasn't generated returns from a couple of big home runs that were hit. These are a number active, just medium-sized wins that build up the account, and you can see that it's generated 141% account return on investment, and the average time in a trade is 24 days. So pretty phenomenal results. I think anyone would agree. And since we started sending out the AI version of what I've been doing with Elliott Wave, it was a system I had created, and some guys at an organization called HUBB.com are the ones that took it and AI-ified it. And so we started sending those alerts out to our subscribers in September of 23. So we haven't had a losing month yet. I'm not going to say we're never going to have a losing month, but we haven't had one yet. And the reason it says hypothetical non-compounded portfolio is we always send out our alerts based on a $5,000 model account, and we add new subscribers all the time. So it's not fair to do compounded results because the average person coming in, if we're putting on big trades based on the account value, it's not fair to them. So that's why it shows that at the bottom. The main thing is that pretty consistent monthly performance. So if you had started with us back in September 23 with a $5,000 account, your account at the end of June, and July was a fantastic month. We just haven't updated the results yet. We do that every quarter, so we'll do that at the end of September again. But at the end of June, it would have been $12,232 since September of 23. So again, I think pretty impressive. All right, so let's get into the meat of it. How does this stuff work? How do we identify trading opportunities? And again, I'm going to assume that you've heard of Elliott Wave before, but everybody probably has a slightly different degree of knowledge on Elliott Wave. So when we start at the 0 point, that's the beginning of a new impulse move. So in this case, we had a move to the upside. We had a corrective move. We moved higher. That's the crux of Elliott Wave, if you're not familiar with it, is that the market moves in impulses and corrections, a series of impulses and corrections. And it does its best to identify when turning points occur in those impulses and corrections. So every single impulse pattern starts with a corrective pattern, whether it's a flat, zigzag, or a triangle. And you can make an argument, even though it says this could be a flat pattern, could also be an ascending triangle pattern as well. But then as we move forward, we can see that the C wave does extend. And as it moves to the upside, we now know of the three corrective patterns, it is indeed a zigzag. And what people may or may not know in the world of Elliott Wave, every 5-wave pattern, that's what everybody knows with Elliott Wave, right? Because if you go out on the internet, you see that 1, 2, 3, 4, 5, and then a corrective ABC. But every single 5-wave pattern starts with a zigzag. So we start with the ABC, and then if it is indeed going to become an impulse pattern, the algorithm will relabel those as it did here from ABC to 1, 2, 3. Now we know we're in the wave 3. And this is where it starts to get really interesting, because most people, when they talk about Elliott Wave, agree that wave 3 is the strongest of all waves, but they say stay away from that wave 3 because you don't know when it's going to end. And then you could get the wave 4 correction and have a reversal. My take on it, and this is my little unique area, is why do we want to stay away from what we all agree is the strongest of all waves? What if we can figure out where that wave 3 is going to go, and we look for a zigzag pattern within that wave 3? And if we can find one, then we have a really good idea where the wave 3 is going to end. So we can take a chunk out of that strongest of all waves, which gives us a higher percentage opportunity of profit. Now, if you're married to a stock, and a lot of people have their own stocks, and gosh, the big tech stocks now, everybody loves those and they all follow those. So if you're one of the people that just has their favorite stocks that they follow, you can see we had the zigzag pattern. And we would have gotten out just before the top of the wave 3 here on this pattern. But then you have the wave 4. And if you continue to watch this stock, then based on general Elliott Wave rules, you could actually have a second trading opportunity in the same stock. So my primary focus is trading that wave 3, but I just wanted to share that if you have your favorite stocks, and most of us do, you can find multiple opportunities within one impulse pattern on the same stock. So how does the AI part of this work? So I created my own technical trading system within Elliott Wave, and it was working pretty well. You'll see the results there. But then I wondered if it could be made better, and that's when I ran into these folks at hub.com, and they actually had some data scientists that were creating AI for trading signals. And so I said, well, could you take my system and make it better? And they said, yeah, we can. And so over a bit of time and an awful lot of research, primarily focusing on the last 20 years, but going back to the beginning of time in general terms, and they used over 300 data points, and it was a pretty basic trading system to start with, to be honest with you, but they took it and added a whole bunch more stuff. Now, some of the things that they added are things that the average person can find: price to volume, indicator values, benchmark comparisons, indicator value rankings, statistical measures, intermarket correlations, economic cycle data. So if you're a fan of looking at fundamentals, it takes fundamentals into account as well, including macros in the economy. And my history is I left and transitioned away from being a golf pro. I moved into the world of being a financial advisor. I was a registered securities principal at one point in time. Didn't really like the fact that institutions all seem to be focused on their own bottom line rather than the bottom line of their account holders. And so I left that world, but I was trained in the world of fundamentals. They all focus on fundamentals. And the joke used to be, oh, the best charts are found at the bottom of the ocean with the shipwrecks. So they were very anti-technical analysis. And then when I ran into that guy that taught me Elliott way, I went 180 degrees and went all technicals. And then, you know, that's what happens. That's psychology, right? We go from one extreme to the other extreme, and then we kind of work in the middle. And that's where I am now. I'm still a big believer in technical trading. That's the forte. But I think it's important that it's backed by good, strong fundamentals. So it's the best of both worlds, if you will, company options data, et cetera. But here's where it gets into the AI stuff. They use regression, clustering, random forest, ensemble, and neural networks. A whole bunch of terms that I'm not really familiar with. The only one I'd ever heard of was neural networks. And basically that's where you give the AI a situation, a problem, whatever, and you ask the AI to solve it or create an answer to it. That's what a neural network is. All those others are other AI models, and they're all in here. So there's several different. It's not just focused on one AI model. So I reached out to the data scientists and I said, hey, can you tell me what you're doing? And we had a phone conversation. Didn't understand a thing they said. And I said, well, you know, I'm a visual learner. Can you send me pictures? So they sent me these pictures. And this is what each individual data point looks like. The coding's along the top, and then it's like a dot plot. Some people say it looks like an ultrasound. But basically what you want to focus on are the clusters. And then they sent me this, which is a combination of what they consider. I'm not going to show them all to you. I'm going to bring you to a chart that shows these are what they consider, the data scientists, to be the most important data correlations. So even though they're using some information that the average person can get, unless you have the computer power that these data scientists have and their programming knowledge, as well as the time to go through and create this, you kind of need software. So these are the top 36 data correlations. The bottom line here is that you look at each one of these points and you can clearly see where they group together, right? I mean, there's outlying dots, but what the AI does is it takes every one of these and says, okay, where do they all agree? Where do they all agree in the clusters? And that's the information that's used to create a score. And they create a score on the likelihood that a stock within the wave 3 is going to go up and hit its target. And so the way the algorithm works is as soon as ABC relabels to a 1, 2, 3, so as soon as it moves into the wave 3, the AI starts looking at it to see if, hey, here's a way that we can find an opportunity with a high degree of success. Here's how it's occurred or changed my own trading. This was my system beforehand. You can see that we leveled off. The average day, the time in a trade was around 50 days, and that includes COVID, etc. And then in September of 23, when we started doing this, the way it affected the trading is it cut the time of a trade more than in half. So there's where the 24 days come from. That's our rating on actual results that have been sent out. So it cut it down from just under 50 days to 24 days is the average length in a trade. So less than half the amount of time. Well, that's great. The other thing that it did is it increased the level of trading activity. So here's the number of trades that I would normally do on a monthly basis. And then with the AI, you can see 3 times the level of trading activity. So not only did we cut the time of each trade more than in half, we tripled the number of alerts that go out. So far more activity, less time in a trade, and then the higher percentage of accuracy, which allowed me to set a new personal best where I had 19 winning trades in a row. So that was a new record for me. And on our website at evotrader.com, we list every single alert that goes in and actual fill prices, not just hypothetical prices based on the mid price of an option. We post prices that we know our subscribers were filled at. And then every single one of the alerts that goes out has a trade ID with all this information that's listed in it. And so here it is on the website where you can see the ranking of all those winning trades in a row. So yeah, new personal best. So I can't tell you how excited I am about the fact that AI has taken something I already believed in and made it even that much better, supercharged it, if you will. So on each and every alert with those fill prices that I talked about, so there's the prices that we know our subscribers were filled at, not just hypothetical prices. And then let's go through some actual real world results. So these were sent out to our alert subscribers with actual fill prices on both entries and exits. So these are the AI Elliott wave trades. So real-time results that were sent out. So there's that trade ID. This one happened to be on IR, symbol 996. We're going to put on the best option trade for the given situation. Oftentimes it's just straight calls and puts, but we will do some spreads. I like to do out of the money butterflies, if you're familiar with those. I think that is the lowest risk, highest reward type of strategy, but not every situation has one available. You're going out of the money on the butterfly. This is one of the things that I learned way back and has been a great source of success for me, but oftentimes there's not enough liquidity in the options if they exist out of the money, and we place the butterfly around the target price. But you can always substitute just a straight call. So even if you don't want to do a spread or a butterfly, you can just put a straight call on. So this was IR, and here's how it works. Here's how the software works. It gives the AI gives a result, and in this case, it was 90%. Now you can see that the target price, it's not a huge amount higher than that. Another reason why you could see the average return was 27%. So what we're trying to do, we're not trying to hit the bottom of the wave three. We're not trying to hit the top. What we're trying to do is consistently take a piece out of the middle of the wave three. I think if anyone is focused on, oh, I got to get into the bottom and out at the top, nobody does that. And you're just going to frustrate yourself if that's your goal. So let's just take a piece out of that middle and move on. And with a 90% rating, that's a high one, by the way. They don't get too much above that. And just to give you a range, we look for 75% or above. So those qualify to send out alerts. So if the AI rating is 75% or above, we send it out. And it gives you not only the target price, but it gives you your stop loss. It gives you what they call a fail zone. And if the stock were to come down to that, that's our exit. It's not some arbitrary, oh, if the trade makes X amount of loss, we get out. Don't work that way. To me, that's death by 1,000 cuts if you have a system to where you just exit a position because the options have hit a certain percentage loss, especially if you're trading long options. Time decay is an issue. The longer it takes for the trade to go, you could see some erosion in the option value from time decay. But to me, as long as the pattern is intact, you stay with it. And that's where the stop loss comes in. So we utilize what the AI is telling us. If we hit that level, that means that the AI no longer has faith in this, and we exit. So we send out an entry alert on this on the 2nd of February. You can see it was $2.10, 2 contracts. We send out alerts based on a $500 portfolio, as I said. And if anyone has a larger account, they are clear to put on larger trades if they want to, but that's how we base our results on assuming, and I want to help the average person, not just the people that have big, huge accounts. I want everyone to have an opportunity, especially with this, with the AI. I feel like we've been sending out documented alerts since September of 23. I think we're kind of ahead of the curve there. So we sent out the entry alert. We also have some commentary that goes out with the alert, tells you what we're looking at, why we're looking at it. And in this case, with IR, it moves straight up, and then we exited with a 42% gain in 6 days. And you might look at that and say, well, you didn't hit your target yet. Why'd you get out? Well, when you get a nice move like that, and there's no guarantees, it's 90%, but 10% chance that it's wrong. If you make a nice gain and you're happy with the gain at the time, you exit. In addition to that, you have to look at implied volatility. What's going on with implied volatility? And since this stock went up and continued to go straight up, IV was being rushed into the call options. I like to take advantage of that. I like to sell these options into higher IV. We like to buy at low IV, sell at high. So even though it hasn't hit its price target yet, if there's an infusion of implied volatility, I may go ahead and close that one out and take that. And I think that's a prudent thing to do. Another example here was on Shopify. You can see this was 940. Same thing. The AI gives us a target price as well as a stop loss. This one's 77%. This is a little more realistic as far as what the results are. As I said, 90% is rare. Love those, but it's rare when they show up. And then this one took a little bit longer. And this goes along with my point of don't just exit a trade if it's starting to show a loss. So we sent out one contract of this on Shopify, and there's the criteria that was listed there, the commentary. And then you can see that it went against us. It kind of started our direction and then went against us, but it did not hit the stop loss. It never hit the stop loss. So even though with this move down, you probably would have seen the options go down in value, you might have been tempted to get out, but why? It hasn't hit the stop loss yet. And then it turned around and took off and hit the target. So it took a little bit longer, but would you take 111% in 51 days? So a little more time frame than the average of 24 days, but you were rewarded with it with a nice return. So I think most people would say, yeah, I'll hang in 51 days if I can get 111% return on the trade. And again, that's one that the average trader might have been tempted to exit just because it started going against them. Nobody likes to see red in their account, but that's the nature of long options with time decay. If it doesn't go straight up, and we do have some that move up in 1 to 3 days, and those are fun when we have those, but they don't all do that. Some of them take their time to get there, but we trust the AI because we have the data behind it, extensive data showing that this works. Just to give you, because I can sit here and talk to you all I want, but here's some feedback from some of our actual subscribers. Nice profits, 83 days trading with Ewo Trader, average gain 42%. So he's actually doing a little bit better than we were, just simply better than my wildest dreams. Another one has generated over 180% in their account so far. Pretty great returns there. Now here's an example of what you can do with a larger account. Clearly this gentleman must have a much bigger account because he made 35,000 on NVIDIA in 60 days and 109,000 on MSTR in 12 days. You're not going to do that on a $500 account, clearly. So, everybody is in charge of their own accounts. And you can scale the size of your alerts based on your own account size. But we scale them based on a $500 portfolio because I want to make sure everyone has equal opportunity to take advantage of this. So what I wanted to share with you here is an offer where you can receive, and we're just putting our money where our mouth is. You can register for a 30-day trial of our trade alerts, which we send out through SMS and email, and you can see this free. So we'll show you Elliott wave and delta neutral trades, day trading alerts, daily trading alerts with sent out through SMS and through email, or both if you prefer. Every single one of our alerts comes out with both entry commentary, any adjustments, and exit commentary. I may post commentary mid-trade sometimes by saying, hey, this is what's going on here. We haven't had our alert yet. So lots of communication. And there's multiple ways. You can actually access me directly through our support on our webpage at ewotrader.com. You'll see a button for support. And if it's a question for me, the support staff will send it directly to me. So we have 24-hour support. If you have a general question, if it's some sort of a administrative question, they're there to help you. But if you have a question for me, they'll direct it to me, and I'll respond to you within 24 to 48 hours. So I don't want to make it sound like it'll be an instantaneous response, because that's not logical. We got lots of things going on, but I will get back to you within a day or two. And in addition to that, every week there's 2 live trading sessions. We do one on Monday, we do one on Thursday night. So we do one on Monday at 11 a.m. during market hours, and we do one on Thursday evenings after the market hours. And they all have a live Q&A. So we have a support staff member there. If you have a question, you can send it in through, if you're not happy with doing voice questions, you can send it in through text through the Q&A, and the support staff will bring it to me, or you can actually ask a voice question directly to me. But I'll be here twice a week live to talk to you, to answer questions. And oftentimes it's not about the alerts that are out there. People have questions on their own favorite stocks or something that they're looking at. And I don't give individual investment advice, but I can look at the charts and see what the charts say. So lots of access. In addition to that, it's truly free. We're not even going to ask you for your credit card. All you have to do is put in your name, address. We will ask you for your email address and phone number, and that's because we send out alerts through text and email. But we're not going to ask you for your credit card. It's not one of those 30-day free trials to when the 30 days end, you're automatically charged on your credit card. We won't even have your credit card information. So we're putting our money where our mouth is. We're going to give you 30 days free to where you can come in, access these alerts, see the power of them. Then you can decide if you want to move forward with it. I did want to make one other comment about the software. Again, HYPOTHETICAL.com. They have released a version that has the AI signals in it, and there's a founder special that's going on right now, but there's only 30 spots left. They were taking 200. We just released this last week, last Wednesday night, and there's 200 founder members that are going to get grandfathered in for a big discount on getting the AI signals. And if you want that, you need to go do that immediately. So go register at HYPOTHETICAL.com for the software and get in on the AI signals. The way this works, if you're wondering, well, what if your AI guys leave? What if the data scientists leave the hub organization, which I have an agreement with the hub organization? Well, they have them locked in on the agreement, so they can't leave. And the data scientists have said, we don't want everyone in the world having these alerts. Obviously, you know how it works. If everybody's trading the same thing, it doesn't work. So it's going to be a limited number of people that are allowed to get access to these AI alerts. They are locked up with the hub organization. They can't leave. They're legally bound there. And it is true AI. Some people ask that. So it continues to learn on itself. So it's only going to get better and better and better. So it learns from what the results have been on these scores. So if there's a score of 75 or above, it continues to process what those results were and refine itself. So it's true AI. It's pretty cool stuff. I get an opportunity periodically to talk with a data scientist, and I'm blown away every time I talk to them. So as I mentioned earlier, if you're not considering or not adding in AI to your own trading, I think you're missing out. This is where the world's going to be, and it's important that you take advantage of this. So I've got a few more things to show you here with the time that we have left, but I wanted to make sure that you saw this quickly on the opportunity to take advantage of the AI signals. And you can do that by going to home.ewotrader.com/EWO-AI-trial. So again, home.ewotrader.com/EWO-AI-trial. And that gets you in to receiving these alerts for 30 days. Now, the issue with that, you're going to get the signals, but if you want the software and you want that founder special price, you're going to have to go do that right away, because I don't think it'll be around 30 days from now. It's only been a week. They were offering 200, it's already been 170 sales. There's only 30 spots left. So you need to jump on that really quickly. So I just wanted to share that with you. I didn't want you to say, oh, the signals work great. I'd really like to have that software and have access to them myself. And then all of a sudden you find out that the founder special that was there is gone. So I just wanted to go through and let you know that and how it works. And so what I thought I'd do is just show you some real time of what's going on here. Hopefully everybody will still be able to see my screen, and I can show you based on the information from this software. So I'll give you a quick rundown on the software here, and I'm gonna switch this real quick and show you the way it works. So you're gonna get right off the bat a presentation here. Hopefully everybody's still seeing my screen. Oops. So you can see exactly the signals that I'm getting on here, and then take advantage of it for yourself. So I'm gonna move this little guy over here. So there's the AI button there, and then you go right to charts. There's an entire social media aspect to it. So if you're a Reddit fan, Wall Street Bets, whatever, they have all that here, trading themes, members, and you can socialize with them. So there's a whole lot more to it than just charting features. You have all that access as well. And there's USO. But let's take a look at the S&P today. And so here's what's going on. You're probably familiar, the markets moved to the upside today based on what occurred coming out of the retail sales number. So we had a PPI coming in weaker than expected, CPI in line, and then retail sales showing that the U.S. consumer is still spending. So off we go to the upside. So it gives you these Elliott wave patterns. And then the zigzag that I was talking about, there's a zigzag tool within here where you can take a look and see there was one to the downside right there, and look where it went. So if you haven't incorporated Elliott wave into your own trading, you need to do so. 61.8 is a very strong Fibonacci level. It's my favorite level. So on this downward move here, and this included that crazy Monday that we had over a week ago, but look where it went, right to the 161.8% fib extension level, right exactly where we thought it would go. The first point is 100%. We were there on Friday, and then Monday opens up with the gap down right to the 161.8% level. Just amazing stuff. And I've been trading Elliott wave for so long, but it still consistently amazes me on the accuracy. So if you're one of those that have poo-pooed Elliott wave, my comment always to someone that hasn't had success using Elliott wave is you probably need some more education. It's really complex. It's not as basic as 1, 2, 3, 4, 5, then ABC. That's just the general stuff you see out there on the internet. But if you want to learn it, it's really complex. It's really mathematical. And we have a lot of education on our website regarding Elliott wave that I've created. And I approach Elliott wave from, and I just want to be clear about this, I approach Elliott wave from a trader's standpoint. I'm not one of those, quote, Ellioticians where you're trying to be so precise on the labeling and you get into, the microwaves, etc., and bring it all down. I don't do that. I stay focused on how can I make money from Elliott wave on a trading aspect. So my goal is not necessarily to be the most correct on labeling every little tiny aspect of a wave. You can get into paralysis through analysis very quickly in the world of Elliott wave. And I do a live show, not a live show, but a recorded show on YouTube every weekend on the Elliott Wave Options channel on YouTube. And they'll be from time to time, somebody will say, hey, I don't agree with your labeling. Well, first of all, it's not my labeling. It's the software labeling, and the Hub organization has programmed the Elliott Wave algorithm exactly as Ralph Nelson Elliott himself wrote it. Now, there's multiple other softwares within the world of Elliott Wave that are personal adaptations. People have taken General Elliott Wave, tweaked it a bit, and if you don't really know what their own tweaks are, kind of hard to figure out exactly what they're doing. This is programmed exactly to the mathematical algorithm that Ralph Nelson Elliott wrote. It's been around over 100 years if you're not familiar with who Ralph Nelson Elliott was. In the late 1800s, he worked for the railroad. Very smart, known as a mathematician. That was what he did for the railroad. And then he got sick and he became physically debilitated. So he was homebound, but still had his mind. It was his body that left him. And he started getting interested in the markets and became convinced that you could take what's happened in the past and come up with a reasonable assumption of what's going to happen in the future. And that's basically what technical analysis is anyway. But he created Elliott wave out of it. And so it's been around, well over 100 years. So this isn't some fly-by-night system. But anyway, just wanted to show you, look at this zigzag here. And we opened with all the craziness on the unwinding of the yen carry trade a week ago Sunday night. And then we opened right at 161.8, and we've been going up ever since. And so that was the completion of that downward zigzag, exactly to the levels expected. It's mind-boggling, really. So please take a look at it if you haven't already. And also, just to show you within the software, you can break it down into intraday charts as well. And you can get Elliott wave patterns if they exist. So here's a 3-minute chart. That's what I like to look at. I watch the market on a 3-minute intraday chart throughout the day. All of the alert decisions, by the way, are based off of end of day data. But then you can see there, it will label Elliott wave intraday as well. So it looks like the move today is kind of running out of steam a little bit here. We're at the wave 5 high, but we had that big wave 3 that started before the market actually opened, again, after the retail sales report came out. And then we had the wave 4 correction, and there's the wave 5 extension. So it labels it even intraday. All of the things that I talk about can be used if you just want to take the general system of Elliott wave and break it down and use it intraday as well as end of day. It doesn't have to be just end of day stuff. We get a lot of people from time to time that, whether or not you like to or not, day trade or shorter period of time trading, all the rules that are associated within Elliott wave can be done on any time frame. So I just think it's really cool that it actually labels it intraday as well. So let's go back to the daily chart. And then over here, you can see here's the AI button. So you can click there and it takes, or it took my basic technical trading system using Elliott wave, added in the AI, and you can see here's some results. So we got race here, but notice the score is only 54. So when I click on that, here's what you get. And you can see that there is the potential for the movement to the upside. There's your fail zone. But at a 54 reading, that would not be sent out as an alert to our alert subscribers. It's not a high enough. We did 75 or above. And so that's why you see this one in gray instead of being in green, which is green for go, which would have worked out really well with race, wouldn't it, had that one been a high enough signal. You can also see that this is getting a little vertical. I'm a believer, one of the rules that I share often is no security in any time frame gets too far away from the 10-day moving average. And you can notice on this chart here with where we are on RACE, we've gone vertical. I don't like things to move vertically. What goes vertically up oftentimes comes vertically back down. So I don't like that. And we're too far away from the 10-day moving average. These two will come back together. You can see just looking at the history how the stock stays around the 10-day moving average. and we got up above it here, and then we went sideways and allowed the 10-day moving average to catch up. Got away from it here, came down this time, back to the 10-day moving average. So one of two things is going to happen here, in my opinion. So you can watch this and see on RACE. Either the stock's going to go sideways for a while and allow the 10-day moving average to catch up, or it's going to come back down towards the 10-day moving average, which I think is pretty likely in this case because the move was vertical. And that's what happened here with these vertical moves. But we'll see. But one thing I feel highly confident in is in the next week or two, you're going to see the price of RACE touching that green line, which is the 10-day moving average. Then we have over here Hawaiian Holdings. Same kind of scenario here, getting lots of these vertical breakouts with this rally that we had so far this week. But once again, the signal's not high enough, but a vertical move too far away from the 10-day moving average. So staying away from these. And this is where the AI really becomes important, I think. It's great when it gives us signals that work and we hit the targets and everything goes as planned, but it also helps to keep you out of bad trades. And not putting on a bad trade is just as valuable to your account as putting on a good one. So we don't send out alerts just to fill our subscribers' inboxes. We only send out alerts that are based on these signals. So while in the past I've sent out signals to alert subscribers based on my system, the power of the AI has been so impressive that I only send out signals now if the AI says that's a go. So if it's not confirmed with the AI, then it doesn't get sent out. So all of our signals since September of 23 are only signals that the AI gives us a rating of 75 or above. Now we get to an interesting point here. You notice this is in red because once you break below 25% on the rating, this is one you can actually fade. So if you're looking for, well, I just don't want all bullish stuff. I don't really feel so comfortable with where we are. Is the Fed going to cut rates? Are they not going to cut rates? Are they going to cut fast enough? Is the economy going into recession? If you have all those questions and you want to balance your portfolio with some long and short positions, when you see these readings that are low like this, this is one that you can fade. So we had a big gap up. You can see we've gone sideways today. And then once again, separation from the 10-day moving average. Our AI data has told us 94% of gaps get filled, but we don't ever know when. Sometimes it takes a while. Sometimes gaps get filled right away. Sometimes it takes a while. So anytime there's a gap, it's always in the back of my mind, when's that gap going to get filled? So this one, you had this big breakout here. We're going sideways today. Maybe this one drifts back down towards the 10-day moving average. So it gives you an opportunity not just to put on the long positions, but to fade positions as well. And in addition, it gives you bearish signals if you're wondering that as well. So we can find downside trades. Well, as you would expect with what's happened in the market recently, for today, there aren't any. So I'm showing you this live. This is exactly what it looks like right now. So there's no bearish signals today. And then I also have a portfolio for sideways trades where a stock that goes sideways after a drop, then it gives you a boundary. So you can see here, this one's not a high enough score. You actually would expect this one to break out, but you have a big move down, and then it gives you a trading range. It's a 1 standard deviation range that the AI tells us, hey, that stock's likely to stay in there. So if you do like more complex option strategies, if you will, calendar spreads, butterflies, iron condors, etc. If you like the sideways stuff, you have an opportunity there as well. All kinds of really cool stuff to take advantage of here. And it's all based on these general Elliott wave rules that the AI has taken and just made so much better. And you can see a general setup here. Look, this is one that was on the downside move, but look what happened before. So there's your 5-wave pattern. Wave 4 came down right to a 50% correction. And here, this is known as the tap box, time and price projection. That's where the stock's expected to go once it moves up from this wave 4, and look where it went. Look at the high, right directly in here. And I didn't preset this one. I wasn't even looking at this for a directional one. I was looking at it for a sideways one. But it's just time after time, this stuff works. So I would encourage you to embrace not only Elliott Wave, but embrace where things are going from a technical standpoint. Everything is going in the world of AI. And as I said, I do think we're kind of in the forefront on this. So you want to find out about it, go check out the software, sign up here, and get the free alerts for 30 days. See if you don't find it to be pretty successful for yourself. So with that, Anthony, I'll turn it back over to you. That's what I wanted to share with the folks. I want to thank everybody for your attention today. I always sign off anything I do with the fact that time's the most valuable asset we all have, myself included. As I get older, it becomes more and more valuable. Appreciate you spending some of your time to listen to me today. And I hope this helps in some way to improve your trading going forward, because that's really my general goal. So thanks, Anthony. Appreciate you having me, and enjoy the rest of the presentation. Y'all, you got some great presenters today.
Thank you, and you're one of them.
I appreciate that.
See. There might be a, oh, okay, someone just said thanks very much. I saw something in the chat there. Yeah, thank you, Rob. Very interesting strategy. Incredible how you leverage AI to enhance the precision of your options trade setups. Ladies and gentlemen, if you're looking for consistent gains by being able to integrate AI technology to find high probability option trade setups, then Mr. Rob Roy of Elliott Wave Options has a solution for you. I placed his offer there in the chat box there. Rob, if you have a look, and if there's anything else you want to put in there, feel free to do so.
I think that's it. You covered it well. Thank you, Anthony. Appreciate that.
Yeah, you're most welcome. So we placed his link in the chat box. You can always learn more by going to ewotrader.com. Thanks again, Rob. Please come back and see us on Traders Corner.
Love to. Thanks again for having me. Have a great rest of your day, everybody.
You're most welcome. We appreciate having you. Ladies and gentlemen, our staff at Traders Corner sifts through hundreds of pro traders' resumes and brings you only the best and most credible, qualified educators to participate on our venue. And our next presenter is no exception. He is the founder and head trader of Trades Trending, holds or has held Series 3, 7, 30, 34, 65, and 66 securities and futures licenses, and has been an active trader for over 15 plus years, focusing on equities, commodity futures, currencies, and options, with an emphasis on analysis and trading, using price action, institutional levels, and historical data to put the odds in your favor, not just his. Ladies and gentlemen, here to reveal his top 3 secrets to being on the right side of the market is Mr. Silas Peters of Trades Trending.
Hey there, good afternoon. Can you guys hear me okay?
Yes, we can.
Test, 1, 2, 3. Thank you so much.
Yeah, you're most welcome.
All right, you just let me know when we're ready to rock, and we'll go ahead.
Yeah, you could definitely start right now.
Okay, perfect. Well, thank you so much.
And you'll go till 1:30. Yeah, you're welcome.
Okay.
Yeah.
All right, thank you so much, Anthony. I appreciate the warm intro there, and for the Traders Corner team for having me on. If you guys can hear me, I just want to do a quick audio visual. Type a 2 in the chat if you can hear me and see my screen. I know Anthony gave us an audio clearance there, but I just want to see there in the chat. Type a 2 in the chat if everything is coming in through. Okay, perfect. All right, so we've got a limited amount of time. I appreciate, again, everybody having me on, and appreciate your attention. A lot of awesome presenters there in front of myself and then after me. So what I want to do is spend some time with you. My name is Silas Peters from Trades Trending, and this is one of my favorite workshops, my top 3 secrets to being on the right side of the market. I can almost guarantee that you haven't seen anything like this before. We're gonna have a good time. This is gonna be interactive, and I can't wait to show you something that we've been working on for some time. And we're really in some exciting times, some really incredible opportunities, not just now, but also on the horizon. And we must first cover the risk disclaimer. We know trading is risky. There's absolutely no guarantee past performance is indicative of future results. You must always consult with your tax or financial advisor before applying real risk capital in the markets. So with that being understood, let's talk about what we're going to be covering today. We're going to talk about how to use a trading compass to know exactly what to trade and when, how to define worst case scenarios in any trade, long, short, or out, how to use AI to get the trend, and as our good friend Kenny Rogers told us, know when to hold them and know when to fold them. Plus, my big promises to you is that you're going to learn to get your time back, and not only that, but you'll discover a totally different way to trade, a much easier, simpler way to trade. In fact, my number one goal for you by the time you leave is that you'll have an easy 3-step trading framework that you will use every day. And my job is to make you an informed trader and investor. And I'll be honest, I want you to be skeptical. I want you to question, but I'm going to give you a quick taste of what we'll be exploring together. I want to show you a handful of case studies using the power of this framework because, as they say, seeing is believing. Let's take a look at this chart of BRP. I have no idea, but you probably didn't either, where this market was heading or even what it was. You probably would have said, well, it's going to go higher because look at the trend. We've got higher highs, higher lows. But our predictive modeling is suggesting a near-term top ahead, and that is precisely what happened. BRP made an interim top and went south to the tune of 16.5%. Then let's look at boring oil XLP, consumer discretionary. Market is getting hammered, but our predictive modeling system is predicting a bullish forecast ahead. And this is in a severely downtrading market, but we can come in and safely catch this falling knife and the trade rides higher by 15%. Now, what about JP Morgan? Let's look at JP Morgan. This was in the midst of bank earnings season. The market is rising, but our model is suggesting a bearish forecast looming ahead. And what happens? The market makes a U-turn and trades nearly 30% to the downside. Bonds, the poor bond market, TLT, absolutely getting pummeled, destroyed. But if you knew our highly predictive AI technology says not so fast, we're likely going higher and doing so on a specific date. This is when you step in and take a bullish position while everyone here took the momentum trade and sold the lows, just got a face pill. Now, I know you guys are here more than likely because you're looking to possibly supplement your income. What if you could place a trade in TLT and generate around $4,500? How would that impact your life? What would you do with an extra $4,500 this month? Because knowing your why behind being here, why you trade, is very important. Is it because you want to retire early? You're looking to take that family vacation you always wanted? Are you in a situation where you now have to take care of a family member or loved one? We all have different whys. Let's take a look at Netflix. What would knowing the precise time to build a long position in Netflix right here do for you? What about placing a trade here, such as buying 100 shares, buying a batch of call options that generated approximately $14,700 and took you less than 5 minutes to identify the trade, frame the market, find your entry, and then let it rip to the upside? What about this trade in crude oil? This trade right here, if I'm looking at this chart, it's moving sideways, it's ugly, it tells me nothing, but our predictive forecast model says we are at a significant turning point. And if you followed its lead and took a long right here, you have the opportunity to turn one contract into $24,000 with little drawdown. What would you do with an extra $24,000? How would that impact your life? What if you were a trader that generated these kinds of results? Do you think it'd make your life a little bit easier? Absolutely. Now, let me tell you why I trade. I trade for one reason and one reason only, and it's called freedom. I trade because of our software enables me to locate and execute results like this. This is now $22,000 off the downturn in crude. That's coming off the $24,000 to the upside that we are able to just capture. Who cares if a market is going up or down? We trade the up moves, and then we happily trade the down moves over and over again. But I trade because it's the best vehicle that affords me the ability to be a better husband, a better father, because I can be present with the freedom that trading allows. Now, the question for you is this training for you? Now, if you are sick and tired of spending countless hours researching what stock or ticker to trade, this training could be for you. If you're frustrated, feeling like you're deciding direction based off a coin toss, this training is for you. If you're done with being a dollar short and a day late when it comes to being profitable in the market, this training is for you. And my goal for you is this. I see your whys in the chat, and I know what I'm going to share with you today has the ability to make a huge impact on your life. So I want to make this training worth at least $3,000 for you. My only ask is that you treat it like you paid $3,000 to learn what I'm about to share with you. And if you stay until the end, I'm going to share with you our top picks right now, and I'll also share with you how you can get exclusive access to our personal and proprietary Trend Insider software that allows myself and our students to generate the results I share with you already, as well as throughout the presentation. So if this is something that you think you'd be interested, type in trend, because I'm going to show you how you can have the skills and the tools and the knowledge to being on the right side of the market. Now, who is this guy that's been going on for the last 10 minutes? For those of you who don't know, my name is Silas Peters. I'm a veteran trader who cut my teeth at the Chicago Board of Trade. Now, I've traded some of the biggest markets for hedge funds, banks, commodity trading advisors, but more importantly than being a trader, I'm a husband to my college sweetheart. I'm a proud girl dad to 2 beautiful daughters, and trading affords me to live a blessed life where I get to live at the beach, travel, and most importantly, be present. Now, I've had the honor of teaching thousands of traders just like yourself who've gone on to achieve some great success stories in the markets. We've got all of these success stories that come in, like Bruce, who made some money. You got Merle, who sold DVA. You got Mark and Andrew and John, and all these stories that constantly come in because people are taking action and having results. You got this guy making money on TQQQ, and who made back his money in less than a week. Philip, Lee, James, on and on and on. Then you've got this one, Ernest, who is now able to fish. This is the ultimate compliment. He's taken action with what I've taught him and is now fishing. Then you've got David, who said that one trade is more than paid for his membership. You've got Stan, who made 100% in an option in less than 2 trading days. Now, I'm going to tell you my results are not typical. This is not some get-rich-quick scheme, not just effortless earnings. My results are not typical. In fact, I've put in the work and I've taken action. And if you listen closely today, this is what you'll discover. You're going to leave this workshop with an easy 3-step trading framework that you can use every day that will save you hours and hours from being glued to your charts. In fact, during this workshop, I'm going to show you how exactly I find a trade, get direction, find the entry, and get my risk to reward and place a highly profitable opportunity in the market, all in under 5 minutes. Now, before I do that, let me ask you a question. How many of you felt like this before? You start your day off feeling great. You slept well. You made your hot cup of coffee. You woke up with the love of your life. She made a great breakfast. She has your morning financial market show running in the background, laid out your fresh edition of the Wall Street Journal, just ready for you to go find that next golden nugget to make you massive profits in the market. After breakfast, you move to your home office. You sit down at your incredible trading workstation with your triple monitor setup with all your different charts. And before you know it, you have over 100 tabs open and you're looking at over 100 symbols. Uh-oh. What happens next? Well, you're frustrated, you're mind blown, you're overwhelmed. You're flying blind to the market. What is one of the reasons? Why is this happening over and over again? It's because of the sheer number of markets to analyze. Did you know that there are over 7,750 stocks listed on the New York Stock Exchange, 4,400 stocks listed on the NASDAQ, 2,000 stocks listed on the Shanghai? It doesn't scratch the surface of the other names listed on the OTC pink sheets, Canadian, German, London exchanges, the 100+ commodity, currency markets, other liquid and illiquid, REITs, MLPs, preferreds, fixed income, crypto, spreads, and more. In fact, you're now looking at over 245,000 tradable symbols. No wonder 97% of average everyday traders and investors start off behind the 8 ball. No wonder you're sitting there every day staring at the charts with glazed eyes, and no wonder at the end of the day, the week, the month, you likely have little to show for your time and effort. What if there was an easy button? What if you were able to filter 245,000 symbols down to 5 with one click of a button? And not just a random 5, but 5 of the top markets set to make a move. And that is the first line of business that we're going to talk about today, to know exactly what we will and should be trading. If you spent 30 seconds researching every ticker of the New York Stock Exchange, the NASDAQ, the MERC, LSE, it would take you almost 4 days, 19 hours, and 56 minutes. I asked my programmers to do some research and let me know how long it would take to manually scan the New York Stock Exchange for stocks that fit our criteria. I was shocked when they came back with a crazy high estimate of 4 days and 19 hours. Why? Because there's over 7,000 instruments to look at. It's pretty much impossible to have the best stock list without using technology, bar none. And so what if we lean on the power of the machines? Take that 4 days and 19 hours and whittle it down to a few clicks of the mouse. Well, that's precisely what we did using the power of technology. I had a program built that eliminates me. It takes me out of the equation. I totally removed the emotion, the human error, and it spits out top ranked trade ideas based on AI data, and it has totally changed my life, and I think it can change yours as well. Only 8 seconds every day to know the stock and the ticker that gives me the best chance to generate profits in the market, where I get the symbol, I get the direction, and I get the strength ranked in order from best to worst. Not just for stocks, because I personally love to trade futures and commodities, like grains, gold, crude. So I had it built for those markets as well, where I get the symbol and the directional bias. And it also works on Forex. You get the ticker, the direction, and the strength ID ranked in order of best to worst to give us the highest odds and highest potential. And by using the power of our predictive AI forecast model, we can easily, with a glance, spot the highest opportunities for markets that are about to move. We can clearly see bottoms here, tops here, bottoms here, tops here, bottoms here, over and over again, and all we do is rinse and repeat the process. Now, what I want to do is ask you a very binary, simple question. Who here has a checklist that they abide by before entering a trade, or a checklist they may use to qualify a trade? Type a yes or a no. It's a very simple question. Okay, now, successful traders, businessmen, leaders, all use checklists. Good checklists are precise, they are efficient, and they're easy to use even in the most difficult situations. They're to the point. Now, checklists do not try and spell out everything, but they provide reminders of only the most critical and important steps. They provide reminders that of things that even the most highly skilled professional using them could miss. Good checklists are above all practical. So where am I going with this? Because, as I said earlier, successful traders use a checklist, and this is mine. Your 5 steps to the trade should look like this. Write this down or take a screenshot. 1, we're going to find our top markets. We're going to determine direction. We're going to frame that market using higher time frame analysis. We're going to use that to time our entry and then to manage our trade. There you have it. My simple 5-step checklist that is rinse and repeat on a daily basis. And so since we discovered how to find our top 5, step 2 is direction. If we don't know direction, we're pretty much flying blind. We have no business even considering being in the market. We have to know directional bias, because with a directional bias, we are then like a pilot. Imagine being a pilot. You're circling the airport in Aruba, waiting for bad weather to break so you can land. Your instruments are saying you should be able to touch down in roughly 12 minutes. The weather is very bad below you, like borderline tropical storm conditions, and your gut says leave, turn that plane around, and just leave. But as a pilot, you don't fly around weather based on your gut or your instinct. You've done this thousands of times in your simulation exercises. It's in your blood, ingrained in your DNA. You don't panic, you use the instruments. Trading is the same way. You have to have the best instruments to keep you from making mistakes. If you're jumping into markets without proper tools, the instruments, the compass, you're likely destined to fail. Successful traders use highly accurate, simple instruments that you can trust to help make the right decisions at the right time, regardless of the storms that you may encounter. And my new tool is all of these things. It is my instrument cluster that tells me what to look at, what direction, the timing of that entry. It's highly accurate, very easy to use, and it is my primary tool that pulls all of the data I need, same data I used to spend hours pulling every day. Guess what? It gave me back my time, and not only that, it improved my training. And so the $64,000 question is long, short, or out. That answers what makes markets, right? Traders have their opinions. Bulls, bears, fear, greed all kick in. Would knowing what direction you should be trading a financial instrument help you? Would it give you an immediate leg up or edge on where you are now? The answer is yes, but if the answer is no for you, it should be a no trade. You shouldn't be trading if you aren't making direction a priority before you put your hard-earned money on the line. If that's the case, you might as well be flipping coins, shaking a magic 8-ball, or going and ask a tarot card reader. No offense to any tarot card readers in here. I'm sure you're very good at your craft. But what if there was an easy button? Those were ridiculous examples. We're not going to do any of that. Trading is a business, and we have to take it very seriously. And as you will learn here momentarily, you can have a crystal clear trading plan that you can take to the markets in utmost confidence every single trading day. That is the exact difference between successful traders that you may or may not follow and part-time retail traders who seem to always end up on the wrong side of the trade time and time again. Successful traders have an easy button for nailing market direction, and they lean on the power of technology. They're having the heavy lifting done for them, so they don't have to rely on a coin toss to figure out direction. You know within seconds, is the stock long or do we have a short bias? It's that simple. The problem most retail traders fall into is overcomplicating the process. Am I right? Type a me and ME in the chat if you're guilty of falling into this trap. Of course you've fallen in this trap. I'm raising my hand. I'm typing me because we're human. Let's talk about what a trap looks like and how technology can help protect you. Let's go through the process of how historical data can help us make sure we have direction right. In this exercise, I'm going to show you how to remove human error from the critical step in the trade by removing you from the decision-making process. This is a daily chart of ICE, Intercontinental Exchange. If you look at the past month or two, you can see that it's gotten pummeled. Very bearish, lower highs, lower lows. You're probably thinking lower, right? But what if you knew this time period is the most bullish period of the year for ICE in a 12-month period? And not only that, but it's also realized an average increase of approximately 8.9% over the next 60 days. And not only that, you also knew that ICE has been positive 94% of the time with an average gain of 6% over the last 17 years. 17 years of data. But the stock's in full bear mode. Your gut's saying jump into the long side because you believe it will continue to go lower. You can't resist your FOMO temptations. So do you short it? Do you buy it? Or would you just sit out? Type A, B for buy, an S for sell, or an O for out. Go to the chat box, type a B, an S, or an O on what you would do in that situation. So we've got some Bs. O's actually got some sells. With all of the facts I just gave you, ICE has gained 94% of the time in the last 17 years with an average gain of 6%. Some of you would still be considering short. I would not. I would be a buyer, and here's my process. Based on the data I have in front of me, I immediately eliminate sell because the facts are the facts. Now, as a trader who's relied on historical data to make market predictions that have paid me and my readers year after year after year, I have to go with what history says. And it says I can be long or I can be out, but getting short is not an option on this trade. Let's look at what happened. This is from our software Trend Insider. It shows me the history with one click. Why would we be looking to short right here when the historical cycle averages all point north? The market's telling me we should be setting up for a beautiful low risk, long entry with low risk, high reward because of what the data is telling us. These are the types of trades that I look for every single day. Type of trades we all look for because this data right here gives you an edge. The data, the chart totally removed my bias, my gut, because the law of averages are clearly pointing to the upside. Another case study, daily chart of Hormel. If you look at the past 3, 4, 5 months, you see that it has risen strongly, very bullish, nice gains. You're probably thinking higher, right? This market is going higher. You love to buy breakouts, you're buying. What if you knew this time period is the most bearish period of the year for Hormel in a 12-month period? And not only that, but historically, it's realized an average decline of 6.7% over the next 60 days. And not only that, you also knew that Hormel has been negative 81% of the time with an average loss of 7.3% over the last 42 years. And this is what happens. Here's our visual representation showing 10, 20, and 35-year price cycles. Do you see how being armed with this data gives you a massive edge? At this cycle peak, Hormel dropped 24%. History has memories. It can and does repeat. Now, do you see how we are methodically heading down our checklist? There's nothing complicated about this. Up to this point, do you see how using a checklist can potentially make you a profitable trader? Do you see? Type a Y in the chat. We have found our top 5. We determined direction. Now we need to frame the market to time our entry. Timing is critical for any trader if you want favorable risk to reward. So let's talk about how you can do it. As I said earlier, proper timing is key to ensure your trade has favorable risk to reward. Let's break this concept down a bit further. We need to start by framing the market. I'm not talking about picture frames. I'm talking about framing the market by looking at the market through a bigger picture lens. What does that mean? Well, it means that we need to start with the higher time frames because the higher time frames govern the lower time frames. They hold more weight. Take a moment to write that down. Start with the higher time frames. This is a chart of Lululemon, monthly chart. We begin by framing the market, and all we're doing is marking out our areas of supply and demand on the higher time frame, support and resistance from the history of the chart. Where has price turned? Where has it changed direction? Then we can go to the weekly chart where we want to find zones on the weekly that fall inside of our monthly, like we see here, here, here. Okay. Now we go a step further and we mark out our daily that, you guessed it, fall into the weekly and monthly. And all we're looking to do is, by buying here into these deep discount demand zones, selling into these supply zones, we are geared up for trades that ensure favorable risk to reward. How? Because we're always buying at discount and selling at premium prices. Think about it this way. When you go buy new shoes or clothes like Lululemon, we want to buy at cheap prices. We want to buy at discount. What about when selling your car or a baseball card? You want to sell high, sell at premium prices. Command a high price, which is known as premium. Treats are buying and selling in the markets the same way. Buy stocks on discount, liquidate, or sell short at higher prices or premium. You've heard of the buy low, sell high concept. Well, this is it. Let me put this into a non-market perspective. Look at this Sam's Club bottle of water. The cost, 75 cents. Look at this bottle of water by Voss. The cost, $7.50. A 90% premium to the Sam's Club bottle. Sam's Club is at a discount, Voss is at a premium. So putting this back into a trading or market perspective, just like when buying water or when selling water, we want to do the same in the market, the simple principles of supply and demand. So when we frame the market, let's recap. We are identifying our battlefield, our playground. We know within a glance that we are always buying at discount or selling at premium. Demand or support is a bullish bias. Supply or resistance is a bearish bias. Take a screenshot of this if you wish. A very, very important concept. So back to our checklist. Who here is finding this helpful so far? A simple 5-step framework to making educated and informed decisions. We are locating our top market. We are determining direction. We're framing that market to time entry, and then we are coming in and using a solid and sound risk management plan. Before you approach any trade, before we get too excited about the actual entry, what we must ask ourselves, what is our risk on the trade? What happens when we are wrong? Because as you know, there are times we will be wrong. You should always approach any trade as if you're going to be wrong. And here's how I do it. When I'm looking at risk, I don't look at it as a dollar amount. I look at it as a percentage of my account. Every time I'm prepping for a trade and trying to figure out how much money I could make, I look at it as a percent, and it better be higher than my risk. You have to ask yourself this before every position: can you afford the trade? Let me show you an example of what I mean. Let's take a $10,000 hypothetical account example. Let's say my account balance is $10,000. I'm going to risk 5% or $500, and let's say I'm going to buy 100 shares at $10. And let's say I plan to use a $3 stop. And if I'm risking $3 or $300, well, last time I checked, $300 is less than $500. I can afford the trade. The bottom line is this: if you can't afford the trade is too risky, move on. There's plenty of other opportunities out there. So it's absolutely essential to know your number. What is your risk number? I want to talk about what bad risk reward looks like. What would you consider a good win rate is? Type in the chat box what win rate would make you believe a trade, a percentage makes you a profitable trader. 90%, 80%, 100%, 50%, 80%. Depends on the risk reward. Exactly. Let's take 80%. Sounds great on paper, right? 80% sounds amazing, but let's look at the true numbers here. Let's look at the true numbers. You lost on trades 5 and 7. You won 8 times out of 10, but those 2 losing days took you net negative, okay? You lost 5 times the amount you were making on the other days. That's a recipe for disaster, and the stats prove it. Let's look at another one. 30% looks pretty lousy, right? You had losses on trades 1, 2, 4, 5, 6, 7, and 9. Winners on trades 3, 8, and 10. But guess what? You actually had a small net gain. Why? Because you had a 3-to-1 risk reward. If I told you, hey man, I've got a 30% win rate system, you guys would run for the hills and go look for the next system. Let's take 60%. Mid expectation, not 30, not 80, 60%. You lost on trades 2, 4, 5, and 7. You won on trades 1, 3, 6, 8, 9, and 10. Win rate was 60%, but you still came out with a gain of 8% because you had favorable risk to reward. Guys, I'm going to tell you, a 2-to-1 risk to reward with 60% win rate is very, very achievable. Let's look at a real case study. Let's say that we were looking to enter here. Why? Because that's what the data is telling us. It tells us that we have a cycle bottom at this period of the calendar year. We can enter with low risk entry. Does the trade meet our risk reward criteria? Well, let's say that I'm entering here. Let's say that the price of this is $100. Let's say that my risk is 5% or $5, but my software is telling me the average gain is 10%. Well, that's 2 times reward versus my risk at stake. So if I'm risking 5 to make 10, all things else considered, I trust the process and I take the trade in confidence. Now, up to this point, we've covered a lot. I suspect the reason you're here, the reason you're listening to me today is because you're sick and tired of being at the right place but the wrong time, or even worse, maybe the wrong place and the wrong time. Could you benefit from a trading compass? Could you benefit from knowing what market to trade, what direction to trade in, and how to time your entry and manage your risk? You see how you can benefit from the power of using a checklist, using the power of technology? You see why we should all be reaching out for the easy button? If you knew the exact days of the week, days of the month, the exact time of the year where there's likely an extreme high probability of a significant turning point in the market, it's physically impossible to do by hand. And why would you want to? Why would you want to when you can do all this with a click of a button? The data doesn't lie. History doesn't lie. We trade these turning points every single day, week, and month, every single year on multiple markets. This forecast here, you have years and years of fundamental data telling you in full color display the most significant tops and bottoms across hundreds of markets, where you stack the odds knowing the days of the week, days of the month, having knowledge most traders dream of, knowing the best months to be positioned, the performance expectations, stuff you can't make up, volatility, how volatile a market is or can be. This is perfect for options traders, giving you all the data you need to make data-driven decisions at your fingertips with the click of a mouse button. So let's recap what we've learned so far. So far, you've learned what to trade, how to determine direction, how to time your entry, and how to manage your trade using a proper risk to reward structure. So what I want to do is now put this all together. What if you could do all of this in 5 minutes or less? 5 minutes or less, where your typical trade day was more like this. You pour your hot cup of joe, you enjoy breakfast with your family because you just banked $4,500 on a TLT trade. You can keep washing dishes by hand, crushing coffee beans by hand, or search through thousands of tickers and websites for the latest hot stock tip. But why would you when you can hit the easy button? Speaking of easy buttons, I want to go into the software itself and show you how we can do this all in under 5 minutes. So here is a glimpse of the software. Type a 7 in the chat if you can see the software. We've got two scanners here. I've got an algo rank scanner based on AI, and we have a best trend seasonal scanner. So what I'm going to do here is come over here, pull up my little timer widget, and we're going to put 5 minutes, and we're going to hit start. So the first thing we're going to do, we're going to go to algo rank. Algo rank is going to bring up our scanner. Here is our top 5. These are our highest opportunities that our scanners are telling us updated on each day. So let's come down here. Let's go to this second stock. APLS is one I'm looking at for my live account. Let's hit the drop down. We see the equity line moving up. It's what we want to see. Average performance in August, 18.2%. A success rate of 100% with a max drawdown of about 20%. You say, okay, this data it looks good. It's in line with my objectives. Let's go to a chart though and see if it makes sense from a technical perspective. So we bring over the chart. Remember, this is where we frame the market. We frame the market. We go to a higher time frame. I'm going to go to a weekly. Notice that we'll get our little rectangle tool out. Notice that where we are in a higher time frame area of demand, or a reaction area of where price should go higher. We've already seen AI tell us that it should go higher. Let's pull up the seasonality data. Let's go to the seasonality data. By default, we can look at all years of data. This particular market only has 7 years, and so we can see 7 years of data. Notice that here in August, we tend to find a cycle low, and then we go higher. We can see trade days of the week for best positioning. We can use day of month for timing, buy on days of weakness, sell on days of strength, so on and so forth. And I really rushed through that because of time, but let's see where we're at. Boom, we did that less in a minute and a half. Pretty slick, right? Okay, so now what I'm going to do is go back to the slides. There you have it, guys. There you have it. You've seen the 5 steps, how it's done less than 5 minutes by leaning on the power of technology. So do you see how using a checklist can help you find better trades in less time to potentially make you a more profitable trader? These are your 5 steps right here if you want to take a snapshot. Now, here's how you can find more trades like this. I want to share with you how to find trades like this every single day, and that is why I'm extremely pleased to introduce Trend Insider, because I've just demonstrated in real time how anyone with a computer and internet connection can locate winning trades in less than 5 minutes. And I want you to be able to do this starting now. So I'm going to give you access to our Trend Insider Market Scanner dashboard. That gives you access to the Algo Rank Screener, Best Trends Analyzer, Predictive Forecast Modeling Suite, and Interactive Charting. Everything that gives you the easy button inside of the market, a total value of $19.97. Imagine when you log into your Trend Insider Hub and locate trade opportunities like this in Walmart. Got Walmart, things that weren't looking rosy, but Trend Insider is predicting a bullish turning point, and Walmart rallies 17.5%. Here we are back to Walmart. Everybody late to the party, jumping on board. Kramer is saying buy, but we aren't. Why? Because Trend Insider is forecasting a major top looming at this time frame. Guess what? Walmart makes the top, tanks 24% in a matter of days. We literally rode this trade to the upside, cashed out, and immediately were able to take advantage to the downside. While all the people that were buying up here at premium prices were left holding back. EEM, emerging markets. This point, EM was down 30% for the year. Your trading colleagues would say you're insane to buy this market, but we can confidently consider bullish positions because we trust the scanner, we trust the data, the entire process, and EM rallies 23%. Now, as part of this package, I'm also going to share with you my day trading strategy and my swing trading strategies. These strategies are not available anywhere else. Never shared them, are exclusive only to Trend Insider members. These two strategies alone, plus the Trend Insider software, will help you find and capitalize on trades like this in FedEx. Find and capitalize on trades like this in Bernardo Realty. Find and capitalize on trades like this in Dollar General. And not only are you getting the Trend Insider dashboard and scanner, the day and swing trading strategies, you're also getting our top 5 weekly alert picks, my 7-day playbook, trade entry checklist, live market analysis every week, and access to our private Telegram room. By utilizing this entire software bundle, all of the resources and guides and tools, direct weekly guidance in a live market with you every single week, helps put you in position for you to place a trade in confidence. Think about knowing where the most significant turning points were in the S&P every single year. Guys, this is the roadmap for the entire year. You could have sat down on January 1st and had the entire roadmap printed out for you. Whether this is the S&P, the NASDAQ, the Russell, 30-year bonds, crude, euro currency, Caterpillar, Alibaba, John Deere, Walmart, or whatever stock it is that you trade. Forecasting major tops and bottoms on this chart. Think about what's thrown at us every day. Earnings, inflation, government shutdowns, attacks, you name it. Look at what happened at these points as they played out. Take back your retirement account, your IRA, your 401k. You're shaving years of lost opportunity from the negative impact bear markets can do to long-only accounts. I'm showing you multiple examples of how swing traders can play these moves, playing it out in real time. Day traders use this data to know how to be positioned on exact days of the week, days of the month, which days have the highest odds of trading higher or lower. If you knew where any of those significant tops and bottoms were at any market on a specific day, don't you think you can use that data for daily directional bias? Guys, this is just one market, the E-mini S&P. This is over $78,000 of opportunity. The data and the charts speak for themselves. If all this did was prevent you from jumping into the market at the wrong time and taught you what to buy, what to sell, when to enter, when to exit in the market at the right time, if all this did was afford you the ability to make highly accurate decisions about trend, what market to trade, where to enter, would it be worth the investment? Would it be worth the investment to locate, analyze, and execute setups like this in crude oil? As one turning point in a single market can change your lifestyle. How about this trade in 30-year bonds? Predicting a near-term top. Predicting a near-term top, market sold off for 5 points, $5,000 a contract. Option traders trading TLT options. See why this is worth every penny at $9,600. We sell this scanner alone for $19.97, but today for the first 25 members, you can go to tradestrading.com/best and you can get started immediately today. We are limited this to 25 people. You're going to get the Trend Insider dashboard and scanner, daily swing trading strategy, top 5 weekly alert picks, 7-day playbook, trade entry checklist, live market analysis, and access to our private Telegram room for a one-time payment of 97 cents. Now, this is a 7-day trial to Trend Insider dashboard and scanner. You're going to get access to everything that I just showed you, all of the resources, the guides, the bonuses. Check it out. 7 days, 97 cents. You either see the power of it or you don't. And if you don't, I might have to check your pulse. Now, the offer link is tradestream.com/best. And I've just put that into the chat box for you. There you go. And this is for people that are serious, those that are action takers. You have the option of also getting a personal onboarding call because we believe in the customer experience. We want to make sure that you are fired up and ready to go. You don't have any problems. This is a cloud-based software, so there's no need to hook this up to your brokerage account or your platform. If you have access to the internet, you can pull up an internet or a URL on your PC, your laptop, your phone, your tablet, your library, or maybe you're on the road traveling, wherever you are, you can have full access to the software. So I think that I tried to get through exactly and end on time. I think I've done that job. If you guys have any other questions, you guys know how to reach out to us. We are real human beings. Here are 2 ways to get a hold of us: support@tradestream.com, or you can call 502-383-1182. And you go to tradestream.com/best to get started. I want to wish everybody the best of luck in trading and a great rest of the year. Thank you so much to the Traders Corner team for having me on. Take care, everybody. Great crowd, and we'll see you in the markets.
Great information, Silas. Thank you for sharing your top 3 secrets to being on the right side of the market with our audience today. That is some great information to put into practice and use as a foundation in our trading. Ladies and gentlemen, we have put Silas's special offer in the chat box. Thank you for making such a generous offer, Silas. We hope to have you back on Traders Corner. Well, I told you at the top of the show that we had a great lineup, and our next presenter is no exception. He was in the fire service for 40+ years. He started trading futures on his off days 40 years ago. He has a great presentation full of brand new cutting-edge material. Ladies and gentlemen, here to present Discipline Manager is Mr. Stephen Tremper of Tremper.com. Welcome back to Traders Corner, Steve.
Hi, Anthony. Can you hear me and see my screen okay? Am my mouse moving?
Yeah, we can see all that.
Good. All right. Yeah, thanks for having me. Rob's out, or I thought Rob was going to be here, but that's okay.
Yeah, Rob had a career change.
Oh, really? Oh.
Yeah, one of our presenters scalped him.
Okay. Well, welcome aboard then. Well, anyway, I just my intent here today is to hopefully just show some people how I kind of was able to struggle through some of the issues that I went through, and so that's what I'm here today. I want to just kind of give a little brief introduction on the Discipline Manager and some how to set your risk and goals and whatnot, and monitor your status and control. This is more for futures traders. I suppose it could be done on anything. It monitors the account. So I only trade futures, but I guess it wouldn't really matter as long as it monitors the account. So needless to say is, what is, and do you need a discipline manager? And, I want to explain and show how to establish the rules inside of the discipline manager and give some examples of what'll happen once limits are breached, and then the cost in today's special, along with how to download it. You can start running it right away and check it out. And then of course, any questions and answers. So a little bit about me real quick. I was in the fire service, retired in 2019. I started learning some futures, on my off days and, trying to figure out what to do. And then I just started playing around full time once I retired. But now I've I've done options and Forex and all that stuff, and I just strictly do the futures. It's just, to me, it's just easier, and it's just so much better. But it, to each his own, for sure. But I still, I don't want to come across as any expert or anything, because I still struggle with the psychological and the emotional. I'd be lying if I didn't. Things heat up, and so when the discipline manager says, and then obviously it's time to stop. But that's how it actually came to be. As far as just my issues, and I said there was really nothing out there that I really wanted to have, and so I just developed it, and that's how I got to be. And then Ninja approached me and said other people might want this, and so here I am. So in any event, here is the government required stuff. I don't necessarily know. I mean, we all know it's risky business, and futures and hypotheticals, et cetera, is all risk, but I don't necessarily know if I really need to show this, only because I'm not showing you any setups. I'm not going to trade for you. I'm not even telling you what or how to trade. If anything, the discipline manager is going to stop you from trading. So I don't necessarily know if that's even an issue to be needing here, but what money management and statistics, 90% of the traders fail. 80% lose, break even, some make money. Psychological emotions, the hope, the fear, the greed, that all plays into account, when you're dealing with money, and the lack of a trading plan. And I could tell you that I was there for a while. I don't need no rules, kind of thing. But after a while, it's like, yeah, you do need to kind of get a little bit more serious about it. So you could Google any of this. That's all I did. Just kind of Google some statistics, and it hasn't really changed much over the years. But people try to get in, and some make it and some don't. And now with the prop firms that are available out there, the funding firms, it makes it a little easier to use somebody else's money. But needless to say, it still rests with you. So the statistics as far as why did they fail, and it's just a failure to limit yourself and over trading. That was my issue long ago when I first started. I couldn't tell you. I mean, in the course of a day, I had 100 trades, and I wasn't even trying to scalp. It's crazy. So fear of missing out, just fear of missing everything. So you got to get in a little early instead of waiting. And then the waiting game, we're not traders, we're waiters. And that's my biggest issue. My worst four-letter word is the word wait. And I'm impatient. That's why I don't like trading the ES and even crude. I like NASDAQ. I need the adrenaline rush. So you have to master the ability, regardless of what you're trading, you have to master the ability to wait and self-control. And you got to follow your rules. So if you write down your rules, you got to make sure they all set up correctly. And it's just a matter of seeing there I am waiting. So needless to say, the psychological and the discipline part of it, help you deal with some of these losses and getting out too quickly or holding positions too long, thinking that things are going to turn around. We've all been there. I don't know if anybody's new here, how many years you have on, but we all go through this growing process until you kind of sit down and say, okay, I gotta start something different. Over trading, as I mentioned earlier, the discipline manager is not going to be able to help you with your psychology, but it will help you with your discipline, and that in turn then will lead to a healthier psychology. It's all about discipline, controlling the losses. Whenever your average winning day, whatever your average winning day is, you don't want to lose more than that on a bad day. And you've heard the old adage, surrender the fight, but not the battle. So you need to be able to kick back and say, okay, this just isn't my day, or at minimum, just go grab a bite to eat, or just take a walk around the block, whatever it might be. Just get out of it, get a different mindset. And then everybody has a different account size. So, 1% loss to you might not be the same as somebody else. So you all have to take that into it, with a grain of salt there. And, Warren Buffett once said, rule number 1, never lose money. Rule number 2, don't ever forget about rule number 1. And that's really about it. You got to protect the capital. That's the big thing. There's a lot of, a lot of ways to make money with different types of markets and strategies, et cetera, but you've just got to, it's all about controlling what you've got. And of the 4 choices, you've got the big win, the small losses, and the big losses. Eliminating that big loss from it will result in your psychology being much more at ease. Big wins, that's great, feel good. Small wins you can handle, small losses you can handle. Big wins are always the best, of course, obviously everybody likes that, but it's those big losses that you just keep moving your stop down or just keep going in because it's going to turn, and once it bleeds you dry, it'll turn, and but unfortunately you won't be able to get back in. So some of the things about stop losses, nobody knows the risk reward ratio because nobody knows what the reward is. Everybody tries to do a 1-to-1 or a 2-to-1 type of risk reward ratio, but we all know what the risk is. You put your stop there, but what's the reward? You could take it off at a certain area, at resistance or whatever the case may be, take your target off. But I could tell you, I've seen that thing blow through that so many times, it just keeps going without me, and then you're trying to backpedal, and it's so, I don't know, to me, it just, the reward part is kind of hard. You can go by averages and things like that and just do it, but it doesn't mean it's going to happen each time. Every day is different. So in any event, the risk side of the trade is just the only thing you really can manage, the stop losses. So you don't want to move your stop loss and adjust it back and forth, and a little here and there, a few ticks up and down is not a problem, but you don't really want to start moving it big out of the way just to let this thing marinate and go, because if it comes down, it's really hard to get back up there once it gets in a momentum to go against you. So you don't want to get caught up in revenge trading either. That's another one of my issues I had. I think I'm pretty much over that now, but I still have my issues, so I still like to, there was a point there years and years ago that, I was like, oh man, this just isn't for me, but I just had it in my mind that I know I could do this. I know I could do this. So you go through the curve, your psyche is part of it, the equity curve, it looks like fun when you get in and basically have no idea what you're doing. And you're like, oh crap, that's kind of hard. And before you know it, you're like, it kind of makes sense. I can kind of get this. And next thing you know, you did it, and then you get slapped back and you have to start all over again. So there's your own personal equity curve there. So that's how I kind of came up with the discipline manager. You got to protect yourself from you with your own personal manager. And the big companies have it, if you're having a bad day at one of the big companies, no boiler room or something, and then, manager comes by and say, hey, you're over your goal, so take the day off. That's what it is. So this is just electronic discipline manager. So consider yourself the CEO of a trading company. So you're your own trading business, and you're the CEO. So you delegate your rules to the discipline manager. You've hired this manager, and you allow it then to monitor your employees, which in fact are you also. So you have this manager monitoring your trading employees, and then if your trading employee, gets out of line one day, your discipline manager will, tap you on the shoulder and say, okay, I gotta control the company losses, because otherwise the CEO won't like it, and so you got to stop trading for the day, or at least for a timeout period, and then at the following, board meeting, you as the CEO, not the employee, but you as the CEO could, sit down and look over your numbers and your averages and things like that. And you could then change your risks and risk levels and rewards and things like that. You could change all that. And then for the next week, you can go into it. But what you don't want to do is you don't want to do it. You don't want to be changing things on the fly just because you get into the revenge type situation. So that's where that comes into play. So setting your money management rules, the discipline manager is designed to allow you to set your own hard daily and weekly drawdown limits along with your goals. And if your hard drawdown limits are hit, then you're done for the day or week, depending. I'll just talk about the day, but it's got day and weekly. But needless to say, when you get stopped out for the day, you're done until the next day, and then it resets it. And this is for new trades. And then so if you try to put on a new trade, it's just going to take it right off. It's just not going to allow you to do it. And then once your daily or weekly goal is hit, we'll go on the other side of it. Once your goal's hit, then you can continue to trade, but you have your allowance of how much you're set to give back, you know, whether you're chasing 50% or whatever it might be, or at least break even, you know, at minimum break even. So you may, I don't know if you're trading micros or whatever, let's say you're trading micros and your goal is, you know, $100 and you hit your $100 goal. Well, your drawdown limit would go back to break even. So I even like 90%, that way I can cover commissions and whatnot. But that way you can still trade, but now you're playing with house money for the gamblers out there. So now you're playing with the house money, and if you lose some and have some bad trades, then at least you'll be stopped and you really won't lose the day, even though you'll be disappointed. But you know, needless to say, you're not really going to hurt your big capital that you already earned. And that's called your dynamic drawdown limit, because it's dynamic. It moves along with your goal. It's based on the high amount of the week or the day, whatever your goal is set for. And then warning boxes will pop up if any of those goals or limits have been breached. And then you'll get a warning. It'll tell you, like if you're in a timeout, it'll tell you, when it starts. And so you got a 15-minute timeout. Now, there was a lot of discussion regarding the reset. I've had people call me up and say, is there a way to lock this out and so I cannot get back into it? Or there was somebody that said they wanted to be able to give a password to their spouse, so that way when they broke rules or whatever, that only the spouse could was more or less the manager. And after some legal questions and things like that, is that we cannot technically stop you from trading your own account, but it makes it really hard. You can reset it, but it's going to kind of get you out of the area by the time you shut everything down and all that. So at the end, it was realized that you're the owner and it's your business, and if you want to trade and blow up your account, you can, but again, it just makes it a little harder to do so. And with that said, if you do opt to reset, you have to reopen the discipline manager and navigate around and get the questions done, and then hit reset and go in there and then relaunch again. But then you have to change the rules again. So obviously, because if you hit 1,000, or if you have a $100 drawdown limit and you broke $100, well, then if you come right back in again, it's going to be $100 and you already hit it. And so it's just by resetting it, the computer does not necessarily going to reset your account. It's based on your account, with the broker. So for instance, right here, here's some settings. We'll go through some settings of the discipline manager. And so we've got, I think you can see my arrow. So you got your accounts up here. You're able to pull that drop down arrow and then pick the account or accounts that you want. Each account has its own rules. So you could be trading a micro on one, and then you could switch account and do minis on another, whatever it might be. So your drawdown warning is going to be I'm just using these hypothetical numbers, but $350 is your warning, and your halt is going to be $500, and your goal is going to be $500. So what'll happen is that when you get to 30% of once you hit your dynamic goal, then you get 30%, and then 50% is the halt. So for instance, down here, so you've lost $350 and you're going to get into a warning situation. And that is kind of like follows the circuit breakers that, if you've, seen the market stop, they'll stop the market for a while. So this is basically a 15-minute timeout, if you will. And it'll pop up and give you a warning saying, you can't trade, and it'll start the clock. And you can look at the clock and you could try to fake it, or you could just go get some coffee and, kind of shake it off. Or maybe see what you're doing and reevaluate a little bit, because you're not going to be able to put on another trade. And after that 15 minutes is done, then you come back and you start trading some more. If you get back up, no problem. Everything goes as planned. If you keep going down further and further and further, and you hit the 500 mark, then you're going to get the warning that pops up and says, you're done for the day. You've breached your goal, and that's it. for the day or the week, whichever it might be. So, and then the same holds true for the weekly. So, this is the daily and this is the weekly, but it's the same theory. Obviously, if you have, you double up your days. If you have 2 or 3 consecutive days of loss, you got to account for that. If it's going to go through a Monday through a Friday type of situation, and you blow out on Monday, you want to have a little bit of money. You can't trade on Monday, but your weekly will allow you to trade the next day. So the next day you're starting with a zero balance, but your weekly is still accounting in the background and follows those steps. There's features here that for instance, if you do breach a goal and you do get kicked out, you have an option here to use it on unrealized orders or not. By default, it's going to be realized, meaning for that is that if you, once you get out of a trade, it calculates your P&L and then you rather broke it or you didn't. If you want to do it on an unrealized, like in some prop firms and whatnot, if you're working on an unrealized P&L, that means it's going to take the P&L profit and loss intra-trade while you're still in it. And if you have that really tight, especially if you're trading NASDAQ, it can go up. You have to give it, some big swings. And so it can go up and, intra-trade and pop you out just to come right back down again. And technically you'd be safe, but unfortunately it popped you out at that unrealized high. So it's kind of an odd one it's kind of hard to follow that, but it works. And I prefer the realized. It makes it a little bit more easier when you're out. And the other one is that you close existing positions. So for instance, if you have 2 contracts and the first one is breached and you get a pop-up saying, hey, you've breached your goal, or you breached your limit and you're done. However, you still have 1 open trade. Well, this check mark right here will close that trade and you're done. If that's unchecked, it'll leave that second contract on, and you can hope and pray that it goes in your direction to get you out of that breached area. And if it does get you out of that, well, then you can continue on forward. But keep in mind that you're not going to be, if it does go against you, then you're down more than your goal, because it's based on your realized P&L. So, and then down at the bottom, it shows you the the P&L, your peak, where you've been, your P&L, losses and et cetera, and where you're at. And there's that reset button. It previously tracked. So if you hit reset, there's more to it than just that. You've got to go ahead and shut down and go set your things. So, but needless to say, it is available in there. So you can continue to trade technically, but you'll be out of the area. This is not an indicator placed on your chart. You don't need to have it open. Once you've set your rules and your rules are in play, then they're in the background. Now, if you want to keep it open to see stats and just to see what they are, you certainly can do that and watch your stats down at the bottom, but this will all be gray shaded. So you're not going to be able to make any changes, because when you see this red down here, that means that, well, the apply is gone. You don't even see it on this screen here. The only option you have is a cancel or reset, so you can't even apply anything new. But as I said, it does run in the background, so you don't need to actually see it all the time. So I already talked about this, as far as, assuming your drawdown warning is $350, your halt set for $500, and once you breach $350, the discipline manager will give you a circuit breaker saying, 15-minute timeout. And this is what one of the warnings will pop up as. Pulls up as an error. It's a ninja thing, but needless to say, it says the warning. It's got your clock on there. Oh, that's old. It's got your clock on there of when this is taking an effect, and that's it. So you're kind of stuck. After your 15-minute timeout, you'll be allowed to continue to trade until the drawdown halt is breached, or of course you get past that area and you get back into the profit. At that point, you're not going to be allowed to trade, and that's it. And then that's the warning that you're going to get if it's actually been halted and it's been hit, and I'll give you the date and time, and that's it. So if you, on a happier note, if you hit your goal and whatever your goal was, your goal has been reached, and you'll get the notice saying, hey, congratulations, your goal's been hit. Now your new daily drawdown limits are in effect. So those are different than, they can be different depending on how you set them up, but they're going to be different than before. Originally, the initial drawdown is a set price, and you can have a trailing if you want. But then once you've hit your goal, what do you want to do? Some people will say, I want to give back 0%. I mentioned earlier about if you want to play with house money, you can do 90%. Leave yourself a little buffer there for slippage and commissions. But needless to say, you don't want to give up. Basically, you could play with all house money, and then you're going to be stopped. But on the other hand, some people they're done. Their problem is they get excited and they feel they can conquer the world, and no, they've hit their goal, they're done, that's it. Day's done. It's 8 o'clock in the morning, we'll start day drinking. That's it. So that's a good thing. Hit your goal and you're done for the day, and you can continue to trade, but only by the percentage. If you allow 50% or 20, 30%, whatever you're dealing with, if you're able to continue to trade, but only not to exceed that amount there of the drawdown limits. Once your goal is hit, the dynamic drawdown is effective. So I talked about that, setting it to 0 and setting the default to 100 will basically allow your balance is breached, giving you 0 for the day. Most common drawdown rules I've seen is 50%, 33, and 25, and then I have seen a few zeros. They don't want to give back anything. They just want to be done for the day. So that's all in the settings there. Well, I think I've got some setting slides that we'll go back on here. As discussed earlier, the dynamic drawdown rules also incorporate the circuit breaker, the timeout, and it'll stop for 15 minutes. After the timeout, you can continue to trade. Unless your breach is halted, halts you. And then your second goal, you have 2 goals. And I'm assuming you're continuing to trade, so you have 2 goals. So you've reached your first goal. Let's say if you're doing micro, a lot of people do micros now. So let's say it's $100, and you've reached your $100 goal, and so now you're doing, let's say, 90%, and because you're going to play with house money now. So now you're going up, and now you hit $200, and that's your second goal. You hit $200. Well, do you really want to give back 90% of $200? So anytime you want to change your goals or change your drawback, you really notice you need to change your percentage. So that's how you have to kind of accomplish that. When you don't want to give back so much, you need to change your percentage, because giving back 100% of 200 there's a lot of money that could be lost, and you might not want to do that. So you might want to change your goal at that point, and when you get to 200 is to say 50%. So you're still trading with the $100. It's just that if you blow it, you're going to be leaving the day with $100. So that's what the whole purpose of and that was an afterthought. It came in after somebody suggested. A lot of these things come in. A few of these things came in with suggestions. So we realized the balance is $1,000. Your dynamic drawdown warning is 700. The halt is 500. Your realized balance is 1,500. Your dynamic warning is 1,050, would be the 30% for the timeout. And then once you've got your dynamic drawdown at 1,500 and you've halted at 50%, you're done at $750. So that's kind of an easy way to do it. Back in 2020, my gosh, 4 years ago already, we added these few other features in here. I don't think a lot of people are using them, but they were added because we had some questions, and we said, yeah, we should be able to put that in there. So 9999, I usually just set as I don't want it. A lot of people, I shouldn't say a lot, but there are some people that don't want warnings. Just let me go and let me deal with it until I get halted, and that's it. So if you don't want a warning, you would just put 9999 in there, and you'll never hit 9999 percentage. So you'll never get the warning. The daily and weekly dynamic drawdowns, level 1 and 2, that's what I was just talking about as far as the different levels that you could have, 1 and 2, and that's with that. And here's your setting. Here's that apply button I was saying. Once you've set your goals for that particular, whether it be playback, if you're playing around with playback or sim or whatever it might be, or a real account, then once your goals are done, you hit apply and you go from there. And then in 2021, we added a few more things, and this is because of the algos. I started getting into algos more, and one of my algos, I like to have the stops on there and it chases up, etc. And if you have a strategy, if you are using a strategy that doesn't use stops and it just closes the position when it hits a certain threshold, then you don't want to have that on because it'll stop you. So, but I like to see the stops. I like to know where they are. I like to chase them and go from there. And so I have that turned off. But I don't want naked orders on the other hand too. So if something happens with an algo, I think I've kind of overcome that now. We've cleaned some things up. But needless to say, it's there as a protection. I do know there was one company, a funding company, that had multiple licenses of this because they were trading multiple computers and all that, and so they had this on each computer and different accounts, etc. And they had that on there, and because they would leave at night and leave them running. So I do know one time he called me and said, "Thank God it saved me." But needless to say, here's your stats down there. So if you did want to leave this open, you could just shrink this box to this area, or actually just these 3 lines. And you could just stick it on your screen somewhere if you like to see it, but it's not really necessary. This file down here, this export, if you want to send me, I encourage you to send me your rules. So once you plug in your rules, just click that little button. It'll put a little small little TXT file on your desktop, and you can just email that to me and I'll tell you what's going to happen. And then you could decide if that's what you think was going to happen or if you were right and that's what's going to happen. So I can give you a little tutoring as far as that is concerned. Be happy to do it. So here's the settings in full. So I had to break it down into 2 pages because there's, so you've got your accounts, as we talked about, your different countries and time zone brokers. Some people want to use the I would say most of the time it's the broker at 5 o'clock, you stopped, but then some people want midnight, so it matches their broker's report. So you got to figure out what your computer clock is set for, and then what your broker's, what the broker says the day is over. And then as far as Ninja, their day starts at 5. So I think we talked about this already. So you've got some max trades 999, max business, that's all off. And then your daily goals 1,000, 50% you'll give back. And if you lose 75, you're done for the day. If you hit your goal of 15, then you don't, no warning at all. Just 25% is all you're going to get to play with, 25% of 1,500. And then the weekly is just a little bit bigger, only because it's got to, encompass the whole week. And closing positions, as we talked about, and then naked orders that we talked about. And then moving further on down the list, you got your other level. Oh, we start right here. Here it is right here. And then the stats that we talked about. And then you notice here was the apply. Oh, and the set as default too. So let's say, now, if you're running micros and minis on different accounts, you really can't use that. But if you're basically just doing one or the other, you could just set one to the way you like it and hit default. So then that way, when you flip accounts and switch it to the next account, all those settings will be in there, and then you can just tweak a few or however you want to do it. So that's that. One of the drawbacks that we have on this, our main obstacle with the Discipline Manager, it can't suppress market orders. We have it right here. I have a ticket here. If you want to inquire about it, maybe we'll get it to the top of the list, but it's been there for over 5 years. And so I don't think it's going to go it's not a high priority. But anyway, we can't suppress the market orders because they just don't do that. Market order is meant to go in, and that's the end of it. So you have to be careful, if your bot is triggering market orders, then if you put on a limit order, it's going to take it right off in a millisecond. It'll just can't do that. And or if you put a buy stop, something like that, if you put it out of the order, it'll recognize it in a flash of a second and take it right off. And so now you're going to get slick and you're going to say, all right, well, I'll just put on a market order and beat it. Well, you could do that, but you're only going to do it once or twice, because as soon as you put it on, it will instantly take it off, and now you got stuck with commissions and maybe some slippage. So if your bot is doing that, you want to be careful with that too, because if your bot is placing market orders after it's already been breached and the bot is still running, then it's going to keep triggering these orders, and it's going to, you know, just basically rack up some commissions. Now, Ninja does have a fail-safe in there that if orders are canceled, it will shut off the strategy. It'll shut off strategies. But there are some algorithms out there that run off indicators, and I'm not sure how that would work. But strategies will be turned off once they get kicked off. So anyway, it's one of the concerns that you have to be careful of, but feel free to monitor that's progress. So if that ever gets done, that we'll put that in there, so it'll suppress the market orders. But I can understand their reasoning for that, but it is what it is. So getting started. Currently, we have subscriptions, and you know, I've started, when I was starting trading, I can't tell you how many indicators and CDs and things like that I have of so many different you know, holy grails, and I couldn't even tell you where they are anymore. I've switched computers over the years, and I don't even think I have them on the computer anymore, you know. So, and I can't, you know, you're talking thousands of dollars on some of these things, and I just always had a problem with that. And so I have kind of succumbed to the realization, I feel I'm just better for me. I feel that if the price is a little bit lower, that people can come and go. And I have found that over the years, I have found that people do it for 3, 4, 5 months, with the exception of, you know, a business that was doing it. You know, they just have it longer. But needless to say, you have it for 3, 4, 5 months. And once you get knocked out a couple times and you kind of, you know, that's it. I've seen people come and go. I've seen people coming on it, and then they've mastered it. And then, you know, 5 months later, they come back and start another subscription. That's fine. But this way it's manageable. So if you have it for, you know, you get 20 free trials anyway, but I mean, after that, let's say you have it for a month or two and it's just not for you, or it's not doing what you think it's doing, you don't feel that you've got this, you know, $2,000 piece of equipment that's on your computer now that you're not going to use anymore. So to me, it just makes me feel better. So it is on a you know, a PayPal kind of thing, where it's just a subscription. You could do the annually or the monthly, and then and PayPal makes it very easy to take your money. So you just go in there under your wallet, and you can cancel subscriptions anytime. You don't need to call anybody. You just go to your wallet, and boom, it's off. That's all you have to do. It's all electronic, or you know, however they do it in the background. It's all done. So you can turn it on and off, and that's it. As far as how to get it, so the first thing you want to do is go to Tremper.com. And you would go to this the menu here on a this is a computer, but on a phone it's the little menu up here on the upper left hand corner. But anyway, go to algos, indicators. It used to be called tools, but we changed that to algos and indicators because that's what it is. And it's going to be down under the indicator section of it. And there is the discipline manager. So you would click on that, and under there, you know, read about it. Kind of just gives you a summary of what kind I said. Questions and answers, etc. There's an old webinar in there. Well, it's old. There's the download link, and then the contact form. So this download link is right here. And if you want to have subscription options, you can click this one right here. You don't need it to download. You can just download it, boom, and turn it on your computer and be running in five minutes once you put in your rules. So you could download it really easy. But after your trial period, if you want to come back to here, you would click on the subscriptions, and then you get your options of monthly and whatever. However, you know, for today, you know, because you're here and everybody's doing this, felt it obligated to do the thing, and so here we go. It's 30% off for a limited time only. As part of the discipline manager, you can download this the discount button, as I call it, on the discount code page. We have a super secret button down there, and it'll take off 30%, and it's going to expire. It'll expire next week. Actually, I think it's 7 days. I'm going to let it go 7 days until next week, since we got the weekend in there. So how will you find it? So you can go to, this is an old screen, but under referrals, now we have discount codes in there. But under referrals, you'll find it, and discount codes is there, and you'll go to discount codes, or here's the new version of it too right there. It's right down on the page there, just a hot link. Either way, if you go, let me go back. If you go back to the referrals, you'll see all these funding firms down here, by the way, if you need some more information on that. But then you go to discount codes, and this gets changed all the time, probably at least once a week or something like that. So you can sign up if you want to get into receive emails on this. They only go out once. They don't, it's not like it goes out all the time. Just when anything changes, it'll send out an email and tell you what the things are. There's some cautions, things you read. But anyway, down here, there's a discount code on this page right here. And if you click that link, it'll take you to the PayPal. And that will then be for the $34.95. Again, but that's after your 20-day trial. So here's the thing with the 20-day trial. So if you downloaded it today, it's going to give you 20 days of free trial. But then at the end of 20 days, you're going to come here, and it's not going to be $34.95 because the sale is already expired. So the sale is only good till next week, until next Wednesday. So you've only, in essence, only got a free trial of the 7 days if you want to get this price. And now once you get this price, it stays in effect until you cancel your subscription, even if the price goes up. I've never canceled everybody's subscription and had them renew. So if you get this price at $34.95 and you stay on for 10 years, well, that's what it is. And so that's one of the benefits. So the other final thing we need, though, is just a contact form, so we know your machine ID and the third-party ID. It's a third-party ID under help, under the Ninja platform. Go to help and then third-party ID, and there's some information on that. But just send us the contact information, and that's pretty much about it. So let me just run through, and there's my contact information if you need to get a hold of me. Here, I like this screen. How's that? There you go. There's the COVID. Let me look at some things here. So this is being recorded. That's old. Let me see. Renews 97. Oh, that's the other guy. Let's see. That's just 2019. Yeah, the stats are 2000. Yeah, these slides are a little on the old side. I probably should refresh some of these slides, but nothing's really changed. I mean, the market's still the market. But yes, I did see there's 2019 and 2020 in there. So how could I start it now? I think I just covered that. I think I covered that one already. Just go in there and download it. And then where do you find the Discipline Manager? On NinjaTrader 8. Oh, okay. So when you do install it, so you download the file, you go to Tools and import Ninja script like you would do anything, and then you double click on the file that you just downloaded, and it says successfully, trust the person that you're getting this from, and then you've successfully downloaded. Once you go there under under new, you'll go to down at the bottom is going to be Discipline Manager, and that will pop it up, and you can go ahead and put in your numbers in there, and then you can hit apply. And when you hit apply for that particular account, so I would suggest doing it on sim, or if it's live market, or if you're going to do playback over the weekend or whatever the case may be, go ahead, put it on that playback account, set your numbers, then take some winners, take some losers, do some things, and see what happens. Make some purposeful losses, and just to see what happens. What happens, and then if you do get timed out, you gotta come back 15 minutes later, and then just keep going and take some more losses until you get a halt if you want to play around with it that way, or make them just small for that matter too. So that's where you would find Discipline Manager after it is installed. As far as where do you find it, I think we already covered that. Discipline Manager is going to be under here, right there. So there's the file right there under Algos, and then Discipline Manager under it's listed under indicators, and then there's the file right there, download free trial right there. So I think that's how you can find that, and that's how you can find it once it's installed. So I think that covers everything, and I think my time is perfect. Anthony, you have any questions? Anybody else have any questions?
Yeah, thanks, Steve, and thanks for answering those questions. I put some links in there in the chat. If you want to put any other extra links in there, I was trying to follow what you were doing there. Feel free to do that.
Yeah. Oh, okay. Yeah, I can do that right now, real quick. Here.
Yeah.
I was watching this thing, the questions over here. I wasn't even looking at chat. Is there any chats in there?
Yeah, we got to manage both, man.
Oh, yeah. I didn't see them in here. I was only looking at the questions.
Hey, that's okay. Some people don't even look at the questions. So you're doing great.
I always look at chat because everybody talks about chat, but then always says, no, when WebEx or whatever this is, webinar, go to webinar.
Yeah,
you gotta look at questions. And so now I'm looking at questions and you're telling me that. All right, so is there any how do I even find them? Let me look.
I think you did great.
Did I cover it?
You answered everything. Yeah.
Yeah, okay. So let me just throw this one link in the chat just so we have it here. You can click on it. And that is, where's the chat? Right there. There's the discipline manager. And here is the discount codes, which you'll find there. And if you want to put your name on the list on that discount code, wherever that was, this one here, if you add your name to the list, then that way you'll be able to get some emails of anything upcoming, whether it be webinars or whatever you want to get, whatever you want your name on the list for. There's different lists. So if you want to follow Helix, which is the latest toy that we have going on, and latest meaning last few years, I should say, but under tools, I think I went too far. Where was that? No, I think I don't know, it's in there somewhere anyway.
Thank you, Steve. We do appreciate having you here on Traders Corner. Ladies and gentlemen, if your emotions are getting in the way of your trading, it's certainly happened to me many times and will happen again sometime in the future. Mr. Steven Tremper of Tremper.com has the solution. It's called the Discipline Manager. You can learn more by clicking on the links in the chat box or by going to www.tremper.com. That's www.tremper.com. His tools have been a game changer for so many traders struggling with over trading and many other emotional issues that traders commonly face. Thanks again, Steve, for making our audience such a generous offer today and taking time out of your schedule to join us. And come back and see us on Traders Corner. Yeah, we appreciate it.
Thank you much. Thanks for having me. All right, bye-bye.
Thank you. I just want to pause for a moment and thank everyone in attendance here today and joining us on Traders Corner, Stocks and Options Special Event. Our last three presentations are packed with great information, so let's keep the ball rolling. Our next presenter possesses more than 25 years experience in equity and options trading with expertise in technical analysis, using options to hedge and speculate, and portfolio asset management. He uses technical analysis, market internals, sentiment gauges, and volatility to trade stocks and options using master traders' techno-fundamental approach. Ladies and gentlemen, here to present Master Trader Buy and Sell Setups is Mr. Dan Gibby of Master Trader. Welcome back to Traders Corner, Dan.
Awesome. Thank you, Anthony. Hope everyone's having a great session so far. So yeah, this is going to be a fantastic session that you're going to see how easy and reliable this high probability setup is, that I literally say I can teach an 8-year-old. And instead of having to master it on and on, you're going to learn this beautiful setup quickly. We call it the buy and sell setups. We say on all time frames, but they're really better in trending markets. We'll get into it step by step. We at Master Trader are technical-based traders. There's many ways to skin the cat in the financial markets, and I define a successful trader as anybody who can consistently and systematically follow their approach in a disciplined and patient manner for their trading plan and make profits consistently, uptrending the P&L curve. So this is our approach as technical traders. It's really the combination of all of these concepts that make up the method, and that we determine that we have a high probability trade on the time frame that you're trading, and you calculate position size and manage in between. That's all that trading is. And the reason technical analysis works, to the dismay of I'll say mechanical traders, is because it reflects the total sum total of supply and demand of all market participants. So we say that charts don't lie. I mean, people lie, the financial statements lie, and charts don't. And so we say that is objective information, not subjective, which exists in your mind. It's objective, it's currently measurable and observable. So today we're going to talk about this picture being the buy and sell setup. Now, do I trade everyone, Dan? No, I just said we have these other concepts. Where is this buy and sell setup in connection with the trend? Is it on support or resistance? Is multiple time frames in analysis? Is it showing relative strength or weakness to the sector in the broader market? Volume and moving average analysis, we say it's secondary. We use it just to speed up the analysis, but we don't need it. And hey, what are the broader markets and market internals doing? Anthony, noted in my intro there, techno fundamentals. So market internals give us the heads up of important turning points. We have different ones for day trading, different ones for swing trading, and the recent mini crash and the spiders created tremendous opportunities for us, particularly as option sellers, which I'll show you some examples. And then I said position and money management, trader psychology, which the last speaker, that was his subject. And I say, hey, you gotta manage the nut behind the keyboard. The keyboard meaning us, trader psychology. How do you master that? With a trading plan, which includes a starting point of the systematic education, so you know what you're looking for, you know how to manage, you know what patterns you're trading. Let me just exit that. All right, let's continue. So now I'll tell little Johnny, these are the only possible 7 stock market events of anything that moves on any time frame. Uptrend, downtrend, sideways trend. We objectively define an uptrend as 2 or more higher pivot highs and higher pivot lows. Opposite downtrend, sideways, is 3 or more relatively equal highs or lows. That's objective. You can't argue with that. An uptrend break is objectively defined as you fail to make a higher pivot high, higher pivot low. So these are what we call the transitional phases. The buy setup is best in an uptrend. Sure, we can trade it. I like them here also. You have an initial breakout from a sideways trend, and many people get sucked into buying the initial breakout. We obviously have our approach, and we look for tells, bullish consolidation, price void. But this is the buy setup on support after an initial breakout to a new uptrend. So the buy setups are best in uptrends and pullbacks after initial breakouts. Sell setups, the opposite, downtrends, breakdowns. As technical-based traders, I said everything we do applies to any time frame you're trading, and then go back to that other slide and apply the other concepts. So these are just 9 pictures of what we call bullish setups. I'm not telling you the time frame. I'm not telling you the instrument. Every single one of these are bullish. But now I got to see where that picture is as with those other concepts. Trend, support and resistance, relative strength, weakness, multiple time frames. And you might be, some new people might be sitting there thinking, well, Dan, that's a lot of concepts you're making me go through before I push the button. And I'd rather listen to a red light, green light system or an indicator salesman who just tells me where to buy and sell. And he's selling his so-called proprietary snake oil goods. Well, my response to that is a couple of things. Number one, oscillators, trend lines, moving averages. Those are what we call subjective information. They are derived from underlying price and volume. So why look at a derivative of something that you can just focus on the objective information? And that's price and volume. And like I said, volume's even secondary. Price is king, as that first slide showed. So I'm not talking about all 9 of these today. We have many more. It's just these 9 fit beautifully on this slide. This is what we're going to focus on today. I promise you, you will walk away at 3 o'clock after this presentation, and you will have an amazing understanding of this high probability setup. Here's little Johnny, 8-year-old little Johnny in school. That's who I'm going to be talking to today, because this setup is that simple and powerful if you follow what I'm sharing with you today. Keep it simple, stupid method. Little Johnny, I need an uptrend. Higher pivot highs, higher pivot lows. We just defined that on the 7th stock market events page. Little Johnny, I want a controlled retracement from my V top. What the heck's a V top? It means it's a 2-bar reversal, not a retracement from a rounded top. That is common sense. Why? Because an uptrend is higher pivot highs, higher pivot lows. Got it. So these patterns, until they get climactic, far away from the major moving averages, the 20 and the 50, we are expecting new highs. So a new high from a V top, less supply, common sense, is easier to get through than a rounded top where you have multiple bars of resistance that it has to get through. Got it. Reversal at support. Reversals are going to take various flavors of reversal. On support, we define prior major pivot lows as major support, prior highs as minor support. We want these, as a general rule, to reverse on minor support, higher probability making a new high, because if it retraces all the way down to major support, we still trade them, but we don't expect a new high initially because the retracement was too deep. Common sense. On the first slide also, I didn't cover it then, but I will now. Every pattern we take, we want what's called a price void. That means for longs, you look to the left and there's insignificant resistance or consolidation or a bunch of bars. Common sense. You enter over the reversal bar, stop under the reversal bar, manage in between for your trading plan, which I'll just use simple terms here. After a multiple bar advance, you might want to sell half under a prior bar's low and then trail higher pivot low bars until it gets closer to your target or starts accelerating, and then you can go back to trail bar mode. Simple. Got it. Here's another picture of what we're talking about. Here's my uptrend. Higher pivot highs, higher pivot lows, minor support, major support. So I am looking for pictures of a reversal or buying. They come in different flavors. Here's a 3-bar reversal. We call this our trade setup, we call it location. Okay, so where is this turn happening? As I said, we want it to be on minor support. So I'm looking for pictures of buying on minor support. Got it. Notice how these 3 bars are a different picture than these 3 bars. Both pictures are buying. So my reversal is over this topping tail bar, stop under the low. Here, you know, these are 2 bullish bars, so I would enter over the high of this bar, stop under the low. This is just another way of explaining this in the concept of multiple time frame alignment. We call these micro stages and macro stages. So in our full seminar, you know, we obviously get into this in great detail. So we define a stage 1 as the consolidation, stage 2 is the uptrend, 3 is the topping pattern, stage 4 downtrend. So if you look at this in the macro uptrend, so let's just focus on the daily chart. So my macro is in an uptrend, little Johnny, higher pivot highs, higher pivot lows on the daily chart. Simple. We are looking, now this is a downtrend on a micro time frame. So we're looking to align this pullback in the smaller time frame and a reversal. We said that over and over. Go look at the buy setup definition. Once I get my reversal here, support, that's where I'm entering. Rest of the time, we're just going to look at as many examples as we have time for. And I doubt we'll have extra time, but if we do, then we can scan and see if we can find some new opportunity together. Markets have been on a tear here, so it's going to be really hard, in my opinion, to find quality buy setups like we're learning here today, again, for common sense, because the markets are up 9 days in a row or whatever it is. All right, so I'm always looking, before we have a setup, I am always looking at what happened before that's leading up to the setup, because that's going to add to the probability of this trade working out. So let's talk about it. All our daily charts are this simple. Red and green candlesticks, color-coded volume. See, I don't even need this volume. We use volume really just to look at spiking volume to see what the chart did, and it could be either an igniting type of move or ending type of move. But people who say, oh no, don't ever buy a breakout on low volume, or hey, this pattern is suspect because it has light volume. We don't believe in that. Stock's going to go up if demand is greater than supply, period. That's the only thing on planet Earth that's going to make anything go up. And I can explain that to little Johnny. Little Johnny, pretend we're at the flea market and you want to buy a straw hat and they're $10. Okay, what's going to make the price of that straw hat go up or down? Go up to $11, down to $9, an imbalance of supply and demand. What if they have 100,000 of these hats for sale at $10? Price ain't going up until you exhaust that supply. Then it goes higher. So see, I don't care about volume. It's all about supply and demand. All right, so I got rising 20, rising 50, rising 200. So that's telling me I have and the 20 is in a short-term trend, 50 intermediate-term trend, and 200 long-term trend. So all of these are in agreement. They're up. So with this, just by looking at these moving averages, I am looking for whenever I get a bullish setup. And, I'm not going to go back here and tell you, we aren't talking about that today. We're talking about buy setups. But here, this rectangle box, it was consolidating for 2.5 weeks. Had a closing breakout with a range expansion bar, closing breakout. This isn't today's subject, but could I have bought this as an initial breakout? Answer, yes. I would probably wait till the day's close to make sure it's going to hold the gains, and it did. So this would be a pattern I would say, buy a half lot into the close, buy over the high, the back half the next day. That's an initial breakout. Does this meet our definition, little Johnny? Well, let's see. I have an uptrend, rising 20 above rising 50. Check. Do I have a controlled retracement from a V top? Here's my V top. Oh, and I really didn't describe yet controlled retracement. What I mean by controlled retracement is a controlled red bars, relatively equal opens and closes. I have lower high bars, lower low bars. See, this is controlled profit taking. It's not violent retracement. Like this is a good example over here. This is violent retracement. That is not what we want. Got it. Reversal at support. Got it. I got a bottoming tail. The closing price closed above the yesterday's opening price. Bottoming tail on minor support. I enter over the high, stop under the low, manage in between. Just going to go through as many examples as I can here. And you know, these are all real trades that we give subscribers real time. Well, they're either at nighttime or in the weekend in our letter. But we have 3 different advisory letters for stocks, options, and ETFs, and we use Telegram, so it works all over the world instantly. And we track all of our open trades, all of our closed trades in the members area. Everything we do is there for you to look at. And we don't just say, hey, buy this and you know, and you know, have a good time. We give the date, the symbol, the stock or option trade. And here's important. We give the technical reason for explaining our recommendation, number 1, but number 2, so subscribers can learn in the process. And then we give an initial stop loss, and then we give management in between, updated in Telegram. So this is a closed trade because obviously it's showing P&L. So this was a very simple 4-day swing trade. Swing trading to us is we're trying to get the meat out of the coconut for the swings in based on like 2 to 10 days. And we have an ETF letter that we have a longer holding period that we trade primarily off the weekly chart. So we're going for bigger gains, longer holding periods, and just trade ETFs. So this one, we bought the stock. What's the technical setup? Right here. Buy setup on minor support after a breakout at the 20 MA. Here's my closing breakout. Gapped up. So I couldn't enter. I mean, you can do whatever you want with proper position sizing. So here's my red candlestick. So it opened way up here. My stop's under here. I'm waiting. I don't like that entry. Got our buy set up, got our reversal on minor support, range expansion engulfing bar, buy over the high, stop low. Now, some of you might be asking, well, Dan, why didn't you buy over this doji bar? And my response to you is, excellent question. I would say you could do half, but the reversal that we're looking for, I want it to be a confident reversal. So that is a tiny little doji bar. That's not a 3-bar reversal. It's not a gap reversal. So I'm just not as confident of that. After this bar closed like this, very confident, very confident. Buy over the high, stop under the low. Here again, wide range closing breakout, but it's extended now. Look how far. This was a big day. It's the biggest green bar on the whole chart, except maybe this one over here. But look at the moving averages. We're all in downtrends here. This was a short-term bounce and a long-term downtrend. Now this is a big bottoming pattern. It got above the 20 and 50. All of this is support. Bullish gap. Now this would be on our gap list this particular day as a gap breakout. And obviously this is not a gap trading session here today, but we love gap trading. And we have a live green trading room. We open it up at 9 a.m. Eastern time, and we post it on YouTube, so you can go there and watch us. Hundreds of people do. Every morning, my partner Greg Capper and he starts with a broader market review, sectors, the techno fundamentals, and I look at gap trades, open trades, all tier 1 trades of interest. So this would be on my gap trading list, and then I would say, hey, let's buy some 5-minute high, 10, 30-minute high. I don't know. I'd need a 5-minute chart. So now gapped up, V top, uptrend, short-term uptrend. It's above the 20 and 50. So I really don't care about the 200 on these. V top, controlled retracement, 3-bar reversal. 3-bar reversal. Would I have bought over the high of this first green bar? The answer, no, based on what I just said on the prior slide. I don't have a confident turn yet because of this ugly WRB. 3-bar reversal, very confident. I would buy that into the close because it traded over the high of this red bar. Bought the stock, buy setup, bullish reversal, and although I'm not showing it, it's a bullish 1, 2, 3 on the weekly chart. So remember, that was one of our concepts, is multiple time frame alignment. So I'm not trading the weekly chart, I'm trading the daily, but that supports it. Gapped up to 59 here, pre-market. So this tells you we were in this day, of course, because we sold half here pre-market and trailed the rest. Look, we were out of this one in 2 days. The next day it accelerated. We just sold into the close. Take the money. Greg has a saying, same but different. And what that means is, look, I can show you 1,000 examples, but they're not going to set up identically for obvious reasons. But you will see that it's the same definition of checklist that I gave you. It's just a matter of you having the seasoning to identify the high quality ones. So here, now this one was a little bit more questionable retracement from a V top, because this is not a simple V like the other ones. It's kind of a failed breakout, so to speak. But this is controlled. This is controlled retracement. I got a big bottoming tail at the 20. Now this is a confident reversal. Why? Because it's a big bottoming tail. And why is that a confident turn? Well, at the day's low, that was a very ugly red bar. The bulls stepped up I'm in huge support over here, stepped up and closed above the opening price because I got a green real body with a bottoming tail. So we bought over the high of the bottoming tail. Look, 2-day game, bought stock, $800. Same but different. Beautiful moving averages, closing breakout. Could I have bought this closing breakout over this bar? Yes, but that's not today's session. Controlled retracement from a V top, bottoming tail on support, buy over the high, stop under the low, 8.5% return, sold into strength. Same but different, same but different. This one, actually, that's a repeat. We've talked about that one. So this one, breakout, went up some more. This one's a little sloppier. You know, I purposely don't show you perfection, but it's the same concept. So then we trade options. When we have what I call a directional setup, which means, hey, this is good to go. I'm willing to buy or short the stock as a directional swing trade. Then I always go to the option table and see if the calls and puts are liquid. Because if they are, I prefer trading options because of leverage and limited risk. So I'm buying the 37.5 in the money calls. We're technical based traders for option trading also. It's just a different instrument to make money. And we also sell options for weekly income, which you cannot do just trading stock alone. So buying and selling options are phenomenal if you know what you're doing. So this one we bought in the money calls as a directional. Got a beautiful short-term run. Look at this. We took our money in 2 days, 47% return. Our max loss is what you pay for a call or put. And we only paid $340 for one contract, as opposed to, you know, the margin on buying a $41 stock. This is an example of a deep retracement, but it's still a buy setup. I told you, we still trade them, but I don't expect a new high. This thing fell from 180 to 153. Do I really magically think it's going right back up to 180? The answer is no, I don't. The pattern doesn't suggest that. But the pattern does suggest a beautiful 3-bar turn at the 50 MA. I got all these overlapping bars here, minor support, range expansion. Over this bar's high, the odds are staggeringly high that it's going higher. Stop under the low. Now this one, you know, maybe we did both. Many times we buy the stock and do option selling. So this one, we sold the 137 puts. Look at this, folks. You know, you can, particularly when volatility is high, which is why last week in our 2 advisory letters, we were 49 out of 50 of all the trades that we gave. I'm sorry, 39 out of 40 that we gave all the trades, because of that volatility was off the chart, and we had a field day of selling naked puts and put spreads. So based on this pattern, the 137s are, look, $3 under 140. Buy setup and wide range engulfing reversal, far out of the money, high volatility premium. This one's in the earnings as well. Volatility premium trade into earnings. So of course you have gap risk. So I always give this a disclaimer, don't take it unless you know what you're doing. And you know, so yeah, if this did not have earnings, I would have definitely bought the stock as a directional trade, or options if they're liquid. Same but different. You all, look, it's in a short to intermediate term downtrend, explosive move up, bullish price action, building a base of support, another breakout, controlled retracement, small gap down, range expansion, engulfing bar, minor support. Or did you all appreciate already? We've spent 34 minutes together is all. We have 11 minutes to go. And look how much you've learned already. So it's same but different. I'll continue as for another 11 minutes, but you've already learned a ton. 15-minute chart on spiders. Wide range breakdown under the 20. I'm in a downtrend. Everybody who has technical, objective common sense has a bearish bias right now. Uh-oh. I got a closing breakout. So this is what we call a downside shakeout. It negated it. Using technical analysis forces you to focus on what is, not what you want it to be. And you must change your opinion based on facts. So I didn't have a setup here. Maybe if I had a bear 1, 2, 3 continuation, or a little sell setup here and rolled over, I would be looking for shorts. Now I'm looking for longs because this is a big price void because of this momentum move down. Guess what? Here's my little buy setup. Here's my 3-bar controlled retracement within the top half of this WRB engulfing bar. Buy over the high of that. Stop under it. It didn't rock, but that's your setup. This is a live green trading room that I mentioned to you. We have a no-brainer trial for $7. Spend an entire week with us. Watch us walk the talk. Here I'm talking about beautiful slides and, everyone does that and say, oh, look what I did here and look what I did here. But of course we take stop losses. Our approach is 85% successful. So, we stop out of 15% of them when the technical setup doesn't work. Go to mastertrader.com/green trial. My partner, Greg Capra, is an icon in technical analysis. He's been at it 30 years. He was trading before they had direct access platforms. He was plotting things. So amazing technician, and 2 of us run the room, and you get to interact with us all day long. Watch us trade, scan, answer questions. Same but different, same but different. Controlled retracement. This gap reversal bar is my confident turn. So remember some of those other examples where I said, I wouldn't have bought over that bar because I didn't have the confidence. So now I got the confidence. This is what we call a range expansion. It's actually a closing, the close is pretty close to that. So it's a bullish turn. Over the high, buy setup, negative gap, wide range bar reversal at the 20 MA, manage in between, selling the strength, same but different, same but different. Explosion, buy setup, 3-bar reversal, same but different. Igniting bar. I love these patterns. It's still a buy setup, still meets the definition of everything that we talked about, but the difference in this little pattern is that it's staying in the upper 80% of this wide range bar. This is power. Power, range expansion, wide range bar at the rising 20. And it even took out these prior lows. Oh, and these blue and red dots, by the way, The computer just spits them out as our major pivot highs and lows. So remember, little Johnny uptrend, higher pivot highs and lows. And so I have my retracement here, 1, 2, 3 bars, and it stayed in the upper 80% of that. That is power. Why is that power? Because it's not retracing after this big move. Buy over this green bar, stop under the low. Manage in between, 8-day swing trade, 15% return. Do these apply to the opposite side? Of course they do. Of course they do. So I got a declining 20, flat 50, bear 180, breakdown. Here's my retracement and reversal at resistance. Multi-bar turn, short under the low, stop over the high, manage in between. What did we do on this one? So this one we bought what's called a bear put debit spread. So we buy one in the money put, we sell an out of the money put that lowers the cost basis of the trade. 4-bar fall, support, take our money. Look at this, 55% return using this bear debit spread strategy. Same but different. Did you all see that? I mean, this is sloppy, but do you remember the slide at the top where we said we have a downtrend, little Johnny, right? Right. Lower pivot highs, lower pivot lows. Do I have a retracement and reversal at resistance? Yes. I have 1, 2, 3 bar reversal here with this red cone. Short under the low, short under this red bar. I'd be adding here because this topping tail took out this high and closed at the low. That is an excellent place to add. In fact, it looks like that was our original entry. So my arrow is wrong. I got to move the arrow over 1 bar. Manage in between, it's approaching major support. 72% return in buying $21 put options. Sold half, 46% return, 2 days. So spiders here, I'm just showing you how we use this concept for day trading. 15 minutes, it's had a big run, reversed at major resistance, came down. Now this is a sloppy buy setup, sloppy as can be. And I would not take that one after this reversal and big run. So that is a poor quality buy setup. Broke down, here's my sell setup on a 15-minute chart. Could I just trade off the 15-minute chart? Short under the low of this bar, stop over the high, 100%. 5-minute chart is just a microscope of the 15, and notice the M top. So aggressive traders can always go down one smaller time frame to perfect the entry on the time frame that they're trading. So that would be right on this M top right here in this red bar would be your early entry to that 15-minute circuit. This is a sell setup, but this one was higher probability because this is a sell setup. I don't like this. Remember I said controlled retracement? This bar is power. So I wouldn't take that one, but now I broke down my sell setup, range expansion. There you have it, 3-day swing trade. Look at this. This chart had four sell setups. Look at that. They all had different flavors of a turn. Like this one was a gap down. This one, range expansion. This one, 2 topping tails. This one, a 180 reversal. And they all have price voids, insignificant support. And this one, gap down, sell setup. We bought puts on this one, 149% return on buying puts. I'm in a downtrend. Same but different. This one, we bought a barefoot debit spread. This one, we did 2 trades. Sell setup. Little Johnny, Downtrend, yes. Controlled retracement reversal at minor resistance, check. 3-bar reversal, check. Price void, check. We bought put options, and we also sold an out of the money bear call credit spread. This is our income trade. So we had 2 option trades on the same compelling pattern. Hope you all enjoyed this information, folks, as much as I enjoyed delivering it to you. Greg, my partner, put together this amazing special, amazing value. We have a top-down approach to the markets, which covers stocks, options, intro to the market. If you don't know what a stock is or how to spell it, I mean, this is a fantastic intro course. Greg's swing trading course, whether you've been trading, new to trading or been trading 20 years, the most amazing seminar of showing you objective price analysis and a logical concept building approach, 30 days of our swing ladder, nightly videos. We have lifetime coaching. Greg gives you his scans and Telechart 2000 gives them to you. It's not our platform, but he gives you the scans, and then we'll give you our last coaching also. Amazing value. mastertrader.com/swinger. Any questions? Email me, dan@mastertrader.com. Thanks for your attention, and happy trading. Good trading, everyone. See you soon.
Thanks, Dan. You and Greg Capra have really provided the trading community with incredible, valuable services and education for the last 25 years. The technical bar by bar analysis you guys do at Master Trader is second to none. Love your presentation on buy and sell setups. Great stuff, and thank you so much for being here on Traders Corner. Ladies and gentlemen, that was Mr. Dan Gibby of Master Trader, and you can learn more by clicking on the links in the chat box, or you could find Mr. Dan Gibby and Greg Capra at mastertrader.com. Thanks again, Dan. Please come back and see us on Traders Corner. Our next presenter is a crowd favorite with uncanny insight on the geometric patterns the financial markets form. He was born and raised in New York, where he fell in love with trading while visiting his then girlfriend, now wife Lisa, at her job on the NYMEX floor in the fall of 1982. In 2008, he moved from New York to Las Vegas and established Omni Trading Academy, where he teaches select students the Omni triangulation and trading. He is filled with vast knowledge of trading, analysis, and trend formation. By simply following trend lines and identifying formations, the chart will tell you all you need to know. As he has said many times before, the chart is just a graphical representation of the day's news. Ladies and gentlemen, here to present, according to the charts, not the word on the street, is the great Mr. Oscar Carboni of Omni Trading Academy. Welcome, Oscar.
Thank you. Making sure audio and video are working. Are we good?
We are good.
All right. So, of course, thank you for the invite to Traders Corner. We love doing these events. I believe that these events are mostly geared to, and tell me if I'm wrong, but you want us to help teach people, your traders and our followers, what's going on out there, how to use the charts, and how you can make money moving forward, right? That's what I've got planned for us on this event. So I have a live trading site with a live trading room. It's really easy to get to. I run this thing 24 hours a day because here's what it really is. I live my life watching charts and trading, and I allow a lot of traders to stand over my shoulder and live their lives with me. So this is literally livewithoscar.com instead of live, because I am always in this live trading room, whether my camera is on or not. You will always find me in here. I'm waving to you right now. It's live at the moment. And my traders from around the world will gather here, and you can find me very easily at livewithoscar.com. And of course, I put out trading recommendations every day, which tell you where we're getting in, where we're getting out. I am no kid at this. I am not selling you guys a system. I have nothing to sell you today at all whatsoever. I'm only going to teach you what these charts mean and how you can make money moving forward. If you want to hang out with me, just go to livewithoscar.com and hang out with me. If you really wanted to get to know me, every 3 months, I open up a 4-day seminar. I only bring in 3, sometimes 4 people, 5, I think 6 is the most I've ever brought in at once. And I teach them my Omni method, Oscar's Market Navigational Indicator. You show up in Vegas on a Thursday night, you're with me all day Friday, all day Saturday, all day Sunday, all day Monday. You go home with a brand new laptop, my knowledge, and then you've got continued education when you go home. All of that can be found at livewithoscar.com or Omni Bootcamp. My next Omni Camp literally is September 19th. But enough of that, because that's not what you're here for. You're here for something different. Now, here's what has gotten to me over these last few weeks, over the last few months, and emails have come in and phone calls, and really concerned traders that are friends of mine for years have said to me, Oscar, what is going on? I've heard endless chat about AI-driven programs taking over the market. Algorithms are just as scary, overbearing. We don't know what to do. Humans aren't allowed to get this right anymore. It is nonsense, kids. I promise you, AI and any algorithm is using the exact same information that we have on charts, but we're human. We are much better than AI. I thought I would address this issue in today's segment. I would like to prove, as I do in these live events over and over, that technical analysis is still the most powerful tool out there for deciphering market direction moving forward. In fact, not only is AI literally just taking everything you see on this chart and coming up with the same stuff we can come up with, I promise you, but it's got a problem. AI lacks a soul. What does that mean? I'm going to take you, forget about trading for the moment. AI, you trading against AI, it's scary, it knows more than me. Well, guess what? How many of you drive a car? I'm sure many of you are saying yes right now. You drive cars, right? How many of you have been on the road? You've got a car in front of you. The guy puts his right blinker on, and you know instinctively this idiot's going left. He's not going right. I have been in this car too many times. I've seen this before. You instinctively know the guy's going to make a left instead of a right. He does 99% of the time. How many of you have experienced that sitting in your car? How could AI possibly get that right? How could AI possibly get that one right? Well, the same thing happens with trading. AI sees there's a big setup. It understands all the numbers, right? Everything's tabulated. News is coming out. AI knows if the news is bullish, it goes up. News comes out bullish, and the market cracks for no reason at all. Why? Because we're humans, and we do things that make no sense at all. And AI cannot figure out how to make sense of things that don't make sense. I promise you, and I'm going to show it to you now, AI cannot do anything that us humans can't do. You are not going to be chased out of these markets by AI, by algorithms, by anything automated. We are better than that. Technical analysis is much better than that. Let me show you an example of the power and accuracy of technical analysis. I do a YouTube video just about every night. And in that video, it tells you what will happen the next day and how to make money doing that. We are day traders. We're out at the close every day. New video comes out. What will happen the next day? Well, last week, not this week, but last week, we were in a frenzy of downward movement. You can see it right here, a frenzy of downward movement. The street started to panic. The news talked about, forget about a soft landing. We're in a new recession. The Fed's got it wrong. Oh my God, you started to hear the nonsense, right? And what did I do? Last week, on Sunday night, I came out with a video and said, everyone calm down. During this week, last week, I will put out a video. In that video, I will have a bunch of charts that will explain to you why this week we're going to go back up, the week we're in now. Stop worrying about that coming down. I've got absolute unequivocal evidence just using charts that we're going to head back up this week. Last week, we were in the middle of a spiral. Why are we back up this week? How could I have known that? I can't possibly know it, but I'm going to show you something. If you don't mind, I need you to humor me for just a few moments. I did a video, if I can, I think I've got it queued up here. I did a video on Monday night for Tuesday last week. In that video, I promised I would show you why the market has to go back up this week and for you to not panic into last week. So the video I'm going to show you, please humor me and watch this. It's a short video. It will explain everything I looked at last week. Then we're going to move into where we are right now. You're going to take a little ride with me, and I'm going to show you why we're going up and that we will continue. So if you don't mind, this was put out last Monday night for Tuesday, or Tuesday night for Wednesday, right there, because I promised later in the week I would send out a video like this to help calm things down. So if you don't mind, you're going to have to spend a few moments watching this, but it's the only way for me to set up the rest of this webinar. Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Traders, I know I promised I'd get out in front of the camera tonight in my video last night, but what I didn't remember was today was a special occasion and my family wanted to take me out for dinner. I forgot all about that. So we went out to dinner, but I still wanted to come back and show you what I promised I would show you this week. Now remember, for the last 2 days, today's Tuesday night, I've been telling you there is no need to panic. I will offer charts later this week that will counteract the stock market's recent drop. As day traders, we will take this one day at a time. I made you that promise. Let's see if I can deliver. You are looking at the E-mini S&P for trading on Wednesday, August 8th, 2024. This is video number 2785. Please remember how risky it is. Risky, 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 risky. Never trade without stops and put those stops in first. The Omni killed it once again. Knew exactly where to get us in today, where to get us out with profit, then sidestep the market. So 2 days in a row, the Omni has killed it for us. And we'll see what's going to happen for trading on Wednesday. If you're not trading properly, make sure you join the Omni recommendations, the platinum recommendations at Live with Oscar. I'll send you signals when it's time to get in and out. All right, so E-mini S&P. Last night's video was titled The 200 Ball Moving Average, remember? And look what happened. We had an up day. So far, so good. But let's look around. That's not the only chart. Once again, John's transportation average after that monstrous dump, you get to the 200 ball moving average, and what happens? You get an up day. Interesting. Wall Street is watching, just like I told you in last night's video. Take a look at this. NASDAQ. We had the ugly bear flag. It developed. Boom, it worked. Blah, blah, blah. All of that's gone now. You know why? Because we're doing something new. This is what we're doing now. We've gotten to the 200 ball moving average, and so far, nice hold. Very good. Why would that be? We'll get there, I promise. If you like what you're about to see, please like, share, and subscribe to these videos all over the internet. And of course, you can be with me in my live trading room anytime you want at livewithoscar.com. Why would these markets start to hold? I promised you Monday and Tuesday I would show you charts to make you feel more comfortable about that happening. Let's continue looking. So let's move now to another chart. The Russell 2000. What happened with the Russell 2000? You recall we just did a, will they buy it now at the 200 ball moving average, or will they sell it through? And I will say most of you, and hundreds of you answered, most of you said, hey, they'll buy it right down here. Well, so far you've been right for trading on Tuesday, and maybe you're going to get it right for trading on Wednesday, because this is another nice hold at the 200 ball moving average. So why is all of this holding? Well, let me show you what the purpose of this video is. I told you there's no need to panic, right? I will show you charts to counteract the stock market's drop. Well, take a look. This is the 30-year T-bond market. 30-year T-bond market has interest rates dropping like crazy at the moment. What does that mean? Well, the 30-year T-bonds, when they drop, interest rates automatically rise. Jerome Powell and the Fed does not have to say or do a word. They absolutely, positively rise when 30-year bonds drop. Well, when the 30-year bonds explode like this, interest rates are dropping. Now, when interest rates drop, this shows interest rates are dropping, this chart, right? Well, that is a shot in the arm stimulus to almost every and all companies out there. The second interest rates drop like this, it dramatically helps companies' bottom lines. It helps the price of their stock, because a lot of companies are so intertwined with credit and borrowing and also lending in the form of corporate bonds that the slightest moves in interest rates, moving up hurts the market, moving down helps the market. That's just about every stock that exists. Well, you've got help. Huge stimulus taking place right now. And this didn't happen just yesterday. It's been going on for a while, from here up, up, up. And that's what really drove rates down. Now that is a stimulus. It's a shot in the arm to any company you've ever worked with or seen listed on the stock market. What else is giving us a shot in the arm for all these companies? I'll show you right now. This guy is the next shot in the arm, crude oil. This is an absolute immediate stimulus to any and all companies that produce a product. Any company that produces a product, they've just seen the price of their carry charge, meaning their interest rates that they're paying to borrow money and to lend money, have gotten cheaper, making their stocks worth more. And the cost of traveling, the cost of transportation, moving raw materials from point A to point B, building the product, shipping it to point C, that has all gotten dramatically cheaper. Crude was 84.50, it's 71.67 when it got down here 2 days ago. That is a huge move. I am telling you that the other things happening in the markets, plus the technical 200 ball moving average, plus what's happening with crude and bonds, lower rates and lower transportation costs will counteract the drop. And what does that mean? Well, that means that this market should catch its legs and start to move higher. Will it? Well, we've got stops in if we're going to trade, just in case it doesn't, but the evidence points to it. And I started telling you about this evidence on Monday. It's only Tuesday evening for Wednesday's trading, and it's already starting to shape up. Now, will this take place immediately this week, or will we still hang around here and explode next week? That's up to the markets, but I am telling you what I just showed you tonight should calm you down and make you recognize that we're not in a serious crash just yet. Now, if these decide to turn around and have a massive drop and go through here and keep going lower, of course, we'll reassess. But that's not what happened. The street came in and bought at the 200 ball moving average. Bonds are dropping, or rates are dropping dramatically as bonds go up in price. Crude is dropping dramatically as the cost of transportation goes down. Something like this is built out of stocks. The stocks that make up the S&P, their bottom line is getting better, and you're seeing that recovery. Same thing, of course, if you look at the Dow, you're going to get the same sort of action. If the market holds here and interest rates continue to do what they're doing, the buyers will come back in. The 200 ball moving average, we know the street watches, right? It's not magic, but the street watches it. And a lot of times, if it holds, you go back up. If it breaks, you will continue lower. At this point, it's held and put a straight, nice up day in, nice green bar, and it looks like it wants to hold from here, at least according to my Omni. And then there's this. If the rest of it didn't show you, the 200 ball moving average has some meaning. Look at what happened on Bitcoin. The same thing, Bitcoin chart, right? Bitcoin daily, inside this massive flag, it held, right? It stops at the top, holds at the bottom, stops at the top, holds at the bottom, stops at the top. Well, it took out stops at the bottom, but it went back above, and now it's 2 days above the 200 ball moving average already. Nice hold, wonderful hold, right? So far so good. Don't panic out there. We will take this one day at a time. This evidence should at least calm you down, if nothing else. Now, again, will it happen this week or next week? I can't determine that for sure. It looks like it should start this week, but that stimulus I just showed you will push the markets back up. Traders, that was last week. Okay, so I gave out my evidence. I showed my OmniX around the world. What should happen? This is where we were, and here's what's happened since. Is that not fantastic analysis? I mean, come on, look at this thing. It held exactly where it was supposed to. Now it's above the 200 ball moving average and above the 100 ball moving average. Wall Street is watching that. And now you've got this. Look at that. Now you just got above what was resistance. Now there's almost no technical excuse to take this higher. There's no reason not to. You've gotten above everything. You held once again at the 200. You're above that resistance channel. And there's one more, because geometry, I promise you, every bit of the geometry I'm showing you is wrapped up in algorithms on Wall Street. Now watch this. It's even back above this trend channel. This was another channel right here that was working towards the upside. This blue line to this blue line. Well, you're back above that. So we're back in this trend channel. And we're above this trend channel. The street is not going to give up just yet, but let me show you what else we've got going on out there. So let's see what happened. That's what happened. AI, algos, call them whatever you want to call them. Nothing beats good old-fashioned technical analysis. Let's go see if we're right about that. So last week I mentioned that this week we are going up based on technical evidence. Don't listen to anything else out there. The news, don't listen to anything. The technicals will tell you exactly what's going to happen. That was right on the money. Let's see who's next. I got a list of charts I want to run down for you. Let's see. The next one is chart number 7. I think you'll appreciate this. Here's where we were, a megaphone style, which is kind of ridiculous, but I figured I'd label it anyway. Flag was forming. And this is your NASDAQ daily bar. And if you remember how panicked the world was last week, we were dropping, the panic began. And of course, I came out with that video to calm everybody down, right? Here's where we were. And this is what happened since. Can you ask for better? I mean, come on now, the charts will always tell you what's going to happen next. Admittingly, we did not catch some of these days. I tried very hard. We just didn't get filled, but we called the market correctly. Don't worry. This week's not over. We have time to get in. So now you are back above the resistance channel, right? Get rid of this flag. Forget about all that stuff. It did at least show us what was going on. Video was done here as it held the 200 ball moving average and the bottom of this channel. All of that support worked. I promise you, Wall Street is watching. I grew up on Wall Street from 18 till my 40s till we closed down the exchanges and they were all gone and everyone went electronic. I was there for the whole gamut. They watch this. I promise you, I am Wall Street. You can listen to anyone else's mumbo jumbo. Ask them if they've spent their entire lives doing this. If they haven't, make sure you're paying attention to me. So NASDAQ daily bar above the trend lines, above certainly the averages. Certainly now you're above the 100 bar average here as well. Let's go see if the Dow is paying attention. Dow Jones Transportation Average did the same thing. It held at the 200. Lovely. Is that the 200? Let's check. I don't think that's 200, kids. It doesn't even look like a 200 bar average. Let's go see what that is. That's 139 bar average. I didn't think that was it. So you got 139 bar average. I don't make these up. I use whatever Wall Street's following. I don't care what the average is. If I see they're using it, I'm using it. This is the 139 on the Dow Jones, not the 200. It came into play. It's worked really well. Will it get back above? Let's see. Oh, look at that. We gapped open and we are above. We are going to continue higher, kids. Everything is set in place so far. So Dow Jones followed, the NASDAQ followed, the ES followed. So if we're sitting here right now, and let me show you a little trend line. If we're sitting here right now, remember the trend line resistance in NASDAQ? Well, it didn't work. The trend line resistance in E-mini S&P, that didn't work. The trend line resistance is probably not going to work either, and you're going to get above it in your Dow, which is on chart 12, if I remember. So you should get above this because everything else is getting above. And why wouldn't it follow along? So yes, the answer is we will get above that. It will follow like the S&P and NASDAQ. Now, back to the NASDAQ for a moment. We are above this, which was absolutely wreaking havoc on the market for a while because look here, Every time you got near this trend line, you dropped. Even if you went near it, you dropped. Hit it, dropped. But then things change. Well, let's go out and see if this is happening on a daily. Is it happening on the weekly as well? Absolutely, positively. NASDAQ had a big problem not too long ago. Well, what the problem was, it fell out of a trend channel. It never falls out of. Now, this is a weekly chart. Every one of these bars represents a full week, 5 days of trading. Very important when a market holds channels like this on a weekly. So it holds, resistance, 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 falls back, holds 3 weeks in a row, hits resistance, falls back, gets through. Looks scary, right? But we're back. It's back in there already. Markets have already gained their legs, just like we promised you last week they would do. I don't have a crystal ball. Well, you know, I tend to do. Actually, I have a crystal ball, but I don't use it when it comes to trading. You know what my crystal ball is? The Omni. Oscar's Market Navigational Indicator tells me everything I need to know. So let's go look around. What else do we have? We even have one that would not cooperate at all starting to cooperate, the Russell 2000. So I showed this to you a few days ago and said, look, we've got 6 failed attempts to get above the Omni Trading Academy's proprietary moving average, or OTAPMA, right? Boss 7 didn't exist. Here's where we were. And we had 6 failed attempts. Well, yesterday it got above for the first time, and look what it did today. It's a wonderful thing. So all of this now goes away. The failed attempts have now failed at failing, and we have gotten above. Fantastic, and I'm sure the street's looking at that too. We're doing great. The markets are absolutely looking like they're going to want to hold. Now, what else do we have? Here is your reasoning. We filmed the video right here telling you as bonds go up, the interest rates drop and stock market goes up. This is what happened since then. Bonds have gone up, interest rates have dropped, and you have seen the market dramatically turn around. This stuff all fits together like a puzzle. You just need to understand how the pieces fit. And it literally is one big puzzle. In fact, I use this board. I never watch charts at all during the day. I only watch this ticker board. These are my puzzle pieces. And when they move out of sync, I know they're out of sync. When they come back in, I know they come back in. How do I know? I follow the chart patterns. Now, the charting that I do is very simplistic because the last thing we want to do is complicate this mess. Let's go look at something else. Netflix, the day we filmed the video was the first up day, and it just continued moving higher from that day. But what I like the most about Netflix is this. Let's move over a little so you don't lose the title. Netflix is now, it held this average beautifully, and the trend line, broke the trend line. We came out with the video right here and said, don't worry, it's going back up. And we are back above into the channel. And get this, it's already cleared the same resistance that you keep seeing in this. Let's do an undo on that. The same resistance that you keep seeing in the stock market and the Dow and everything else I've shown you, it's above that resistance line too. So let's darken that line in so you can see it. You are above that, and I promise you, Wall Street is watching. Geometry is more important to Wall Street than any other aspect of the market. They watch geometry. Now, they might not be looking at the angle, they're watching it in tabular form. No difference to me. I can visualize it or I can calculate it. It looks the same. It should look the same to you. This is not difficult analysis, right? This is very simple, follow the bouncing ball type analysis. What else is out there? Let's see what else did really well. I just looked at Netflix, right? I think we've got a couple of other charts that we were going to go over. Yeah, let's look in here. Oh, look what NVIDIA did. Now, if you recall, and you guys in Traders Corner will recall this, Traders Corner, I did this webinar for you several months ago and told you, welcome to the AI revolution with this exact same chart. And I mentioned to you that when I've been part of this market since the 80s, when the computers hit in the 80s, we had a rally for 6 to 7 years. Nothing goes straight up, but it lasted about 6 to 7 years before the frenzy of new computers hitting the world finally died out and everyone had a computer on their desk. The internet hit, 94, we did about 6 to 7 straight years till 2001 crash came. AI just came out. It's another one of those, just like the internet, just like computers. The AI is only 2 years old. There's no shot we're going down for a while. Yes, nothing goes straight up, right? So we all know that markets don't go straight up. They go up, and then they come down a little and correct, and they go up, and they come down a little and correct. But overall, you probably got 5 more years of this AI rally, getting into the markets, getting into companies, getting into on people's desks, if you will, and exploding our markets. I mean, AI is truly a new internet, like when the internet came out. So NVIDIA, holding this massive channel line for quite some time, finally breaks that line, gets down, but what does it do? It smacks cold at the average, like it always does. Stops cold, video comes out, not just because of the average, because my Omni flipped back up to bullish, with coincidentally with the average, 200 bar. And boom, we did a video on this day, and look where we are now. Let's not do that. It's a little freaky, this program. So I'm just grab some crosshairs so I can move around on this. We did our video here. It exploded. Now we are above the channel once again. So the major stocks that make up our stock market are now above resistance. The indices that are made up of all those stocks are above resistance. The street came in and saved us at the 200. You've got nothing but bullish news happening here. And imagine this. You're going to get, and I've been doing this for a really long time. I do not think the Fed should lower rates at this next meeting, but it appears they're going to. What a shot in the arm that's going to be. We don't need it, but we'll take it for the markets. That's going to make things just go berserk, kids. What else is out there? Let's see. All right, so a lot of this is happening because of a particular market, and it's the dollar index. Now, the dollar has been going down, and I'm starting to hear chatter about that. People are saying, oh, look at the spiraling dollar. It's worth $1.02. It's not even, it's worth over $1. We're nowhere near levels that the dollar would matter much, except for this. As that dollar gets cheaper, foreign countries, foreign entities, they need to basically cash in their currency to buy our dollars so that they can buy our stocks and our bonds. So yeah, it'll slide down, but it's not going to crash the dollar because the rest of the world needs our dollar to get into our butt-kicking stock market. Now, these are the charts I wanted to show you. Back to this, that tells us the evidence I just gave you, plus the evidence last week that showed us I was going to be right, and here we are, tells me to tell you that we will continue higher. Nothing goes straight up, but we will continue higher. Now, oddly enough, in the beginning of this year, here, I came up with a year-end target, and the year-end target was all the way up at 5760. We were in the 43 area when I made that target, 4,300 S&P. It rallied all the way up. But look, it's gotten as high as, and let's get something to tell us the prices. It's been as high as 57.21.25. Now, I called for 57.60 when it was in the 43s. Is that it? Was that the call? Maybe it was only going to go to 57.21, not 57.60. Did the year-end call already happen? So when we got up there and started to drop, I started to wonder, wow, Oscar, did the year-end call happen? That's it? Are we done? Did we top out? And then this happened, and I was able to say, no, obviously we didn't top out. So there is one more year-end call. It's the, God forbid we ever get past 57.60. There's another year-end call, but I never expected we'd get past 57.60. Now it is on my whiteboard, which is in every single video I do every night, or just about every night. So it's in all the videos this year, my target. So we're not making these things up, but we actually did hit that target. Then we did come down. So it meant something in the 5700s, but not enough to crack this market, especially when you go back and look at something like a weekly. There is no broken market here when you look at that chart. Everyone listening, do you see a broken market or a market in trouble when you look at this chart? Does anyone see a broken market or a market in trouble? You do not. If you see one, you're clouding your own brain. There's nothing broken there. Now, if an event took place where we came back down and put a couple of bars in and ended up going lower than this low right here, well, of course, that's going to change the picture dramatically, right? We redo our analysis. But so far, so good. Everything is in place that needs to be in place. And I think we're going to be okay to buy the dips for the rest of this year. Nothing goes straight up. That is my presentation to you. I don't think I'm going to use the rest of the time. I thank you all so much for tuning in, and I hope this helped to just calm everyone down and let you realize that we are not in a crash right now. It's just not happening technically.
Oscar, thank you so much. Always have nuggets of gold with you every time I see you, man.
I
Really
just
appreciate it.
So thank you for allowing me to present, and please send them to my website where they can, for absolutely free, no credit cards are required or anything. You can join me and you can be with me in this live trading room, which doesn't cost $1. We'll hang out with each other. We'll get through these rough and tumble markets, and whatever happens from there will happen. Thank you for joining me. Thank you for this opportunity. And I'd like to end with, you know what the mantra is, right, OmniX? If you're out there, you're going to have to say this one with me. Are you ready? 1, 2, 3. Stops are in. Like this, or in. Emotions are out. And that is the truth, kids. Put those stops in first. It keeps all the emotions at bay. Thank you very much. I hope to see you all at livewithoscar.com.
Thank you, Oscar. Really, really appreciate this. If there's any other additional links that I didn't put in the chat, please feel free to do so as well.
Yeah, you know, generally I just send people to Live with Oscar where they can create a free membership. If you're not a member, let me just show you quickly. You just register, and there's nothing to fill out, no credit cards. That's all you need to fill out right there. But here's what will happen. Once you click send, you're going to get an email. And it's going to go to spam. I don't know why that is. There's no way to correct it. Your email will go to spam. Go to spam, click the email, and in a moment, you will be at Live with Oscar, which is this, and you can easily join me in my live trading room. And then Dano, who's got his information right here for you, you can always contact Dano at Live with Oscar. I don't know if I can make that any bigger. But Dano at Live with Oscar will set you up, get you set up with the room. We've got a Discord channel, so you never miss anything that's going on in here. Everything that we do is logged for you, so it'll go out over Discord, Telegram. You get an email, you get a flash pop-up. We do everything we can to make sure our Omniacs are right in tune with me in this trading room at all times. So again, livewithoscar.com will get you there, and Dano at livewithoscar.com will get you set up.
Thank you, Oscar. That was some great information as always. I don't know how you do it, but you are always spot on. Ladies and gentlemen, you heard it here on Traders Corner. According to the charts, not the word on the street, and that was Mr. Oscar Carboni. You could find him daily in his chat room or his nightly YouTube videos, which are amazing and extremely fun to watch, or live streaming on his YouTube as well. You can also or his live chat room, sorry, streaming in his live chat room. Instead of Live with Oscar, it's Live with Oscar because he lives at his computer. You can also keep up with him on Twitter, Stock Twits, LinkedIn, Instagram, Facebook, Discord, etc. Or you can go to his website, livewithoscar.com. By the way, Oscar, I personally love your YouTube videos. I'm a huge fan, and I really don't know how you do it, but your analysis is priceless, and you prove to everyone it's pretty spot on. Please come back and see us on Traders Corner.
Well, thank you so much. And if you ever want to come to my webinars, go to omnibootcamp.com, fill out a questionnaire, and I'll call you on the telephone. Thank you so much. Really appreciate this. Everyone have a great day, and I hope you learned something today.
Thank you. Well, ladies and gentlemen, that brings us to our last presenter. Our staff at Traders Corner sifts through hundreds of pro traders and brings you only the most credible and qualified traders to participate on our shows. And up next is a professional options trader who has been trading and mentoring traders for over 13 years. He has a Reddit verified performance and has consistently maintained a 90% win rate. Astonishing. Over the past several years, on trades he has taken in his options live trading room, and has one of the most successful options alert services in the industry. His calm and confident demeanor lends to a trading environment that is stress-free. Ladies and gentlemen, here to present how to leverage Heiken Ashi bars for maximum gains is Mr. David Wyse of Right Line Trading. Welcome back to Traders Corner, David.
Thank you very much. So I appreciate very much you hosting me today. Just got done listening to Oscar, and I will say right off the bat, I will reiterate what he said. I get the same kind of comments of people thinking the market was going to just fall apart, crash, keep going down, and it's not. I mean, technically, it's still set up beautifully. The SPY's been bounced right off the 100-day moving average, got through up to the 50-day moving average, so the market is still bullish, very bullish, and most of my positions are long right now. So I just kind of reiterate that. So again, good afternoon, everybody. Thanks so much for being here at Traders Corner. Again, my name is Dave Wyse, and I have a trading room called the Compass Options Trading Room, and I have a text alert service that Right Line. I use the Right Line Compass software. This I'm gonna talk about. Today we're going to talk about using Heiken Ashi candles to improve your trading, basically to improve over basic candlesticks, and I'll go over that and show you how you can, if you haven't used them, how you can improve your trading by using Heiken Ashi candles under specific circumstances. All right, so we'll get started here. Again, I've been trading for about 14 years, almost 15 years full time professionally, and basically I trade almost exclusively options. I do use some stocks sometimes if the options are not usable, but mostly options. So we're going to stick to that. All right, first thing I have to do, of course, is the usual disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. All right, so we're going to go ahead and just start here. And if you have any questions, if you put your username, your name or your Skype username and your phone number in the chat box or the question box, Rory from Right Line will get back to you if I can't answer it. But I'll keep the question box open in case folks have questions as we go along, and I'll try to answer them if I can at that point in time. All right, so just you can remember to put that in there. This is just kind of a graphic of what's called the SPY super system. It's a system I use for intraday trading of SPYs, Qs, IWM, etc. But this is kind of what it looks like on my thinkorswim platform. I use thinkorswim for the Compass system. I don't trade on thinkorswim, but I use thinkorswim to display the Compass system, which tracks institutional money flow. And you'll see some of those charts as we go. This is what the text alert service looks like. I do text alerts on very high probability trades. I text them out. They usually get them about 15 seconds, 20 seconds after I post them. They'll come out to your phone, and I'll go over exactly what you're going to get on those texts. All right. The first thing I always cover, and I want to just cover this kind of briefly. The first thing I always cover is what moves the market. It's really important to understand what moves the market. These little marbles right here are retail traders, such as you and I. We're just retail traders, and it's very important to understand that we as retail traders, no matter how big a retailer traders are, we cannot move the market. We don't create trends. We don't stop trends. We don't do anything except cause chaos and chop if we're the only ones in the market. This is what drives the market. This is the institutions, and the institutions are made up of investment banks, Goldman Sachs, JP Morgan, Chase, Morgan Stanley, all the big investment banks who have trade desks, and they also have what's called algos, or computerized systems to trade the market. Algos are very active in the market, trade about 80% of all the trades that take place. So when the institutions are in the trade, it's imperative that we as retail traders know if institutions are in the trade or not. If they're not in the trade, we don't want to be in the trade because we're just fighting against retail traders. If they're in the trade, we want to be in the trade because we can follow them and take money from other retail traders who don't have as much information as we have relative to whether the institutions are in there. So this is really a critical component. It's really important to understand that as a retail trader, we don't take money from institutions. We take money from other retail traders that are in the market, not knowing as much as we do. Or at least don't have the information that we have. All right, so this, I'm just gonna run quickly. This is a SPY. These are regular candles on the SPY. This is an older chart, but I just want to show you the difference between SPY regular candles and Heiken candles. And then we're going to get into some real detail on that as we into the webinar a little deeper. But this is basically a SPY chart. I use TC2000 for my charting program. But these are SPY candles. These are regular SPY candles, daily candles. Each one of these candles is a daily candle. Each one of these is a daily candle. This is a little bit later after we had a little pullback to the 50 or the 100 EMA, but that's a little while back. It's actually the 100 SMA. But see, this is what regular candles look like. This is what Heiken candles look like under the exact same circumstances, and you can see how smoothly they show the trend. And we're going to go over exactly how they're constructed and why they look different than regular candles do. And again, here's some more Heiken candles. You can see how when it gets bearish, you can see how easy it is to see the trend with these Heiken candles. All right, so just so you can see what the candles look like, we're going to get into a lot more of this as we go along here. All right, so in my room and in my alert service, I have rules to trade by. Two of them, basically. We trade the best and skip the rest. And this sounds easy. It's not easy, but trading the best means we're only in trades that institutions are in, plus some other criteria that I'll lay out. And we skip the rest. So we're not taking a lot of trades. We're taking a small number of trades depending upon the market conditions and the particular stocks that we're looking at. But we only trade the best and we skip the rest. We also, our objective in the room and on the alert service, it's not to make trades. Our objective is to make money. We make money by taking only the very best trades. And the reason I say this, and I say this in the room a lot, is to keep people from feeling like if I'm a trader, I've got to be in a trade all the time. I always have to have a trade on. You don't have to always have a trade on. Sometimes no trade is the best trade, and it's best to sit on your hands. Just turn your computer off, walk away. Don't be taking trades just to take trades. So that's very important. That's where our objective is, not to make trades. Our objective is to make money. All right, and we also need an edge. Profitable traders, we need an edge over other retail traders. That's important. All right, so our edges is I use the Right One Compass system. This is a piece of software that runs on, in my case, it runs on thinkorswim. It also runs on Ninja, but I don't have to trade off of thinkorswim. I'll run the software on thinkorswim to identify compass. The compass will identify whether the institutions are in the trade or not, but I don't have to trade off of a compass system. I actually trade off of Tradier using TradeHawk as a front end because of the low commissions. Then we also trade relative strength and relative weakness. This is not to be confused with RSI. This is what this looks at is how are the stocks that you're looking at, how is it moving in relationship to the SPY, to the S&P 500. If the SPY is moving sideways and down on 5-minute candles and your stock is moving up, it has relative strength and vice versa. And this is really important because if you get into a trade and the trade reverses on you or the market reverses on you, your stocks with relative strength are not going to fall as fast as the market's falling, which means it's going to mitigate any kind of losses that you might take in that position. Okay, we want to trade with the market trend if there is one. Some days it's choppy, some days there is no market trend, but the market trend right now on the overall daily chart is fairly bullish. So that's how I'd be leaning. And then we want to buy near support and sell near resistance. This is important. Don't be chasing trades. Don't be trading. People get fear of missing out, FOMO. They'll run into a trade when it's and get caught, and they buy it right at the highest level and have it fall down, or sell it right at the lowest level and have it bounce up. So wait for supporting resistance. So this is the edge that we have over other traders. Okay, this is just kind of an overview of the compass system. This is a system I use on thinkorswim to give me a lot of information that I need to make these trades. It identifies the highest probability trade setups while sidestepping setups that look good but will fail more often than they succeed. You can have a really nice looking technical setup, and if that technical setup is isn't supported by institutions, it's not going to succeed most of the time. You can get some winners, but you're just not going to have a very high win rate. And it does this by identifying when the institutions are in a trade, when they're driving the move, and when they're not. So this is a really critical piece of information. I'll show you how easy it is for the Compass system to identify it, even though it's analyzing extremely complex data, and to display the results so that you see them easily. And it's displayed visually, basically with colors. So it makes it possible for even new traders to find high probability trade setups when they occur and when they're not high probability trade setups. All right, and so again, this is how we get an edge over retail traders. I'm emphasizing this a couple of times. We only take trades that are being driven by institutions. This is critical. We trade stocks that have relative strength or relative weakness versus the SPYs or the Qs, and we trade in the direction of the overall market. This kind of information, if you're trading these kinds of stocks, your win rate is going to be relatively high. I mean, it's compared to what other folks get, it's going to be relatively high. I mean, I typically keep an 85 to 90% win rate month after month, year after year, by sticking to this level. But you know, I mean, you're also relying on technical analysis, et cetera. So again, our trades will be supported by institutional buying and selling. The stocks will be outperforming the index, and they're going to be moving in the direction of the overall market. Big, huge edge. I mean, this is going to jack you up to a 75 to 80% win rate just following these particular criteria. All right, this is just how to find a high probability trade. This is what I use in the room. This is what I always use trading. These are the criteria that I look for. I call it a trade funnel. It's obviously just a thought process you go through, but this is a critical thing. If you're going to go long a stock, you want the daily chart to be bullish. You don't want to be going long a stock if the daily chart is bearish, because what happens is you can't really stay in the trade if it goes against you. If you have a daily chart that's bullish and the trade goes against you a little bit, but the daily chart's still bullish, you can hold on to it during the day. You can hold it overnight. You can hold it for a week if you need to. So the daily chart and the 5-minute chart both need to be aligned in the same direction that you trade. Obviously, you want to trade with the trend, either both the stock and the market, if there is a trend. And then critical, you've got to have the compass indicators aligning. And I'll show you the compass indicators and what the alignment, how you identify the alignment. It's very, very simple. And then you want to trade relative strength and relative weakness, as we've mentioned. And you want to get in near support and go long near support and go short near resistance. So you're close to a nice, close by support or resistance level, so you can reduce your losses on the trade if it turns against you. All right, so again, and this is just, this is basically the funnel written out. The stock to be traded need to have the 5-minute and the daily chart aligned, and the compass indicators must align. I'll show you these as we go along, but these two things here will give you, this is enough to give you a winning record right here. And again, relative strength, you want to trade. On 5-minute charts, it's important to understand there's a level called the VWAP, or an indicator called the VWAP, volume weighted average price. Volume weighted average price is something that all the institutions use. It's the levels they use to get in and get out of. So it's very important to know where the VWAP is on a trade, and you can have that on your charts. I have it on all of mine. And if you're going to go long, the stock price should be above the VWAP. If you're going to go short, the stock price should be below the VWAP. This is really important. And again, enter the trade near a confirmed support for long and resistance for short. And have patience. I mean, this is really important. Have patience. I also look for nearby support or resistance, so I know how much space do I have before the stock's going to run into a support or resistance level. Do I have enough room to the next level to justify taking the trade? And then have patience. This is probably the hardest thing for traders to do, which is to basically sit and wait for the trades to come to them. Okay, the strategies that we use in the room, relative to options, I do straight calls and puts a lot. I mean, there's going to be a lot of straight calls and straight puts. This is probably 70% of our trades. I do use debit spreads, and I use weekly options expiration to do debit spreads. I do something called a time spread over earnings. It's a calendar spread. This is a non-directional trade. that captures volatility crush when the earnings come out. And I have videos, by the way, on all of these strategies in my room. And I use another one called the weekly ATM. This is a strategy where I sell puts against a stock that's neutral to bullish, and I sell them every week while maintaining a longer term dated put to protect that downside risk with that trade and keep my margin down. This is a pretty nice strategy on bullish stocks or even neutral stocks. If you can capture the proper premium, again, I have a video on this. And I use credit spreads to capture premiums over a few weeks if the market is correct. The thing to understand is when if you have a trade, you like a stock long, you have several options. You can take calls, you can do a debit spread on it, you can do a weekly ATM, or you can do a credit spread on it. You can do all of these strategies. And what I try to do is, if I like a stock long, I'm going to suggest what I think is the strategy that's going to produce the best ROI for the conditions that exist in the market right then. And then I have one other thing called the SPY super system for very high probability trades. This is not alerted on. These, you have to be in the room to get these SPY super system trades. And this is a system that's really works really well for SPYs, Qs, and IWM. I use it for all three of those indexes. And I'll give you a brief sample of that. But you need to be in the room to get these. But this is great for people who can't be in the room all day, but they'd like to be able to trade the indexes. So these trades only last, most of the time, they only last a maximum of 15 or 20 minutes, maybe a half an hour at the most. And you only have one trade on at a time. Easy to manage. You just wait for them. If you can't be in the room all day, you come in for an hour, you trade a SPY super system trade, you leave, you come back in the afternoon, you can do another one. So that kind of makes it nice so you don't have to sit there and stare at the computer all day. And I do them all the time. I did 3 of them today, 3 of them yesterday. All 6 of them were profitable so far. I got a very high win rate on these things, but they're very specific. All right, so the Compass Alert Service, just to be aware of what it is, obviously it's designed for day trades and short-term swing trades. Anything that I put out is going to either be closed today or in maybe up to 3 weeks. That'd be the outside length. Most of them are going to be closed in a couple of days, 2 days, 3 days, maybe a week. And a lot of them will be in at 10 or 11 in the morning and get back out at 3 o'clock in the afternoon. It's designed for traders who can't watch or don't want to watch the market all day long. I mean, that's probably a lot of people. They don't want to sit in front of the computer all day, so they get an alert to tell them to go into the trade, and they can trade off of that. And the real-time alerts are going to come out in the highest probability trade setups that I can find. So every high probability trade setup that's alerted is also posted in the room. And I take every single one of the trades that I call out and send alerts on. I take them all in real money on my trading account. So I always know what all these positions are doing because I'm in them all with live money. And again, how do we alert on these? We're looking for the highest probability trades by identifying institutional involvement. Is that institutional involvement again? We've got to know that the institutions are in there. We also look at market internals, which is what's the volume of stocks going up versus the volume of stocks going down for the day. And then I do deep dive into technical analysis to come up with these picks. All right, so that's what the alert service is for. It's for people who obviously would just like to trade, but don't want to have to watch the market. So when you get an alerted trade, this is what it's going to look like. You're going to get the stock symbol. You're going to get the option strike price, the option expiration date, and the price to pay for the option. All the things you need to make the trade. And most of the time when I alert these, I send out an alert with the buy price. I'll tell you how much to pay for it. And then you'll get an alert later, either later that day or 1 or 2 days later, when we've decided where we want to try to exit that trade. And when I give you the alert to exit the trade, I'm going to suggest that you make it GTC, or good till canceled, so that it's working when you're not in front of your computer, or when you're not when the market opens in the morning. You want to have that alert working. You want to have that trade working. So if the market gaps up in the morning and you're in a long, you'll get filled on it and you won't have to worry about it. But you'll generally get two alerts, one to get in and one to get out. And the price to pay, by the way, could be a range. It could be like $1 to $1.05 or something like that. This is an equity curve of what we've done in the compass room. Basically, this assumes $2,000 invested in each trade. I have to have some sort of a baseline that I can use to quantify the results. So this is basically what it looks like for the last, I guess, about 14 months or something like that. So yeah, we make money just about every single month. The room has been open since January of 2022, which was, by the way, the exact beginning of the bear market. We had 16 months of a bear market, and now we've been moving up since then. And this is 32 months of trading, and we've had 29 winning months and 3 small losing months in those months. But that's just to show you what the equity curve looks like. You really want one that goes from the bottom left to the upper right. All right, now we're going to get into Heiken Ashi candles. I'm going to do these now before I get into the results of the room or the compass system or anything. I want to kind of highlight Heiken Ashi candles. Now this is the Thinkorswim platform. This is what the compass system looks like. This is a Tesla trade we took a while back. But just to show you briefly what the compass system is, you have 4 indicators down here that are critical. But the 2 most critical indicators is this one here. This is what's called the multi-time frame trend, and this is what's called the current time frame trend. This is current time frame multi-time frame momentum, current time frame momentum. This is a long-term trend, and this is a derivation of money flow. These are the 2 critical ones. The momentum is really, really critical. These are the ones that I key off of the most. But this kind of shows a Tesla that I traded this, and this is a 5-minute chart here. And this shows where I actually get into this trade. But these are Heiken Ashi candles. And the one thing I want you to notice on these, and you'll see these when I show you some more charts, you notice on bullishness, you see how these have a wick and a tail, and a wick and a tail, and then a flat bottom, and a flat bottom, and a flat bottom. When the stock is bullish, with Heiken Ashi candles, the bottom of the candles will always be flat. You won't have any tails on them. It's known as flat bottom, flat bottom, flat bottom, flat bottom, all the way up. This is a bullish trend. Very easy to spot because you have flat bottoms all the way up. Now, once you start getting wicks and tails, if you were in this trade, this is where you would consider exiting to take your money. But this is what the compass system looks like here on the colors. You can see the institutions are buying the heck out of this thing. On the compass system, this little green line is the 15 EMA. It's one of my support levels. And these pink candles here, pink arrows, those are what's called pop out of the box symbols. These identify when a stock is breaking to the upside out of compression. We have blue ones breaking downside. So this is what the compass system looks like. And these are Heiken Ashi candles, which we're going to go into right now and talk about Heiken Ashi candles. All right, so what's the advantages of Heiken Ashi candles? Well, they identify the confirmation of a trend reversal. This is really important. When you're in a trade, and the trend starts to reverse, you want to know about it, but you need some confirmation. You don't want to get shaken out on just a couple of small little candle. So it's going to identify confirmation of a trend reversal. It allows trade entries on a confirmed reversal, avoiding failed breakouts. Now this is, if you have a trade breakouts or breakdowns, then you're looking for a resistance level, for example, or a support level to be broken. But a lot of times they'll break out and then come right back and test or break right back down through them again. And what they're called is failed breakouts or failed breakdowns. By using Heiken Ashi candles, when you get a Heiken Ashi candle and you break through resistance, and you got a Heiken Ashi candle that's showing you bullishness, then you have automatically got a confirmation that that break has been confirmed, as opposed to with regular candles. You have to wait for more regular candles. So if you get a breakthrough resistance to the upside and it's a Heiken Ashi candle with a flat bottom, that gives you a confirmation of a breakout. It smooths out the price movement to eliminate noise, which we saw in that Tesla chart we just looked at. It allows the traders to stay in the trend trades longer, avoiding shakeouts. Again, if in your trade and you're worried about getting shaken out, stick with your Heiken Ashi candles, because until if you get flat bottoms and you keep getting flat bottoms, there's really no need to exit the trade, even if it looks like it's getting a little shaky for you. It identifies when the trends are starting to wane, and this is important. Once the trend starts to wane, and you're in profits, that's when you want to start to get out. And it makes it much easier to visualize the current trend, as we saw on that candle. All right, so these are the advantages of Heiken Ashi candles over standard candlesticks. If you haven't used them, I'll just say, if you haven't used them, you may want to try using them. Every platform allows you to put Heiken Ashi candles instead of standard candlesticks on there. And you can switch back and forth. I switch back and forth all the time. Heiken Ashi candles, it means average bar in Japanese. The reason it smooths out the price action is it uses 2 candlesticks to create one candle. So it makes it easy to identify trends and reversals, makes it much clearer. Again, bullish candles, bullish Heiken Ashi candles have flat bottoms, and bearish Heiken Ashi candles have flat tops. This is all you really need to know about how the candle is constructed. Again, bullish trends will have flat bottomed Heiken Ashi candles one after another, and bearish trends will have flat top Heiken Ashi candles one after another. And once you start getting a couple of Heiken Ashi candles with flat bottoms or flat tops, typically you'll get more of them in a row. And again, generally you can stay in a bullish trend as long as no flat top Heiken Ashi candles appear, indicating a lull or reversal in the trend. And we'll look at some specific candlesticks. Again, reversals in a bullish trend. So if you're moving up and you've got flat bottom candles, reversal in a bullish trend will have flat bottom Heiken Ashi candles followed by smaller doji Heiken Ashi candles, sometimes, both having wicks and tails, followed by a flat topped bearish Heiken Ashi candle. So you go from a flat bottom to a flat top. That's a reversal in the trend. And you'll be able to see that pretty clearly when I show you some of these charts. One of the things to be aware of, and I'm not going to read everything here, but one of the things to be aware of is if a trend is very strong to the downside or to the upside, you're going to have fairly large candles. They're going to be fairly long. The reversal in that particular trend shouldn't be considered reversed until you get some large candles that offset those large candles coming down. So if you've got large red candles coming down, you don't want to consider that you've had a reversal if you're getting tiny little bullish candles trying to reverse it. You need some momentum in those candles, some force in those candles. So we'll look at some of those. Again, I create a lot of Heiken Ashi setups, and I've had great success, around 90%. And the reversal is identified after the current Heiken Ashi candle closes, or whatever time frame you're using, whether it's 5-minute or daily. Typically, once a Heiken Ashi candle starts to form, if it forms a bullish Heiken Ashi candle on a 5-minute candlestick, once you're 2 minutes or 3 minutes into that time frame, generally, if you've still got a flat bottom, it's going to stay that way. It's very unlikely for it to reverse later into the candle. So if you want to be aggressive and you're trading off of a Heiken Ashi candle, you can get into it before it closes, as long as you've given it enough time to get near the close. Okay. And this is basically what I'm doing here, is saying Heiken Ashi candles can be used for your trading, but you also want to make sure you take relative strength into consideration. Make sure that the institutional traders are in the trade. In other words, don't use Heiken Ashi candles or any indicator by itself. You've got to take other indicators into consideration. The market trend, how much of a trend is there? Is it choppy? All of those things need to be taken into consideration. But the Heiken Ashi candles gives you an extra edge over the normal way of trading. Okay, so let's talk about Heiken Ashi candles here. And that noise you hear in the background, I forgot to turn my news feed off. I have a news feed going all the time. So these are Heiken Ashi candlesticks. Now you notice here we've got a flat top. So this is a bearish Heiken Ashi candle. And now we have wick and a tail and a wick and a tail. Now notice it's still red and we haven't reversed. And then we get another flat top Heiken Ashi candle. So this isn't a reversal. This is when you see a candle like this, where you're already in a bearish trend, and then you get a wick and a tail, and then another flat top. That's a continuation Heiken Ashi candle. That tells you that the bearish trend is still continuing. And then you notice you keep stacking these red candles up with mostly flat tops on these things. Now we're starting to get wicks and tails and the candle's getting green, but still wicks and tails. This is not something that tells us we've had a reversal yet. But here on this candle right here, you see this, you see the wicks and tails, see this flat bottom? That's a flat bottom. That is a Heiken Ashi reversal candle right there. This is going from a bearish trend to a bullish trend to the upside right there on the bottom of that candle. And you notice that the next one and the next one and the next one and the next one all have flat bottoms. This is a bullish trend right here that you're in. Now, one little side note here. You notice that the each candle starts in the middle of the previous candle. You always start the current candle on a Heiken Ashi. It's going to start in the middle of the previous candle. That's the way they're constructed. All right, so that's one thing to be aware of. All right, so this is what they look like. So let's look at some of them here now. This was the Tesla one that we saw here. Again, here you can see the Heiken Ashi reversal right there in this this candle right here. Flat bottom after a wick and a tail, and flat bottoms all the way up. And the compass system tells me the institutions are in there, so that criteria is taken care of. I know the institutions are in. I know them above the VWAP. I know them above the 15. This is a perfect setup to make a trade. This was a Heiken Ashi reversal on a daily chart. All right, this was Gilead. We took this a while back. Right here, we had some wicks and tails on these candles, right here, and then we got a bullish, flat bottom Heiken Ashi bullish candle. Great place to take an entry on even a swing trade on something like that. Same thing here on GE, right? Just choppy, choppy, choppy. And we had earnings, flat bottom. This is where we get into the trade right here in this flat bottom Heiken Ashi candle. This tells us that we've got the Heiken Ashi candle. We've got institutions buying here. Notice the institutions buying. Long-term momentum, current time frame momentum tells us to buy. And we bought this and used this to the upside. Really, really nice one on GE. This is Heiken Ashi candles on my TC2000 chart that I use. I draw some other lines. This is called an algo line. This is the line that the institutions actually use to make a determination when to get in and get out of a trade. This white line is the 8 exponential moving average, but the whole key here is this is a Heiken Ashi candle right here. I got wicks and tails chopping around. It breaks above this line, and I've got a flat bottom. This is where I took the entry in IBM right there. So that was pretty nice. Teva, same thing. Coming down, see this flat top, flat bottom with a big candle. Beautiful reversal candle. Bought Teva right there, and it was another nice long trade. Okay, so that's what Heiken Ashi candles look like. So I'm going to look at some live charts. If you don't mind, I'm going to go and pull my TC2000 over here for a minute because it'll be easy to see on TC2000. Pop this here, pop this here. What I did was I just ran a scan on Heiken Ashi reversals on the daily chart for today, and I want to see what we've got here. All right, so here's Tesla. All right, so here's Tesla, which by the way, I'm in right now. You see this flat bottom candle right here? After a wick here, we had a flat bottom here, then a little wick. You see these tails down here. This is a reversal, Heiken Ashi reversal on Tesla on the daily chart. All right, so that's a good one. There's ASTS, another Heiken Ashi reversal. Pretty easy to see with big volume as well. Big volume on this, and that's what this volume candle is. And moves up pretty nicely here. All right, so that's ASTS. So I just want you to see what these Heiken Ashi reversals look like. Cisco, big Heiken Ashi reversal. This is off of earnings, not something that you would use because it's kind of a one-off as far as earnings are concerned. Walmart also had earnings, a big one today. But there's a little one here on Sophie, moving up. And again, you can't take these in isolation. You got to look at where your moving averages are, what the rest of the technicals look like. But they identify really quickly stocks that you would want to take a long in. Here's a stock here that's done what's called a PBO, a pullback opportunity, bouncing up here, right off the 8 exponential, which is this white line that I use, pops up. All right, so this is what they look like. Let me see if I can find some bearish ones here. Let's see what we get for bearish reversals right here. Bring that list up, pull it over here, and show you the bearish ones. See what I got. I haven't even looked at this, so I don't really know. Right, there's grab. That's off of earnings, 815. Google is definitely getting a bearish reversal. They had some problems with the Justice Department here, and you can see the reversal here today. That's another Google. MLCO, another bearish reversal. You see the flat top here. Another Heiken Ashi reversal here on IQ, very cheap stock. So this shows you what these Heiken Ashi candles look like. You can see when you get these candles in a row. Now, just for your information, my color schemes here. When in my TC2000 chart, when I color my candles, if they're pink, it means that's a red candle that's breaking out of compression. Blue is a green candle that's breaking out of compression. All right. All right. So let me see if we have any questions before I keep going. Do I hold when the wicks are chopping around waiting for a flat top or a flat bottom? Well, if I'm in the trade, if I'm in the trade, I'm going to hold the trade as long as I'm getting flat bottoms. If I'm getting wicks and tails, then I've got to kind of make a determination based on, am I in profits right now? What's the profit look like? Where are my resistance? Where is my support level? Am I close? Most of the time, if it's a choppy market, I'm going to take profits as soon as I go from a flat bottom to a wick and a tail. One thing to be aware of in Heiken Ashi candles is if you get a flat bottom, which is bullish, and you have a wick on the top. On standard candles, when you see a wick on the top of a candle, it tends to be bearish. It tells you that people came in, they drove the price up to a certain price, then they dragged it back down again, so there were sellers coming in. That is not the case with a Heiken Ashi candle. Wicks on the top and Heiken Ashi candles are actually bullish as opposed to being bearish. All right, so I'm just running to see if I can see any more of these. I want you to see what they look like. You see these? You can see these nice when they reverse here. You see this nice reversal right here? See how they repeat? Flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, flat bottom, and these daily charts. And now you're getting a little bit of movement here, but if you were using like the 8 exponential as your stop, you just stay in the trade. So you usually get a lot of these in a row, which means you can stay in the trade. Look at this next, all right? Here's your Heiken Ashi reversal right here, right off of this candle. If you get here short, look at what you made on this drop. This is a big deal, and these are big flat top candles. Bearish trend, a huge bearish trend. So we're getting a reversal here, and that's a Tesla Q, BDX. So these are what what they look like. And see the nice run up here, nice run up here. So it runs up and then it goes compresses, runs up again, and now it compresses. Now it's turning short again. So you got to take other things into consideration, but the candles themselves are very, very useful to identify reversals in trend, which is what you're really looking for. You're looking for a reversal in a trend, or if you're in a trend, you're looking for a continuation in it. And the Heiken Ashi candles will give you a lot more of that than standard candles will. All right, so those are some charts that are live. Those are just today. Those are charts that I just scanned today. All right, so see if we have any questions on Heiken Ashi candles. I hope you can see that it's going to help you identify trend reversals and when to get into a trend and when to get out of a trend. They're much easier than trying to find regular candles to do it. And I think if you use Heiken Ashi candles, you're going to find them extremely useful in your trading. All right, so let me just spend a little bit of time on looking at the trades that we've taken. These are in the room and in the alert service. We take more trades in the room than we do in the alert service because if I have a trade and it's only going to be on for 20 minutes or half an hour, I don't alert for it because it doesn't give the alert members time enough to see it react. So mostly when I send an alert out, it's going to be for a few hours at least, or overnight or a few days. But anyway, these are the January trades, and a couple of reasons I show these is I want to show what kind of percentage gains we make on the trades that we take. You're not making 500% of the trade if that's what you're expecting. If you go someplace and they tell you they make 500% of the trade, I would run the other way quick, because if they do, they're getting one win out of about every 300 trades. It just doesn't happen that often. So this is what you're going to see. You're going to see wins of 10%, 43%, 37%. These are typically what you're going to see in your alert service and in the room. You're going to see wins from 15 to maybe 50%, 60% sometimes. This was 65 on Mara. We did have 96 on Boeing. This was a pretty nice trade. And we have losses. Everybody has losses. We have losses. In January, this was January 2024, 20 wins and 2 losses, 90% win rate, 2,000 invested in each trade, netted $7,505, which is pretty good. And you know, it depends on how much you're putting into a trade. I just use this as a baseline. You know, you can trade 500, you can trade 1,000. I have people in the room that trade 10,000 a trade, but this tells you as for investing 2,000, that would have made 7,505. February, again, see the percentages. 40%, 25% is flat, 56%, 32, 32. Again, nothing huge, but these are really nice, consistent trades. And to be a consistent winner and a consistently profitable trader, you've got to have consistency, month after month, week after week. And I think we do a great job of doing that. Again, we had 24 wins and 2 losses. This was a 92% win rate. This was a very good month for us. The market was strong. We could stay in the trades a little bit longer. 2,000 invested in each trade, netted $11,745. A pretty nice month. And I broke out the alerted trades in February. We had 20 wins and 2 losses. 2,000 invested in each trade, netted $69.30. Pretty good. That was up February. To recap our all of 2023, everybody asked me how much. What about last year? This was our 2023. Was using 2,000 per trade. 2,000 each trade in the Compass room produced a 60,000 in profit. So if you had a $50,000 account, just an arbitrary number, each trade you take in at the beginning of the year would have used 4% of your account balance. And we produced 120% return over the year. So the account would have ended with about 110,000. So at the end of the year, every trade you took would have only used 2% of your account balance. So, or you could have increased the amount, however you want to do it. But that just shows you the nice results we had in 2023. This is our first quarter of 2024. 65 wins, 11 losses, 86% win rate. In the room, 18.7 for profit. On the alert service, 41 wins, 6 losses, 87% win rate, 12,002 profit. So pretty nice. Second quarter, similar. 65 wins, 14 losses, 83% win rate, a little low for me. Alert service, 35 wins, 6 losses, 85% win rate, but nice profits, 14.8, 11.7. All right, so then we move into May. And I kind of identified that I use this for the time spread. I did a webinar on time spreads, which was what I do over earnings. This kind of shows you what those were. Anything in yellow here is a time spread. But May, we had 15 wins and 2 losses, 88% win rate, 4,900, almost 5,000. And in the alerted trades in the room, we had 29 wins, 7 losses, 81% win rate, netted 5,700. So pretty close to the alerts in the room. As far as the profits are concerned, we took more trades in the room. But you can see we had a 100% loss in time spread here. But the time spreads actually produce generally pretty good profits. 71% here, 50% here, 60% here. They're a little bit higher than what you get with straight puts and straight calls when they work. All right, that was May. This is June. Again, you can see the numbers here. Very similar to all the other months as far as what percentage gains we make. We had 25 and 4, 86%. The alerted trades, we had 14 and 1 in June, which is really good, 92% win rate, 8,300. Made more on the alert service than the room did. And the room took a lot more trades. Here's July. Again, July trades room. That was so far, we've actually completed it now, 22 and 4, 85% win rate. The alerted trades had a little bit of a weak month, 12 wins, 4 losses, 75% win rate, still netted 3,300. So still pretty nice. We had some nice time spreads in July. And we did take some losses. We take losses every month. We usually have, I don't think I've had a month with no losses. I'm not sure. I may have one. And this was our August trade so far. 10 wins and 1 loss in the room. And alerted trades, 5 wins, 0 losses in the room. 29.92, 38.77. Month is just getting underway. And so here's what we've done with August so far. Okay, so that's that is the results of what we've done in the room and on the alert service using the Compass system and identifying high probability trade setups. Just so you know, this is the SPY super system. This talks about taking SPYs, Qs, and IWM trades intraday for very quick trades. These are basically usually 5 minutes to 30-minute trades. I quantified them in July, 16-0. August up through today was 27-4. I had 3 more wins today and no losses. So this is 30-4. And the nice thing about this is for anybody, and I mentioned this earlier, for anybody that is in the room or wants to come into the room but can't stay there all the time, this gives them an opportunity to make trades quickly using the SPY super system and not have to wait around all day. So again, and you only have 1 trade on at a time, so it's easy to manage. And I'm going to do some videos on these for folks who are interested. I've had a lot of folks trading in the room now using this to, along with the regular trades, they're doing these like when the market's kind of choppy or flat or there's nothing going on, they do some SPY super system trades to make some money. So let me just talk quickly about how we achieve these kind of stunning results that we get in the room. We were able to identify when institutions are driving a trade and when the market internals are heavily bullish and bearish. We've talked about this already at the beginning. This is critical. So we only make trades when both of these are in our favor, or at least when the institutions are in the trade. If the market internals are neutral, we'll still take trades that have the institutions in them. But if the institutions aren't in the trade, we're not in the trade. And how the compass system finds this, how does it identify these institutions? It looks at what's called a triple screen assessment. You might know it as a fractal or multi-time frame comparison. We looked at 3 things. We look at momentum, and I've showed you the multi-current time frame and multiple time frame momentum, and then trend. We have current trend, multi-time frame trend, current time frame trend, and then a derivation of money flow. These are very critical. And when all of these are moving in the same direction across the current time frame and multiple time frames, it's the likelihood that the institutions are driving that trade is astronomically high, 95% or more that they're in the trade. So what I'm going to do is I'm going to show you some charts. Before I get to the offer that we have, I want to show you some charts of trades that we took. And I want you to see the compass system set up and why we took the trades. This was an ALB short we just took a couple days ago, right here on 12th of August. We've got 28% profit. We took it overnight. If you see here, you see this compression. You see that first thing you notice is everything's red. That tells you immediately the institutions are selling ALB. They were selling it here too, but it wasn't going anywhere. But this tells you the selling is going to take eventually it's going to take a toll. And down it came, and we caught it right here. And they had earnings right here. So we caught it right here on this breakdown, and we sold it right here. 28% profit, just holding it overnight for 2 days, and we took ALB as 28% profit. This was workday that we had. This was a day trade, a 5-day trade using the daily chart. Okay, you see we actually took it right here. It was blue here and blue here. Now the multi-time frame went to yellow, so I had to be aware of what was going on, but the current time frame stayed blue. So I stayed in the trade. Yeah, it's got, again, these are Heiken Ashi candles. It had a nice Heiken Ashi flat bottom here and moved up nicely. And so I stayed in this trade for 5 days for 30% profit. And you see this was chopping back and forth. So I have to be aware that there may be some selling coming, but it never came. And so I just stayed in the trade for 5 days. MDT, same thing. Here we go from yellow. This is bearish. This tells you, notice we had a green multi-time frame and a yellow current time frame. This tells me that the institutions are not in the trade. We don't have confirming colors. Then it went to blue. Blue and green is bullish. Red and yellow is bearish. The institutions got in here. So now I know the institutions are in the trade. I can see that it's right on the 15 EMA, this little green line. I buy it right here, and I ride this up for 25% profit on a swing trade. And you notice how nicely this thing just kept going up. BKTX, same thing. Everything's green, institutions are buying. Here's a breakout right there. So I buy it right here, and I take 30% in 3 days. Not a big, huge move, but a decent move. This was an overnight trade in McDonald's. Get in at 8:30, out for 11:30. This is a daily chart. This is where we get in right here. This is everything's green, and we know the institutions are buying this. So our job is to find out where's the best entry for us. And this shaded area right here is what's called a dynamic compression zone that the compass system produces. And you see, we broke out of it. That's what we took the trade when we broke out of the dynamic compression zone and ran it up. Get in at 8:30, $8.30 overnight in the afternoon, and get out at $11.30 the next morning, a 37% gain. All right, let me see here. Do I option trades only off the 1D chart, or do you use multi-time frame? Well, the multi-time frames, when I'm looking at the day trades or intraday trades, when I'm going to take a trade and I want to be able to keep it overnight, then I look at the daily chart. The daily chart's going to be bullish, but I don't go to multiple days. I use a day chart, and I use a 5-minute chart, and then I use the compass system to tell me what's happening as far as institutions across multiple time frames. If I'm looking at a daily chart here, this multiple time frame momentum that shows here, this is the 1 day, the 3 day, and the 9 day. That's telling me that all three of those time frames, 1 day, 3 day, 9 day, are all moving up in the same direction. This is telling me that the 1 day is bullish, obviously, but this is telling me multiple days are bullish. And this is a multiple day trend here as well. All right, but I don't go to like a weekly chart or a monthly chart. Moderna, nice breakdown of Moderna again. Institutions selling. They're selling. You try to find the best spot you can. We picked it up right here, and we took a 33% profit overnight in this thing. And Amazon, here's another Amazon with a pop out. We can see how it's breaking out here right off the 15 EMA. Took this, and we made a 32% profit. We actually only traded intraday on that one candle right there. JD, this is one of the Chinese stocks. See how this is breaking down to the dynamic compression zone? You notice it went from green, bullish, to bearish. Current time frame went from bullish to bearish. Multi-time frame was already bearish. This is where we took the trade. 61% profit on this nice big drop in this JD. Dollar Tree right here, same thing. We just traded this day on the day of this drop, 25%. Look at the selling that's going on with Dollar Tree here. I mean, it's obvious that the institutions are selling the heck out of this thing. And Datadog, same thing, breaking out of dynamic compression right here. See the shaded box? See how we get yellow and red across the board? 21% profit on DDOG. This is how I find the trades that I'm going to alert on, and how I take what I take in the room. This was a nice popping crowd here. Again, see, we get yellow and blue here. We get yellow and blue. So I took it right on the blue and blue, and then it switched to yellow. I couldn't know that was going to happen, but it makes me aware that I need to watch now to see if it comes back. But it didn't. I mean, it came back a little bit, but didn't come back much. And we made 20% profit on this particular trade on crowd. Amazon 32%. This is a 5-minute chart, by the way. Now, this is the 15 EMA. This is one of the support levels I use. You see how it broke here with this, what's called a pop out of the box symbol, telling me that the stock is breaking out of compression. Everything's green except for the long-term trend, which I'm not worried about, because I know that the trend earlier was bearish. But I know everything is green here, so the institutions are in this trade. I get it right here. I took 32% in 45 minutes on this break right here. It just kept moving right up, right up. As it gets extended from the 15, then I'm going to think about taking profits. And I took them off right here, but it kept on going a little bit more. ENPH took 20% in an hour here. See the 15 EMA right here, and then a pop out of the box. This pink line is the VWAP that I talked about. That's the volume weighted average price. We're only going to go short if the stock price is below that. It was. It also was below the 15. So this is where I took it, right off the 15 EMA. And we were in this for an hour and made 20%. Nice drop. Institutions are selling the heck out of this thing. I mean, it's obvious that they're selling the heck out of this thing. And if you don't have this information, you're at a loss. You just don't know. You may think you know, but you don't know. This is Verizon. We made 50% in an hour on this one. Notice how it broke below the VWAP. Institutions are selling. See the red? We bought it here. I actually paid 45 cents, $45 a contract for this. And we get out back in an hour at 67 cents a contract. Went from 45 to 67. 50% gave 10 contracts, $450, out an hour later for $670. Pretty nice. Whoops. Hold on just a second. Sorry about that. We had a UPS meeting come to the door. My dog doesn't like that. So this is the SPY super system right here. SPY super system is, this is it's always off the 5-minute chart. So what I'm looking for is, in this particular case, the institutions were selling the SPY. You can see it's red. It's coming off the 15 EMA. It's below the VWAP. So I take the trade right here as it comes off the 15 EMA. I actually took it back at right here and rode this thing down. And then once it reverses, I'm out. So this is what the SPY super system looks like. And something like this can get you, 40, 50, 60 cents, $1, $1.10. You can make some good money on these if you know the criteria, which again, I have a specific setup on how to do these. All right. And this was a Netflix trade, breaking down below the VWAP right there, buy it right there, out here for 20%. 5-minute chart, everything's bearish. See how it went from blue to green, from blue to yellow, bullish to bearish. That gives me my confirmation that the institutions are selling. I get in right here and it keeps on going down. All right, and this was Tesla. This was another one. We traded this here short below the VWAP. We get a nice little entry right here as it goes from blue to yellow. We buy it, it comes down. I get out right here at the end of the day. And this was a Tesla trade we took overnight. We had the 5-minute chart showing us a pop out of the box symbol or a bearish breakdown right here. We took it short because everything was being sold. It's yellow and red, and we got lucky. We got a gap down from 120 to 112. So we took a big profit on that. I don't even know what the percentage was. It was a big profit. Michael says, looks like you could trade SPY every day. Yeah, you can. You can. Some days are better than others. And what I do is, Michael, just so you know, on the SPY super system, I look at the Qs, the SPY, and the IWM. And if I'm going to go long, I take the index that's the strongest for the day, but also doesn't have any close by resistance. And if I'm going to go short, I take the index that's the weakest for the day if it doesn't have any close support. So, but yeah, you can take trades every day of this. I mean, I take trades every day. I took 3 today. Some days you can get more than others. If it's choppy, you got to get in and out fairly quickly. But it's a really good system. I try to emphasize it in the room a lot more. I'm going to do some videos on it, but it's a really great way for folks who want to trade indexes. Some people don't want to trade like that, but there are some people that do. Okay, and this was a Tesla. We've seen this one before. And this was QSR. This just I show how I use the daily chart and the 5-minute chart together. Notice here's QSR. You see how it goes from yellow to blue? Institutions are in here buying. I know it's bullish. Now I want to trade it bullish. Okay, where do I want to get in? This is a 5-minute chart right here. This is a 5-minute chart. It's riding along the 15 EMA. It goes from red to blue, so it's bullish. I look for this pop symbol right here as the stock breaks out of compression. I take it right here. That's my trade entry, and I just ride it right up until it starts to show some weakness again. That's how I trade. Using the daily chart, bullish, 5-minute chart, bullish. Where do I enter? And that's where I enter right there. So again, I just to recap, this is what we do in the room: straight calls and puts, debit spread using weekly expiration, time spreads, which we use over earnings. It's a really non-directional, nice trading setup. It has a very good win rate, and it also has very good profitability. You have losses, of course, but the criteria are very specific. Weekly ATM, again, to make some money selling puts every week against a longer-term dated put, and credit spreads, and the SPY super system, which to me is really a great way for folks who just want to come and go and not have to be tied down all day. They can just come in, find this, if they know the setups, and I have very specific criteria on how to do it. I have a video on it all. I talk about it in the room all day. It's a great way to make some money trading that. All right, so that's that is the presentation on the compass system using the alert service and the room, the compass options room, which by the way is open. I'm there every day from market open to market close. I wasn't today, because I was doing a webinar. I left at 3:30, but generally I'm there every single day from market open to market close. Not too many rooms do that. So this is what we are offering right now. This is really some pretty good deals if you're interested. This is the alert service right here. The alert service is $4.98 for a quarter, $14.96 for annually. Lifetime, if you just want to sign up and be on there forever, $24.96. But pretty nice deal, and you saw the profitability and the win rates we've got in the room in the alert service. It's really well worth it. You also get a month in my room. You also get, we have a Discord chat room with 2 other professional traders who will answer questions. You can get on there and talk live. They post charts of high probability trades with annotation on it, and they go over all of the sectors each day of which ones are leading the market, which ones are trailing. And then I have all these videos, about 28 videos, and all the compass indicators, how to use them, the high probability trade setups, the funnel, what I call the funnel. Then I have a video on what's called Top Gun, which shows you once you find some really high probability trades, how do I find the best setups technically? I go through the technical analysis of those particular trades. So that's for the alert service. The room itself, the options live trading room, is $11.98 for a year. Really a good price considering we made $60,000 last year, and monthly at $148 if you want to do it for a month. Month isn't really an awful long time. I'm not sure you'll get a complete flavor for it, but it's a good way to try it. And again, obviously you get the live trading room access. You obviously get the Discord, instant messaging, where all the trades that are posted in the room and the Guardian alerts are also posted in the Discord room. And you get the videos that we talked about, Wyse way to trade options. And then if you want to get the compass system itself, the compass options trading room, which is a software that goes on Thinkorswim or Ninja, the one that'll look exactly like mine. You can get it for $12.49 for a year, $5.98 for a quarter. It's gonna look exactly like the ones I just showed you on the screen with Thinkorswim. And you get my workspace, so it's gonna have all the indicators on there that I have. You also get scanners. I have multiple scanners that I didn't even show today in the Thinkorswim platform that I come off of the compass system. And you get a month in the live trading room. You get the Discord, of course, and the video. So this is the actual compass system that runs on Thinkorswim. It also runs on Ninja. If you want to trade futures and you have Ninja, you can put it on Ninja. It runs on both those. Again, the right line technical folks will put this on the machine for you. And when I had to put on, I didn't want to mess with that. They logged into my machine, they loaded up the compass system on my machine. 5 minutes later, it's boom, it's done and ready to go. So they put it on the machine, or they'll put it on Ninja if you have a Ninja platform to trade it on there. It's called the Money Flow Tracker on Ninja, but for compass, it's called the compass system runs on the Thinkorswim platform, which is what I use. All right, so those are the offers that we have today. Again, the options alert service, $4.98 or $14.96. Lifetime, $24.96. And then the trading room and the compass system. Those are those 3 things. I think in the chat box, we've got the links. Yep, they have the links in the chat box to the all of those offers that I just covered right there. Do I trade futures, Micah? I don't. I used to trade futures. I mean, you can actually trade futures on Thinkorswim, but you can use the compass system to trade futures. And most people that trade futures that I know of use Ninja, so they run it on the Ninja platform. But I mean, obviously you can trade futures. I particularly trade the SPY, the Qs, and the IWM, but you can trade futures just as easily. Okay. So that kind of wraps it up. I think a little bit over my time, but I think I was the last presenter, so I didn't want to step on anybody's toes. But again, I appreciate everybody coming to the webinar today. I hope the information on the Heiken and Ashi candles will help you a lot. You'll get a video recap of this, replay of this, so you can see go over in detail the Heiken and Ashi that we talked about. I had to kind of run through it fairly quickly, But if you haven't heard about Heiken Ashi candles, I think this will give you a little bit of a leg up on that. You're welcome. Carol, thank you very much. Appreciate it. Appreciate everybody coming to the webinar. Appreciate that. I know it's been a long day. If you listen to the Traders Corner, I appreciate Traders Corner allowing me to come in here and make a presentation on the Heiken Ashi candles. I think that can be very helpful to your trades. So thanks very much, everybody. Have a great evening. Good luck in the market. I hope to see some folks in the trade room in the alert service here in the next couple of days. And we'll see everybody, or if you're in the room, I'll see everybody tomorrow morning about 9 o'clock. Have a good evening.
Thank you, David. That was, of course, amazing. Thank you. That was some great information. Those Heiken Ashi bars, along with the information shared, are extremely powerful. Ladies and gentlemen, if you want to receive trader alerts on trades that has a track record of a 90% chance of being profitable, whether the market goes up, down, or sideways, it's important to know that professional options trader David Wyse of Right Line Trading has one of the hottest alert services out there. So you may want to give it a try. We've placed David's special offer link in the chat box. David, thanks again, and congratulations on putting up those numbers that you've been achieving. And thanks for joining us here on Traders Corner. Well, ladies and gentlemen, that concludes today's presentation on Traders Corner. We will be posting the recording to our YouTube channel, and that is our link. I just put that in the chat. So feel free to subscribe to our channel there, and you'll be alerted if any new videos popped up. And yeah, thanks so much. Thanks for joining us, traders. We hope you gained some valuable information and that you'll be able to put this to use this week. Have a blessed evening and a great week, month, and year of trading. So long, traders. We really appreciate you.